10% on the call. The CEO, Hoktan, saying Broadcom was won 2 major new hyperscaler customers. Those are the biggest operators of data centers, and that stock is flying this morning up about close to 15%.
60% on what base, I wonder, though? You know what I mean?
Well, sure.
Got to be small.
Sure, but if you think that you can be growing at that kind of rate, it changes the dynamic completely.
Right.
Meantime, we are watching shares of Costco. The Warehouse Club reported earnings of $4.04. That's $4.04 per share. It beat estimates of $3.79. Revenue also beating expectations as well. And on that call, the Costco's CFO saying the customers have remained, well, he says is selective with purchases, but have shown they are willing to spend. Sales of jewelry, luggage, furniture, all especially strong during the quarter. That stock up just marginally. So
I think their transactions were flat, the overall number of transactions, but up either on inflation or people buying more stuff.
The Santa Claus rally is a specific time, as Antonio always points out. It's it's after Christmas. But we think of December as a very seasonally strong period. I don't know why. It just seems like a time when stocks go up. And if you were going to begin a little bit of a pullback or a correction, you might start it like this, remember what we're saying is, we're right near highs. It's been down 4 days in a row, and it's a crappy week, and everything's down. But that's how you would do it. You do it so that no one really thinks it's a beginning. You don't think it's the beginning of anything. I don't think it's the beginning of anything.
No.
Maybe it is the beginning of something.
Maybe it sneaks up on us, but I
think it's sneaking up on us.
I think of like big declines usually come with some scary news that shocks the market and falls.
With alien drones, all over New Jersey.
I will say I am totally bothered by the drone story and what we keep hearing from officials. The governor saying,
because we
don't know what it is, but don't worry about it.
We think they're competent, and if it was something to worry about, we think they'd tell us. But they didn't with the spy balloon.
Yeah.
They made it all the way across before.
I'm very unsatisfied with every answer that
they say. We know it's not bad, but we don't know what it is.
We don't know what it is, but don't worry about it. It's fine.
So weird.
Which it can't be one and the same. Either these are our military drones, or there's a big problem here.
That's hopefully what it is. That they don't want to tell us that it's top secret stuff that we're doing.
Right.
Hopefully.
But if it's not that, you guys are.
But they're saying it's not dangerous. But then one of the politicians said he talked to someone who had a helicopter that was looking down at one of these things the size of a car and decided, I'm going to land because I don't feel safe with this thing buzzing. So how can you say it unequivocally that it's safe?
Unless it's ours.
Right. But why can't you follow one and see where it goes?
Because when they have when people have sent their own drones up to check it out, it immediately drains their batteries and their drones drop, which happens around areas like Area 51.
These are industrial drones relative to the kind of drones that you can.
These are like military
you
style.
You need military style drones.
You could follow one.
No, it doesn't. Everyone that does it drains their battery instantaneously.
You need military.
If there are, send up one like it to follow where it goes.
Just tell us what's actually going on.
They
if
won't.
it's ours, tell us. If it's not,
It's weird. It's bad.
And then all of them saying we don't know what it is, but it doesn't look like it's dangerous.
How about the guy yesterday, Kirby, saying that, really people aren't really seeing what they think they're seeing.
Yeah.
Most of these are just it's total BS.
Yeah.
Most of these are just small planes.
They're not
people
small
are
planes.
mistaken, and people know. And so maybe he's in on it and just lying. He's done a lot. He's really good at that. He's
all
done
we
a
know
lot.
is they're not telling us the truth.
Right. Okay. Let's talk about this. We're going to have Arthur Brooks on a little bit later. There's some weird unity going on in the country right now. I don't know how long it lasts, but suddenly Jeff Bezos planning to visit President-elect Trump next week at Mar-a-Lago, and ahead of that, Wall Street Journal reports that Amazon, like Meta, is planning a $1 million donation to Trump's inaugural fund. The Journal said Bezos and the company made the decision earlier this week and have already communicated it to Trump's team. Amazon plans to stream the inaugurations through its Prime Video business. Earlier this week, Meta CEO Mark Zuckerberg directed his company to make a $1 million donation to that fund. I think it's the calm before the storm with all this. I think we'll be back in political on January 20th and the deportations and everything, all this hard work that is very controversial. Then we're going to be back.
Look, you're going to have, I'm sure, arguments on both sides of the political aisle. My guess is
it's not controversial that they snuck over here, ran gangs and rapists and murderers, but it's controversial to sip them back. Come on, guys.
stuff happening, like U.S. senators saying, well,
Ship them all
you know,
back.
people reach a point, you know, what do you expect? Things like this are to be expected. You can only push people so far with healthcare, and then they deserve to be killed.
And AOC and some of these comments
That's
that have been
implying.
made. I know.
When you
I know.
say, when you say you can only put, it's staggering to me. Staggering.
Started with Tim Wu.
Sorry, and others.
Yeah.
Elizabeth Warren should know better. Should she not?
I think everybody should know. That's why I
I know
the whole
you
conversation
did.
makes
Well,
me
yours is that you're worried it's gonna, you know, that it's going to spiral and
political
start
leaders should
spreading.
think
Which
about that, too.
that's insane. If that can't happen, that's insane.
It can
Don't you
happen.
think? But did you see all the posters up around here?
Well, hello.
And one of them has an X in it. We already got him. And then there's all these other
Yes,
people.
but that's why having all of these conversations. This is not, again. It's not to say we should not be having important
Exactly.
conversations about healthcare and healthcare insurance and the whole.
well,
But to do it as inspired by this,
Okay, but we
is
should
very
have-
dangerous.
but we
because
should-
it
I
just
think we should
creates
point out
an
people-
incentive system for people to create
Right,
more
but
violence.
I think we should condemn what we're seeing
Oh, 100%.
and the reaction to it. That's what I'm saying.
Condemn it
Where these
left
people
and right and center.
Yeah.
Okay.
All right, President-elect Trump's economic advisors are considering doubling the state and local tax deduction known as SALT. That's according to comments from economist Stephen Moore, who serves on Trump's economic advisory transition team. Raising that SALT cap would deliver big tax savings to many residents of high-tax states like New York, New Jersey, and California. Moore told Bloomberg that Trump's advisors are opposed to making the deduction unlimited because that would amount to the biggest tax cut for millionaires and billionaires ever. But he said doubling that deduction to $20,000 would solve the problem for middle-class families in blue states.
Meantime, Republican lawmakers have now elected Congressman French Hill to chair the House Financial Services Committee in the new Congress. He was considered an underdog in all of this. In the race against Congressman Andy Barr of Kentucky, Hill has been a leading voice in Washington on cryptocurrencies, so another ally to that space, and we're going to talk to him. He'll be with us this morning live at 7:10 a.m. We'll get a rundown of his priorities in this new role. When we come back, a lot more on Squawk. We're going to get you ready for the final trading day of the week and look ahead to next week's Fed meeting. Plus, we're going to check out the big jump yesterday for ServiceTitan. The CEO's sitting at this table. That stock on the back of the IPO rising 42% right here at the NASDAQ, the provider of cloud software for contractors, raising about $625 million. It's priced at $71 and opened and closed at exactly $101 per share. We'll come right back.
Shares of RH are sharply higher. The company, formerly known as Restoration Hardware, said demand for its home furnishings remained high despite a difficult housing market. The company raised its outlook for the current quarter and for the full year. And the CEO said that RH will launch a new brand extension next fall with details to come. The company also addressed the threat of tariffs, saying it does not expect a hit to its profit margins from potential tariff increases. It said it's been proactively moving its sourcing away from China over the past several years, and that it's also transitioning out of products that are made in Mexico. That stock is up by about 18% this morning.
Meantime, take a look at futures right now. This morning we have some green on the screen nicely, about 101 points higher in the Dow. The NASDAQ up about 150 points. And the S&P 500 up about 22 points. For more on the markets as investors gear up for the Fed meeting next week, I want to bring in Hank Smith. He's the head of investment strategy at Haverford Trust. Good morning to you.
Good morning, Andrew, and happy holidays.
Happy holidays. Are we in a Christmas rally? We were talking, what is it? We were calling it a Christmas rally, a Santa Claus rally, but it doesn't really happen that way until later, technically?
Supposedly, strictly speaking, it's after Christmas. I
Between
think.
Christmas and New Year's.
Between Christmas.
that
But
really?
you know, seasonally, isn't December? Isn't
What do you think?
Seasonally is one of the best months of the year.
Is the Fed gonna help that or hurt that ahead? Is the Grinch coming or is it gonna be great?
Well, unless you get an article from the Wall Street Journal this weekend indicating change of plans, I think you're going to get a quarter-point cut.
And you don't believe any of the numbers that we've seen, which have been a little bit hotter on the inflation side, are going to change his view?
No, I think it'll change it in 2025. And our expectation, it's been this way for quite a while, is you're not going to see 5, 6 quarter-point rate cuts. You're going to see 2 or 3. And it's going to go very slow because really the economy is in good shape. I don't think the Fed needs to worry about that. They need to worry about perhaps an uptick in inflation and the kind of the stickiness of where we are right now. But the good news is the stock market really doesn't care about a 2% target for inflation. Only the Fed's reputation is at risk.
Okay.
The stock market, I think, is
But
perfectly fine.
given how much this market has run already, the question is, what does 25 really portend in your mind?
Well, I think it'd be fanciful to think that we're going to get another 20% plus year in 25. But look, S&P 500 earnings growth estimates are around 14-15%. You could easily have a 10-12% return in the market with no PE expansion, and that is really our expectation.
And so what are you doing about it in terms of just industry by industry?
Well, look, it's been a very, very challenging market up until the beginning of the summer because of the concentration in the Mag 7, or what we refer to as the top 10 stocks of the S&P 500. You did start seeing a broadening out in the beginning of the summer. That has kind of stalled in the last couple of weeks as the Mag 7 has taken back over. But we expect that broadening out to continue in 25 for a couple of reasons. Fundamentally, the other 490 companies are seeing an acceleration in EPS growth. The so-called top 10 or Mag 7 are actually going to see a little deceleration in earnings growth. So there's a fundamental reason. Plus, the laws of math dictate that.
But does that mean like you'd like the Russell, or you'd like small caps, or you think that, I mean, where do you go?
Well, we're primarily a large cap dividend paying.
That's what I always thought.
Dividend paying manager. And look, there are plenty of opportunities for dividends out there, but it's mostly in the out of favor, more value oriented.
So give us some names.
And in the healthcare sector.
Can you give us some names?
Sure. You go down the healthcare sector, J&J, Merck, all have wonderful yields. You have earnings growth, modest, dividend growth, and very attractive valuations. Yes, I know the charts look horrible.
Right. Well, the charts are tough. Look at that. Look at that chart.
Yeah, it's not a fun chart. But this is the most out of favor sector, hated. In fact, it is at one of its lowest points of weighting in the S&P 500 in a
And you think
memory.
it gets better? Because one of the arguments against it, even right this moment, would be that depending on what you think happens with the government over the next 4 years, that maybe they actually do take a look at healthcare.
Yeah, the cloud of government regulation has been on this industry for 2 decades now, going way back to Hillary Care, then Obamacare, and now with all of the attention after the death of the United Healthcare executive, all this negative attention. But let's not forget one thing. The most powerful secular trend that cannot change,
Right.
the aging of the baby boom generation, followed by the next wave,
Yep.
is so beneficial to this industry.
Right. Hank, I want to thank you. I want to wish you a happy holidays, and we'll see whether we get a Santa Claus rally, but it sounds like we got to wait for that. I like to think of it as this could be the Santa Claus rally. It'd be good.
All month, yeah.
And a happy and prosperous new year.
Me too. Thank you. Thank you.
Thank you. When we come back, wine is a popular gift for the holidays. If you're looking for some suggested gift ideas, you may want to stay tuned. The executive editor of Food and Wine magazine will join us next. He's also going to talk about how it's been a little bit of an off year for wine. He'll explain why. And later this hour, Harvard's Arthur Brooks will join us to address the public anger at the healthcare industry and executives in America. Squawk Box will be right back.
Diseases.
All right, welcome back, everybody. everybody. It's been a rough year for the wine business, with sales through August down by about 8%. Joining us right now with some of the bright spots ahead of the holiday, though, is Ray Isle. He is food and wine executive wine editor. He's also the author of The World in a Wine Glass. And Ray, it's really great to see you.
It's great to be back. Thanks
This is
for having
something we do every year.
Yeah.
You always bring us lots of fun things to try, and we're going to try some of these in just a moment. But before we do, I was a little surprised to hear that wine sales were actually down so significantly. What's going
wine
on?
sales are down. I mean, it's interesting because volume is down less than sales are down. So people are both not buying as much and trading down a little bit. And it's true for spirits as well. It's true for beer. You know, the only upsides are kind of, you've got ready to drink RTD cocktails, which are up, and you've got Prosecco and bubbles generally are up. People love bubbles. But it's been a tough year, you know, and so it's a whole.
Are we just drinking less as a nation?
We're drinking a little less as a nation. There's a very big kind of neo-prohibitionist movement.
Gen Z especially.
Gen Z especially, and your sober Octobers and dry Januaries, which we haven't gotten to yet. And
Sober
but also,
October.
you know, also I think there's a little bit of there was the pandemic. Everybody was drinking like crazy. We got out of the pandemic. Everybody was like, "Yay, we're out of the pandemic. Let's keep drinking." And then 2023 hit, and people were like, "Wow, I'm a little hungover from all that drinking." And additionally, there was a lot of overstock in the supply chain.
Okay. Are sales back to levels of like 2019?
That's what's
pre-pandemic?
happening effectively. Is it looks, the downside looks bad, but at the same time, if you look back to 2019, it's not that far off.
So, yeah.
You know, so we're kind of normalizing. in
We
a
just
sense.
overindulged for
Wine
too
is
long.
wine is always cyclical. It's 8,000 years of cyclical.
Really? You watch these cycles up and down?
Yeah, I mean, I've seen it since I've been in the business, and it's true. It's kind of ongoing true for it, you know. And it's, you know, it's fascinating. It's tough if you're in the business and it goes down, but it usually comes back up. There's readjustment to the point sometimes where it's like you'll have vine pull plans by the EU where they'll just incentivize farmers to pull vines if there's massive oversupply.
Really?
But I don't think this is going to be that extreme. I'm optimistic, and there's some great wines coming up too.
Well, let's talk about some of them. You actually brought one that's a non-alcoholic one.
Yeah, well, I figured if we're going to have to drink wine at this early in the morning, we might as well try a non-alcoholic wine. It's a little safer. So this is the 1, 2, 3 Riesling from Joseph Leis in Germany. Ein, zwei, drei is a clever name. And you know,
Cheers.
Cheers. Cheers, everybody.
Cheers, everybody. Here we
been
go
a year.
on a Friday morning.
Friday mornings.
Yes.
0 alcohol. Because I'm a bad person, I actually
pretty good,
blind
actually.
tasted my mother on this at Thanksgiving because she's a Chardonnay to the brim.
No alcohol in here?
0 alcohol. It's actually
That is
quite
impressive.
She
Yeah.
likes club pours.
She likes the club pour. She's a club
I know
pour
people
Chardonnay.
that like those.
And I poured it for her, and she's like, I didn't tell her it was alcohol free, and she's like, this is good. I'll have more
I
of
like
this,"
it.
you know.
I do too.
And this is what non-alcoholic wine has been tough because a lot of them have been really terrible, and they finally kind of cracked the code a little bit. And this is one of the first ones that like tastes like
Like
wine.
that beer.
It does.
That's really
Yeah,
good.
like Athletic Brewing.
Athletic Brew.
Yeah.
Yes.
Yeah, which is we wrote about a few years
like
back.
this a
in
lot.
Food and Wine. Yeah, so
Actually, really good.
pretty cool stuff.
How many
that-
calories are in it?
Well, a lot less because the alcohol is the primary thing with calories in wine, and so you pull out the alcohol. I think it's like 50 calories a glass.
That's
Wow.
delicious.
something
I
like
would
that.
drink that.
Okay,
So-
winner so
Yeah,
far.
and then we're not going to taste it because too many wines.
By the
but
way, this Riesling's only 20
Mianetto,
bucks.
this is $20,
Yeah.
like a little less. And then Mianetto Prosecco, I brought that because I wanted to say that it is one of the bright spots, Prosecco, and people are just drinking it and it's up. And that's a nice bottle of Cartese, which is Prosecco has Prosecco and then Prosecco Superiore and then Cartese, which is this tiny little region. And if you look for that, you start to get something that is really champagne level quality from half the price, which is pretty cool.
That is
And then I brought a couple of really expensive wines.
the,
Because
Wow.
the red.
yeah, the red. So the red is Cabernet Napa Valley, and 2021, which is this vintage, which is on the shelves right now, is a spectacular vintage in Napa Valley. It is super high quality. The wines are great. This is from Brion. It's from the Sleeping Lady Vineyard in Napa Valley, and it's $250 a bottle. So if you're out to splurge and you want to celebrate, you want to like propose on Christmas Eve,
This is it.
it's your kind of thing. And it's a brilliant bottle of red wine. And
Oh, that's very smooth. I don't even really drink red wine, but that's very
yeah,
smooth.
and then last, champagne. You got to have champagne for the holidays. I have an online story coming up next week about top level champagnes for gifting. This is the Bollinger 2015 Grand Année, also $250, but Bali is one of the great champagne houses. It's the James Bond favorite, you know, and this is their top wine, and I thought it would be a good, you know, end of your toast to you guys.
Yeah,
and
cheers.
Cheers.
Yeah,
Cheers.
absolutely.
Cheers,
Cheers.
This is 250.
This is 250. So you've got to decide
It
like
tastes
do you-
like 250.
It
Hold
just-
on one
it-
second.
Can't tell with champagne.
Yeah, I'm not a big champagne drinker, but
Mm.
I think I like the red wine and the white wine better.
Yeah, that's fair. Well, you know, it's your choice. Do high-end red champagne.
This non-alcoholic wine,
That's the
actually
winner
really
of the
good.
whole thing for
It's-
20 bucks.
For 20, it kind of blew me away the first time I tried it because I've tried so many bad non-alcoholic wines, and I tasted this and I was like, they got it. They figured it out finally. So pretty cool.
Ray, we always love seeing you, first of all, and getting to celebrate the end of the year, but also all these choices that you bring us. We really appreciate it.
I'm
Pleasure.
glad you enjoyed it.
How long
so
have we
much.
been doing this? 15
We've
years?
been doing this a long time, 15 years, I
I
think.
thought you said 8,000 years.
8,000. Well, I've been in the wine business 8,000 years, and you know, I will say wine ages you well.
Keeps us all preserved.
If you put orange juice in this, like alarms go off. I mean, you can't. You're not.
Yeah, basically a red light starts flashing
Yeah,
in champagne, and they send guys in black with
Yeah,
masks to
take
take you
away
out.
from
You know,
Thank you, Ray.
so great to be here. Thanks
Happy
very much.
holidays.
Yep.
Coming up after a tough year, Starbucks baristas will reportedly receive even smaller raises now. Details next. And as we head to break, here's a look at yesterday's S&P 500 winners and losers.
Yeah, this is
TV.
Good
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Checking the futures this morning, we've got some green, especially in the NASDAQ, up 157 points this morning. Pay increases, though, for many Starbucks baristas will shrink this year. A Bloomberg report says the raises will generally range from 2 to 3%, depending on seniority, and that's down from about 3 to 5% increases a year ago. The smaller pay reflects a rough year that the company's experienced, marked by lower traffic and falling sales. New CEO Brian Niccol has pledged to improve the worker experience as part of his plan to revive revenue.
Meantime, the FTC now accusing the largest U.S. distributor of wine and spirits of illegal price discrimination. They say favored large chains over mom and pops in a new lawsuit against Southern Glazer Wine and Spirits. The FTC saying the distributor deprived smaller businesses of access to discounts and rebates, harming their ability to compete with larger chains like Costco, Kroger, and Total Wine and more. Now, Southern Glazer is the 10th largest privately held company in the United States. It generates, I didn't even know this, about $26 billion, guys, in revenue from sales to retail customers in 2023. FTC Chair Lena Khan and 2 other commissioners voted in favor of bringing the lawsuit under the Robinson-Patman Act. It's the first FTC claim under that act in nearly 25 years, and that 1936 law was designed to prevent price discrimination. Now, 2 commissioners, we should mention, voted against the suit, among them Andrew Ferguson, who is President-elect Trump's pick to replace Lena Khan as FTC chair in January. Now, in a dissenting statement, he said Southern appears likely to succeed on a cost justification defense and said he had not seen sufficient evidence that would show more than a very slight harm to competition. Of course, the big issue in this case, as in most cases like this, is if you're a big retail outlet like a Walmart or a Costco, you're able to get much greater discounts from wholesalers. Like, that's the way this goes. So it's going to be very interesting to see how this case moves forward.
In the meantime, Elon Musk posting a letter on X from his longtime lawyer saying that the SEC has pressured Musk to agree to a settlement or face charges on numerous counts. That letter, addressed to outgoing SEC Chair Gary Gensler, did not explain what charges the SEC was focused on, but noted that the SEC reopened an investigation into Neuralink this week. The agency's been investigating whether Musk committed securities fraud in 2022 as he sold shares in Tesla and shored up a stake in Twitter ahead of his purchase of the company. The SEC has charged Cantor Fitzgerald, meantime, with violating laws related to regulatory disclosures from so-called blank check companies before they raise money from the public. At issue, the SEC found that Cantor caused 2 SPAC companies to falsely deny in regulatory filings that they had contact or discussions with potential merger targets before the SPAC's initial public offerings. Cantor agreed to settle the charges by paying a $6.75 million civil penalty and agreeing not to violate the securities laws at issues. The firm did not admit or deny those charges. A company spokesperson said no investor was ever harmed by the alleged issues described in that order. Cantor CEO Howard Lutnick is the co-chair of President-elect Trump's transition team and his pick to be the next Commerce Secretary. The Trump transition team did not immediately reply to a request for comment on that case.
All right, coming up, Harvard's Arthur Brooks going to weigh in on many issues, including the backlash against healthcare companies and the anger in America following the murder of a United Health executive last week. Squawk Box will be right back. The murder of United Healthcare executive Brian Thompson has highlighted the public anger directed at the healthcare industry in the U.S. Joining us now, Harvard University's Arthur Brooks, American Enterprise Institute President Emeritus. He's a columnist for The Atlantic, a podcast host, and an author of a lot of books, including Build the Life You Want. Thanks for joining us. Good to see you, Arthur. I mean, I can go back. We've all had experiences, I think, with insurance companies, and not just health insurance. One of the things that I have thought insurance companies do, when you finally use them for something you've been paying for years, sometimes they cancel you. You finally put in a claim, and like they can't. So we know that it's a tough business to some extent. We understand it, but when it comes to your health, that ratchets up the anger and the what happens. But normally, something like this isn't the outcome. And my question, Arthur, is if it was just a person that apparently had some serious pain and maybe there are drugs involved, and I don't, and obviously an unbalanced individual, it's the response to it that is so I don't know, discouraging, disappointing, infuriating. And I'm just wondering, is that just another example of social media, or do we suck now as a society?
Yeah, no, I appreciate that. And by the way, it was really heartening to see all of you drinking wine at 6:30 in the morning.
Yeah, I did not. And Becky was guzzling wine that wasn't wine.
It was the non-alcoholics were really good.
So they said, but she's been acting really crazy since.
It didn't start with that.
Well, the schedules you keep, it's already 3 o'clock in the afternoon for all of you.
That's right.
Right, exactly.
Anyway, in answer to your question, look, this is the internetization, this is the social mediaization of all of the things that we have. Americans are perfectly capable of keeping two conflicting ideas in their minds. Number one, healthcare is a disaster for most people in the experience that they have of it in this country. We don't have a free market system. We don't have price transparency. We have all kinds of crazy regulations, and the result is it's an extremely expensive and frustrating experience that in the most advanced country in the world, that we have a healthcare system that's inadequate to the needs of most Americans. We know that. The second thing is that an innocent guy was gunned down in broad daylight in the biggest city in America. That's a different idea. It's not morally nuanced. A man was assassinated in broad daylight in New York City, and he was completely innocent. And we can most Americans can hold these things apart from each other. The problem is that that social media wants to conflate these things, because the people on social media, the pathology that is social media, wants to say that this is, as Elizabeth Warren said, it's a warning. It's not a warning, it's a murder is what it actually is. And the fact that I am frustrated by my healthcare insurance potentially has nothing to do with the fact that this innocent guy got killed.
And that's just one of the things that's happened recently, Arthur. After the election, and President-elect Trump is not president yet, but there is, we're in kind of, other than this mess, we're in kind of a sweet spot in terms of the possibility maybe for the country coming together, but I think it's ephemeral and I think it's transitory. And I think that after January 20th and some of the tough things that are going to be happening after that, I think we're going to just go right back to the bickering. And I wish we wouldn't, but
Yeah.
It seems like we've passed the Rubicon with large parts of the country.
Yeah, well, the problem here is that we have too many market incentives to keep driving people apart in this country. And so there's too much of the political establishment, the media establishment, especially social media, is monetized to actually have us fighting with each other constantly. And so finding any wedge,
So that's
like the case at hand, and that's the problem. But you know what? What's that?
So it is social media. I just wonder whether society has changed for the worse, or whether you don't think so? Do you think it's social media?
No, I don't think so. And the reason is because when you talk to people and they're not glued to their devices, which is most people living their ordinary lives, they don't think this way. Recall that it's a tiny percentage of the population that's weighing in on these things and making outrageous statements on social media. Now, it can affect the broader discourse because, once again, what gets the eyeballs is the outrageous stuff. But what's happening around the kitchen table and in most people's homes is not this type of thing. thing, and people can actually maintain the distinction between healthcare frustrations and the murder of an innocent guy. And that's the really important thing to keep in mind. All of us need to work hard, however, who have public positions, all of us. We have a public opportunity to say that's wrong, this is ridiculous, and to use all the weight that we've got, that we're blessed to have, to try to bring people together and to make these types of distinctions and to not fall prey to the artificial outrage that's going on to get clicks and eyeballs and followers and, quite frankly, dollars. We're being productized in this country by outrage, and this is a perfect example.
People should know better. I mean, Jimmy Kimmel should not be talking about bringing cookies, baking some cookies for the guy in prison. People should, grousing on social media and, stupid anonymous memes, the horrific things that happen on social media. It's still nowhere, it's qualitatively different and a quantum leap to gun someone down in cold blood.
Yeah, totally. And, the interesting thing about this, it's important to keep in mind that in reality, social media doesn't exist. When you turn it sideways, you can't see it. When you turn it off, it goes away. And this is something that the human brain is not accustomed to perceive. We have a tendency to see something in front of us and assume it's as real as an actual human being in bodily form. It's just not the case.
Arthur, so let me ask you this. I've been on preaching, actually, Joe and Becky, I think we actually all agree very much that this sort of inspired by conversation is deeply troubling. And that's not to say there shouldn't be a conversation about health insurance and that whole world.
Yeah, of course.
It's just in this context, it seems like it's a terrible incentive system, if you will. Having said that, and we can decide whether social media is fake or not, a lot of the response that I've gotten over the past week to sort of this kind of message is, Andrew, you're missing the boat. You don't see it, which is to say that actually, and I've heard this over and over, violence and protest and all of this, and they put the violence and the protest together, they say is what creates change. And so what I deeply worry about is that actually 2, 3, 4 years from now, we may actually look back at this moment, and if there is change in the healthcare insurance industry, people will point to this, and that will be a terrible lesson in some regard.
Yeah. And I suppose that's what Senator Warren meant when she said it's a warning. But I don't think that's actually what we're going to take from this. I think this is going to be, but this is a signal not of something to come about how much we hate the health insurance or the health care industry in the United States. I think it's an example of the radicalism that has crept into the fringes of American politics and actually how much we hate it. I think we'll probably look back to this and say an assassination of a law-abiding citizen who ran a legal company, that was an example of how bad things actually got. I think this can be the beginning of something better, not the beginning of something that's worse to come, but it's in our hands. We have to interpret it in the right way, and we have to be completely morally clear about what this is.
We're not getting any help from college presidents because there's not much of a leap from marching with a Palestinian gear on your head and saying death to the Jews or from river to the sea. There's not much of a difference or a leap from that to actually hurting someone.
Well, what I'm hoping, Joe, is this. There's a lot of radicalism. There's a lot of irresponsibility on the internet, on college campuses. Look wherever you want. But that's not the mainstream of American politics. That's not the mainstream of American public opinion. And
when there's violence, Arthur, it's a problem. There are thousands of people. There were. Maybe, it's quieted down.
But then you see a murder. This is the tipping point. The violence is always the tipping point. And what we need to rebel against is activist radicalism. That's what we need to rebel against, because activism is destroying this country. Radicalism is what's really hurting this country. And I think that things like this, which defy the morality of the vast majority of Americans, can actually start to instigate change. So let's use this moment to reflect on actually what's happening and how we're being twisted, how we're being productized and manipulated by social media. Yeah, go ahead.
Late night comics or people that that for some reason or think that it's okay to sort of normalize what happened are really part of, because it lowers the bar for evidence. It's totally unacceptable. It's totally unacceptable.
They're absolutely part of the problem, because that's a cheap laugh. That's an applause line. that you can actually get from your studio audience, whatever it happens to be. But remember, we have the most responsibility such that we can actually guide the culture to something better. Let this be the tipping point toward what we actually want, which is more harmony, more unity, less activism in a country that actually doesn't want it, wants to get on with the business of raising our families and having a great country.
So you think Trump can unite this country?
I'm hoping so. I sure am hoping so. By the way, I don't think it's just Trump. I hope it's people all across the country that say we have a lot of differences, but the enemy is not within. We have a lot of enemies in the world, but they're not our fellow Americans.
I just wish he could break even. I don't even think he can break even. I think it'll stay as bad as it is. And no hope for uniting, but I just hope it doesn't get worse after January 20th.
I sure hope so too, and I actually think that things can get better. Typically they have, by the way. When things have gotten to looks like the worst, never count us out. America's always got a better future ahead. That's why everybody's, by the way, Joe, everybody still wants to come to this country because the best is always in our future.
That's one of our problems. Too many people want to come here. And we're going to be dealing with that on January 20th. Anyway, thanks, Arthur.
Thanks, Jeff. Thanks, everybody.
Okay. Smart Box will be right back.
Welcome back to Squawk Alphabet. YouTube TV raising the price of its streaming plan by $10 to $82.99 per month. It's a 14% hike for new subscribers. The change takes effect immediately. It kicks in for existing subscribers on January 13th. I happen to be one of them. Company cited rising content costs for the price of the change. The hike aligns with the cost of YouTube TV with the cost of rival Hulu's most popular TV package. But let me just say, and I'm a homer, it's 100% worth it. It's 100% worth it, folks.
Expensive. You can
And
get
it's
a whole
awesome.
bundle with that.
It's awesome. Coming up, shares of Tesla up nearly 70% since Donald Trump was elected president. We're going to talk about that move with an analyst. You don't want to miss it right after this.
NBC.
Welcome back to Squawk. It's just before 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. It is exactly 6:59. If you're keeping score at home. Among today's top stories, Amazon founder Jeff Bezos planning to visit President-elect Trump next week at Mar-a-Lago. Ahead of that visit, the Wall Street Journal now reporting that Amazon planning a $1 million donation to Trump's inaugural fund, and that matches a commitment from Meta's Mark Zuckerberg this week, and imagine we're going to see more of this over the next several weeks. Meantime, a warehouse club Costco reported earnings of $4.04 per share, beat estimates of $3.79. Revenue also beat expectations, and on the call, Costco CFO saying customers have remained selective with purchases, but have shown they are willing to spend. Some of the areas they're willing to spend on: jewelry, luggage, and furniture, apparently especially strong in the quarter, but basically the whole thing is kind of flat, as we were talking about earlier. Meantime, check out shares of Service Titan. This after its 42% pop yesterday after its IPO. It was the first major VC-backed IPO since April. Shares closed at exactly $101 per share, giving it a market cap of just under $9 billion. It's a service app for contractors.
Now to some new survey data about how Americans are feeling about some of the policies from President-elect Trump's campaign. Steve Leisman joins us right now. He's got the results of the latest All-America Economic Survey. Hey, Steve.
Good morning, Becky. Americans say they're ready to support President-elect Trump in his second term, and majorities are giving a green light to some of his controversial promises on the campaign trail. But on some parts of the Trump agenda, well, the public seems a little less sure. 54% say they are comfortable or prepared to support President Trump, down 2 points from 2016, while 41% say they are not, up 5 points. So a bit less support on net from the beginning, but still a majority at the outset. 60% say sending the military to the border to stop drug and human trafficking should be a priority for the administration. For total support, folks, just add the yellow and the blue line together. I'm talking right now about what people think should be a priority here. 59% want cutting individual taxes, right at the top of the agenda. 50% support cutting government spending as a priority, along with 41% for increased oil drilling. Now you get somewhat less support on this other set of issues here. Cutting business taxes, still a majority support it, but only 35% say it should be a priority. Reducing business regulations, 33% say a priority. And raising tariffs, there you get to kind of close to not having a majority anymore. Tariffs not polling well at the outset, I would say here, compared to, for example, the other issues. And pardoning January 6th people who are convicted, 26% say it's a priority. And again, that one goes below 50% on the majority. In fact, you don't have a majority on that at all. Okay, the most polarizing issues. This is a really fascinating chart. Hope you all understand it. Basically, the blue folks are the Democrats on the left and what they think about it. The red folks are the Republicans on the right. The yellow dot, that's the independents and on the middle. This is the biggest gap between Democrats and Republicans. Increasing deportations. 67% spread between Dems and the GOP. Sending the military to the border, 59% spread. Drilling for oil, another big spread. Cutting government spending. So, you know, look at where you are on that. Becky, Andrew, are you a yellow dot? Are you a blue dot or a red dot on each of these individual issues?
I'm not sure I understand this. It's taking me a little time to.
This is the support of either Democrats, Republicans, or independents.
Okay, so
on
less
the
than
specific issue.
less than 15% of Democrats support that, but close to 50% of independents and
Right.
close to
Right.
80% of Republicans
exactly.
support it.
You got it.
I mean, the increasing deportations looks like the most polarizing, but it also looks like it has the most support if you go back to your first chart, which you didn't mention that one. I think it was just something you overlooked. There was something that was received 45% people saying it was a priority, increasing deportations. If we go back to that very first chart.
I don't know if they can go back to it on the wall.
We
We'll come back to it in a second.
Yeah.
First of all, Americans overall are more upbeat about the economic outlook for the second Trump presidency than they were the first one. 51% say they expect their personal financial situation to improve, 10 points higher than when he was elected in 2016. 51% also say they expect the U.S. economy to improve, up 5 points from 2016. At the same time, the percentage thinking they're going to be worse off, that also went up. So it's a little more polarizing here. They know what they think about Donald Trump as he comes into office.
Well, they've had one term to check him out. They've had 8 years of knowing him in public office. So, and you also have a very polarized political situation at this point, where people are set in their views, but a majority of people looking to kind of support some of the big initiatives that he campaigned on.
It is. It's pretty interesting. The Democrat opposition to all of this is a little bit less than you would think.
Okay.
For example, now remember, we asked a very narrow question about the military.
They lost, so.
Well, no, but we said military to the border to stop human and drug trafficking. Mm-hmm. We didn't say military to go round up undocumented immigrants. That might have been a little more controversial. But I think it was only 50% of Democrats opposed that.
Yeah.
So it's pretty interesting. He's got to get Congress for a lot of this stuff. Talking about this morning, the bank deregulation stuff, that's Congress. So we'll see where Congress stands. Some of this stuff he needs Congress for, some he doesn't. Starts off, I would say, with pretty good support for the agenda that he campaigned on.
Yeah, I think so too. Steve, thank you.
Pleasure.
Meantime, take a look at shares of Tesla, because they are now trading near an all-time high. They're up nearly 70% since the November election. Makes Elon Musk not just the richest man in the world, but maybe on his way to becoming a trillionaire at some point. Dan Flax, Neuberger Berman, senior research analyst, is with us this morning. Dan, Does the move in your mind make sense? And if so, how do you explain it?
Good morning, Andrew. I think the market clearly there's an impact from Elon Musk's close relationship and growing relationship with Donald Trump. I think what the market will focus on, though, over the next year is really their ability to drive better unit sales in the core auto business, bring out a lower priced car. If you can bring out a lower priced automobile, that helps to drive demand in that segment of the market. And so we'll have to see how this evolves. Ultimately, I think what will matter most to the stock is growth of units. I think Musk will play an important role, but it's going to come down to the performance of the business more than anything else, in my view.
You know, we were talking just earlier this week about the fact that GM is effectively shuttered. I mean, the Cruise project is just not what it was supposed to be. And so now you have Tesla and you have Waymo. Do you say that they're the winners of this whole game and everybody else falls to the wayside?
I think it's a much bigger story than that. I think what you have here is really this transformation of the automobile industry, new business models. I think Waymo, having taken rides in Waymos, I think it's a very compelling experience. I think Uber has a very important role here to play. Their network, lining up supply and demand, I think remains valuable. I think you'll see partnerships between them and other players. I think Tesla, with their capabilities around full self-driving, those will get better and better. Ultimately, though, it's about creating value for customers. It's about creating new profit pools. GM will obviously continue to focus on its core business. They have an important role to play in the business. But when I look out, I see opportunities for several players.
But at these kind of valuations for Tesla, what has to go? I mean, everything has to go right. But what has to happen in your imagination? Because it requires, to some degree, a real vision to look out to make these numbers even, to justify what's happened with this price.
I think you need to see very strong growth in the auto business. I think you need to see a new low-cost car, ultimately a new lower-cost platform. You need to see growth in a lot of other geographies. And so when I look for opportunities across the broader tech space, I think, for example, Alphabet stands out as an interesting buy right here at current levels, given the health of core search and their cloud business. I think Amazon is very attractive here, given the performance of e-commerce. So we see other opportunities besides Tesla, which I think we'll have to see how that one plays out.
Dan Flax, we're going to leave it there. Thank you, sir. Happy holidays.
Thank you.
All right, up next, the battle for Financial Services Committee Chair is over. And we're going to hear from the winner, incoming Chairman Congressman French Hill. Wow. Joining us next, kind of a dark horse when we had him on last week. But it's been whipping some people like they do, like they say, in a good way. Squawk Box will be right back.
com.
Welcome back to Squawk Box. The closely watched Financial Services Committee race to elect a new chairman is now over. After weeks of speculation, our next guest is going to be the leader of that committee, wields the most influence over banks and bank regulators. Joining us right now is Congressman French Hill. Good morning to you, Congressman. Congratulations on this new role. Want to understand, if you were just to sort of lay out top 3 priorities from your perspective now that you're in the top spot, what are they?
Well, Andrew, great to be with you and Joe. I think first we want to look back at the trouble it is to start a de novo bank or to maintain a high quality return on equity and attract capital into the commercial banking business, and also look at the dearth of companies that have gone public. A couple of weeks ago in Barron's, I read that the Wilshire 5000, our broadest index in the American publicly traded companies, only has 3,700 companies in it. And that's because it's become so hard and so expensive to become public. Companies are staying private longer and becoming much, much larger before they decide to go public. I think that discriminates against small entrepreneurs. I think it makes it harder for families and 401k plans and union pension plans to have more investment options. So issue 1 is let's make community banking and commercial banking competitive again by removing some of the calcification in the regulatory system that's made it so hard to be profitable, serve customers, and be safe and sound. And let's remove some of the barnacles on the ship of state when it comes to capital formation and make it easier to go public and stay public in a more affordable way to make returns for your shareholders.
Where does that priority lie relative to your support, for example, for crypto?
Yeah. Well, I'd say the third one, you asked for 3. I wanted to stop and give you a chance to talk. But the third one is digital assets. We need a market structure for digital assets. We don't have rules of the road. Under Chairman Gensler, we had just regulation by enforcement. This is not helping America succeed, not helping technological advance, innovation for Web3, the use of blockchain, both in publicly traded companies and in financial services. So that is the top priority for us. And our majority leader, Steve Scalise, has it on his first 100 days of the House is to move a regulatory structure bill for digital assets. And I also believe a dollar-backed payment stable coin for under U.S. law as well.
You believe in a Bitcoin reserve?
You know, I don't really, I have to say I know Cynthia Loomis from Wyoming. I heard her give her speech at the Bitcoin conference in Nashville. I understand why some people are attracted to that. I'd have to think long and hard about what the value of that is to the United States or the Treasury. But I am certain of this, that we need a fair-minded, fit-for-purpose regulatory structure for digital assets in this country.
So you mentioned your top priority, or maybe we were going through the list of 3, but I think we might have skipped over number 2.
Well, I said capital formation on the publicly traded space under the SEC. That's 2, yeah. The banking issue is for banks of all sizes. You know, the Biden-Harris administration got away from tailoring, which is to say, have the right regulatory approach for the right risk and the right size institution based on complexity. And they've gone to, again, much more one-size-fits-all.
Broadly speaking, do you believe that we have too many banks in America? I know it's almost sacrilegious to say, because we do care deeply about communities and community banks and the relationship between the banking system and communities and small business. But there's also an argument to be made that, you know, on a relative basis to most countries, we have more banks than just about anybody.
Well, I don't believe we have too many banks. I think the market ought to determine how many banks we need across the country. We have counties that have no physical banking practice. And while on the East and West Coast, people can bank on their phone and get a commercial loan on their phone, I have counties in my state where there's no cell service. There's no broadband. And so the idea that you're going to bank on your phone and get a loan for your new startup small business on a phone is ridiculous. We need physical distribution of financial services capabilities in many, many places in the country where we don't have them. But as I say, I think the market ought to set the financial structure of how many banks we need out there. And that's based on the return. I believe we would have a more competitive banking market if we didn't have the regulatory structure that actually pushes consolidation in the banking industry to the largest banks, because nobody can cope with the regulatory burden.
what do you make of fintechs? And arguably, if you were to spend some time with some of the CEOs of the big banks, they would say, look, it's crazy. They would say we're being overregulated, and the fintechs are being underregulated, and they're trying to basically do the same thing that we're doing, except they're doing it without all of the regulations that come with being a bank. So, who's right? Which should it be?
Well, I think in my examples, if you look at public companies, why are there more private companies? Because it's too expensive and painful to be a public company. If you say, why are there so many big banks? It's because it's too expensive and too painful to grow a small bank. And that's all at the heart of too much over-regulation and misdirected regulation that goes beyond simple safety and soundness. Fintech should be able to partner with banks in a safe and sound way and allow their knowledge of AI or fintech applications to either find new customers or serve customers better or do compliance in a more effective way. That ought to be available to small and medium-sized and regional banks, because that will make them more competitive, give them more options to compete with the largest banks in the country that have their own IT and AI departments.
I don't know if you saw, there was an interview that went viral just in the past week and a half or so. Mark Andreessen, one of the legendary venture capitalists in Silicon Valley, was on the Joe Rogan podcast, and he talked about what he believes is a troubling practice of what he calls debanking for certain types of people he believes along either political lines or industry lines or other things like that. We've had other guests who've suggested that this may not be as prevalent as perhaps he suggested, but then there's obviously a real pervasive view that there is a debanking effort that we don't know about. What do you know about it, and how concerned are you about it if you believe that there's something happening that is unfair and not based on credit or the idea that people are going to be able to get their money back? Because I think a lot of the efforts that have been made, at least rationalized or justified, has been based on AML and other issues like that.
Mm-hmm. Well, for sure, banks, and I was a bank CEO once, so I believe this sincerely, banks ought to be able to do business with whoever they want to that's in the best interest of the strategy and risk profile of their company. With that said, though, it's also true that we've seen evidence of government-directed debanking during the Obama administration. Congressman Blaine Luetkemeyer of Missouri discovered that in his work on the House Financial Services Committee. We found emails and documented evidence that FDIC personnel had encouraged banks not to do business with certain kinds of companies, including legal gun sales companies. And this is a fact in America. If you have a legal business under the laws of America or one of our states, you ought to be able to get financial services without discrimination imposed by the government. And I think that's a mistake. So we have now uncovered evidence that, once again, the bank regulators in the Biden-Harris administration were encouraging banks to no way, shape, or form do business with someone in the crypto space, the digital asset space. Whether they were an AML BSA risk or not, it was just a more blanket, you don't want to be doing business with these kinds of companies, you have reputational risk. I think Mark was right to point it out. And I have seen evidence, and we've taken testimony in Congress from companies in the digital asset space that have absolutely said they were told to leave the bank and that was at the urging of regulators.
Congressman, I want to thank you for joining us. Hope we can continue this conversation a lot more in this new role that you're in. Congratulate you on it, and we look forward to talking to you again very soon. Happy holidays.
All the best.
When we come back, we've got some stocks to watch ahead of the opening bell. Plus, egg prices are no yoke. We've got the details after the break. That was a dad joke. Told my mom. Let's take a look at the futures this morning. You're going to see right now the Dow futures are up by about 55. S&P futures up by 22. The NASDAQ up by 172. It's still a down week so far for both the S&P 500 and the Dow. We will see what today brings. Squawk Box will be right back.
Egg prices are approaching record highs. There's two big reasons why this is happening. We've seen this movie before. Bird flu has reduced egg supply, and there is a strong consumer demand right now as we get into the thick of the holiday season. Christmas. I don't know. Are you dying eggs?
Eggnog.
Eggnog. I know. It must
And
be,
baking.
Must be an alcohol shortage too.
Well,
for
it's,
that.
it's also baking. There's lots of things. Like you gotta
True.
have.
True. But it's not Easter.
It's not Easter.
There's no Easter egg hunts. One egg supplier says it's likely we'll soon see prices near the record high set in January 2023 of $4.82 a dozen for grade A eggs. I will say they're so amazing as just nutrition and protein and everything. 482, even at 482, that's one of the best.
Oh, it's the best
one of
deal.
the
This
best
is what I
deals
told our
in
kids when
town.
they went off to college. Like, if you're starving and you don't have money, you can always make eggs. It's protein. It's
Yep.
cheap. You can get this, and you should figure out how to.
If you're on a deserted island, except for not being able to hard boil them or cook them, but that's the one
Yeah,
food.
fire. You can cook them.
Right. That's the one food. That's the one thing. If you could have one thing, Sorkin.
Eggs, it's not that cheap. But then when
You
you go to
cannot-
these
and it can't
super
be crispy.
organic ones that are like,
Right.
then it gets in a whole other
What
level.
about one food
Yeah.
on an island? It
Like,
can't be Krispy Kreme.
Blueberries are the one food you're
Can't
supposed
be
to
Krispy
eat.
Kremes.
Blueberries are the one food
You can't
you're
live
supposed
on
to eat.
those.
Great for your brain.
You have diarrhea nonstop. You need it.
Okay, presented without comment.
you
Coming
can't
up,
just eat a
your
bunch of
morning
fruit.
market movers, folks, and then the CEO of logistics giant C.H. Robinson is going to join us after their investor day. We're going to talk AI and how the proposed Trump tariffs will impact shipping from China. Do not go anywhere. Squawk Box comes right back after this.
With your first order.
All right, let's let's get to Pippa Stevens. She's got a look at this morning's pre-market movers. Pippa, what are you seeing today?
Good morning, Becky. Let's start here with shares of Broadcom because they are surging 18%, making it by far the biggest pre-market leader in the S&P 500. Now, it was a mixed Q4, but the company said its AI revenue jumped around 220% on the year. CEO Hock Tan also said Broadcom is developing custom AI chips with 3 large cloud customers, which comes after a report from The Information that Broadcom is partnering with Apple. Those shares are up about 90% on the year. Now, Uber is in the green after being named a top pick at both Goldman and Evercore ISI heading into 2025. Goldman sees more than 50% upside for the stock, saying that despite the looming threat of autonomous vehicles, the risk reward is compelling for companies that have lagged a robust market environment, while Evercore noted an attractive valuation. Finally, Riot Platforms, because it is building on its gains after activist investor Starboard Value reportedly took a stake in the Bitcoin miner, according to the Wall Street Journal. Starboard is pushing Riot to convert its powerful mining computers into capacity for AI data centers, the report said. Now, despite the surge in Bitcoin prices, Riot stock is still down in the last month, as well as down about 20% on the year. Andrew?
Okay, Pippa, thank you for that. When we come back, the CEO of logistics giant C.H. Robinson joins us to talk AI. We're going to talk about President-elect Trump's tariff proposals and so much more. And then later, Goldman Sachs Vice Chair Robert Kaplan on the Fed ahead of next week's big FOMC meeting. All that and more. Squawk Box comes right back after this.
Join Jim.
Freight and logistics giant C.H. Robinson holding its investor day and updating investors on its outlook for what business will be like under President-elect Trump. Frank Holland is here. He joins us with more on this. Frank, good morning.
Hey, good morning to you, Becky. Good morning, Joe and Andrew. C.H. Robinson, the top freight mover from China to the U.S., finished just about 4.5% higher yesterday after the logistics giant held its investor day. The company released fiscal targets for 2026 that are well above street expectations, also guiding for margin expansion and market share gains. Robinson is the #1 carrier in the Trans-Pacific lane that includes China, Vietnam, and other parts of Southeast Asia where many companies are shifting production. Robinson also moves 10% of freight from Mexico to the U.S. for multinationals like Microsoft, AB InBev, and Kimberly-Clark. It is also the largest freight broker here in the U.S. with 12% market share, making it a key player for companies trying to work through expected or unexpected supply chain disruptions like an increase in tariffs or a strike at the East and the Gulf ports. Becky?
Frank, thank you. Stay right with us. We want to bring in right now someone to talk about all of this and more. Dave Bozeman is the president and CEO of C.H. Robinson. And Dave, it's really great to see you here. Thanks for joining us.
Yeah, thanks for having me, Becky.
This was your first Investor Day. You are somebody who comes with a lot of experience from other big companies. You've been a top executive at companies like Amazon, at Ford, at Caterpillar. You know logistics. You know AI, and you've been doing a lot of that too. I think the street definitely liked what it heard from you yesterday. I guess my first question is, how are you so confident about these higher than expected numbers across the board, raising expectations on things like margins, on things like profit for the year, when there's so much uncertainty about what to think in your arena? What gives you that confidence?
Well, first of all, thanks for having me. And there is a lot of uncertainty, Becky, but we do feel confident. We feel confident because leaning into technology and AI, it's been a game changer for us. And we are revolutionizing our company, but we're also trying to be a leader in the industry within AI and technology. If you look at our large language models and what our engineers are doing, it is making a game-changing change for our people. And we say our strategy is our people powered by technology. And when we take that and look out, it gives us that confidence that we will hit those numbers that we laid out yesterday.
How much of AI is automating things for you? Because that sounds like it's almost doing it in spite of what your people do. This is some pretty big numbers just in terms of explain what you can do with AI.
Yeah, so with AI in our industry, if you look at life of an order, it's allowing us to really take away all of those manual tasks that our people do on a day-to-day basis. And at our scale, which we do 35 million shipments a year, 55,000 shipments a day. Our people are doing a lot of manual processing and touching. AI has allowed us to take it out of their hands and allow them to focus on the things such as solutioning, such as solving problems for customers, really allowing them to get back to the things that we're known for. And it's opened up capacity to do that. That's why it's such a game changer.
Does it mean you need less people, or how does it improve your margins?
Well, what it says is that we do need less people in certain areas where we're doing those manual tasks. We've actually gone out and invested in people when it comes to customer facing and things like that. We've increased it, or in areas such as small, medium business segment in which we're investing in and we feel good about.
So Dave, Becky mentioned uncertainty. I mean, yesterday we saw the president-elect post something on Truth Social, basically weighing in on the dispute between the dock workers and the port operators in the East and Gulf ports, siding with the union. There's kind of, I would think, in your mind, raising the potential of a possible strike at the East and the Gulf Coast ports. I just want to get your take. How do you view the president siding with the dock workers? I'm sure you're hearing about this dispute. Are you worried that it won't get resolved by January 15th?
Well, I think the thing for us is really focusing on our customers, right? And that's what we're going to do. Port strikes, tariffs, it's not the first time we've seen this. In fact, periods of kind of volatile disruption really play into the value proposition of C.H. Robinson. And we certainly don't want a strike to happen for the sake of global trade, but it's something that we've been in the trenches preparing for, working with our customers for. So we don't want to strike, but if it happens, we're right there to help our customers.
What about tariffs? You seem very calm and collected, but the China to U.S. lane is a key part of your business. I mean, it generates a lot of your revenue and a lot of your margin. What about the potential of 60% tariffs on Chinese goods?
Well, first of all, again, we don't know what will happen with tariffs, but if they happen, we are a company that moves freight. And that freight may decide to originate into a different country. If it does, we're going to move the freight one way or the other, and those goods are going to move around the world, and we're prepared to do that.
What about right now? Have you seen a pull forward? Are people trying to get goods in ahead of the tariffs? possibly goods in ahead of a strike again, potentially at the East and the Gulf Coast ports?
Yeah, we've actually seen that. First of all, we work with over 95,000 customers. And if you recall, in the first potential port strike, going back to June, we were working with customers in really driving and making their supply chains much more resilient. And so some of this we've seen and we've already prepared for. And so we, again, are preparing for that. And we've seen some pull ahead. But Frank, I'll tell you, it's not been a really material pull ahead for customers.
Dave, are you truly agnostic to tariffs? I mean, it just occurred to me you could be. You're moving it one way or the other. But would you make less money if it was all onshored?
Yeah, well, Joe, that's the thing about it. In working with the amount of customers that we're working with, you're right. The conversation has to be, are goods going to stop flowing? And we don't think goods are ever going to stop flowing.
Unless we stop consuming.
Exactly. And so we don't think that's going to happen. And when goods flow, that's where C.H. Robinson is right there in the mix to do that.
How much of your revenue, I would say, comes from moving stuff from China?
Well, it's a portion of our revenue. It's going to be, less than 20%. It's part of our global forwarding arm as well. A bulk of our revenues come from our freight forwarding, actually our freight brokerage here in domestically.
Yeah, so stuff is moving.
Stuff is going to move.
And is it production also moving to other places like Vietnam? Are you seeing that happen actively, or like India? I mean, where are you seeing the shift in production go for companies that are trying to mitigate the impact?
Well, we've seen a shift to Southeast Asia, but China still is the factory to the world. And it is very large. It supplies the world. We continue to be the dominant place of shipping from China to the U.S., which, as you know, we play extremely strong in that particular lane.
Dave, I want to thank you so much for being here with us today. And Frank, thank you.
Thank you.
Great to see you both.
Coming up, the author of the Bitcoin Standard. We've talked about it so many times. He's going to join us.
Satoshi's here?
Not Satoshi. Not Satoshi. He didn't author that, although who knows? We don't know who that is. We're going to talk about the rise in the cryptocurrency, in the price, and the economic impact. We'll be right back.
WashboardJimAthletics.com.
President-elect Trump did run a pro-crypto campaign, and his promises have helped boost digital assets as Inauguration Day approaches. Joining us now, the man who wrote the Bitcoin Standard, economist Saifedean Amos, author of the aforementioned book, also the Fiat Standard, the Gold Standard, and the Principle of Economics. I owe you a lot, Saif. I got to say that, and it was a kind of a revelation that I had, I guess, going on almost 5 or 6 years, and I know you remember almost right at the very beginning talking about in ancient times maybe shells could be used, maybe you know, we didn't know how to use money. We had no idea, and eventually they figured out a distributed ledger. If everybody on that island just kept track of what they did and everybody had access to it, you could basically create a form of money. And that's I think a distributed ledger, when you think of it in the context of Bitcoin, it's that simple. Blockchain.
Yes, thanks for having me, Joe. Yeah, I think Bitcoin is continuously proving its value to more and more people. More people are beginning to realize it. And as more people realize just how revolutionary and important this is as a monetary technology, more people buy it and the price keeps going up. It's been going on for quite a while, and I think it's going to continue because ultimately Bitcoin is a money that cannot be inflated. Nobody can make more of it. There's only going to be 21 million. That's it. And it's just such a simple fact, but it is so unique because no other form of money can credibly claim such a property. And that means that eventually everything continues to decline next to Bitcoin because you keep making more and more of everything.
And it gets a little bit far into the weeds, but I was looking at some of your comments here. I'm just fascinated by it. And we want to get back to the real world and what it means for people with regulatory issues and where we are in the genesis of Bitcoin. But you point out that fiat money and the monetization of debt, which every time the government does something, it's basically almost like mining gold, except in this case, we just increase the supply of the existing money to pay for what we're doing. And that's never going to work. And even when you're off the gold standard, gold has a stock to flow. We can only make so much per year, produce so much per year. Same with Bitcoin until we hit 21 million, and then there's no more produced. And at that point, that will be the stake in the ground to value all other currency, right?
Yeah, and I think that's really ultimately what it comes down to. The thing that made gold money, why gold became money, was that it's
wasn't jewelry, Safe. It wasn't. Everybody thinks, and that's the misunderstanding of what money is. It's not because you can make a nice ring out of it. There's characteristics of why gold for 4,000 years has been used to represent value, but it has nothing to do with what it's used for.
No, it stores value well because it's very difficult to increase the supply of gold. It's very difficult to increase the supply of gold substantially. Every year, the supply of gold goes up at only around 1.5% to 2%. And so that means that people who hold it as money end up doing very well for themselves, and people who hold other things don't do well. And that is true for gold, and that's what made gold money for the whole world practically at the beginning of the 20th century. Then governments come about, and they use their debt as money, and since then, the average over the last 60 years or so, between 1960 and 2020, for 60 years, the average fiat currency grew in supply at around 14% per year. Or overall, fiat currencies grew in supply at around 14% per year. So we went from 1.5% to 14%, about 10-fold increase in the supply growth rate. And 14% per year means that on average, you lose half of the value that's stored in money over 5 years. So you lose half of the value of your money over 5 years. That's the average fiat experience. Of course, some currencies are better than the average, like the US dollar and euro. They only increase at around 7-8% per year. Some currencies are a lot worse. They increase at 20, 50, maybe 100 sometimes % per year. But on average, it's just continuously increasing in supply, so its value declines. And because its value declines, that incentivizes everybody to A, not save, and B, take on a lot of debt. And that's why everybody is in debt. And that's what Bitcoin fixes. If we go back to having a hard money, where money is no longer debt, we no longer need to be monetizing debt. We no longer need to get everybody to become a debt slave in order for us to have a form of money. We have a form of money that is just a commodity that doesn't require anybody to get into debt for it.
Stock to flow, you talked about it, and we're going to have you back because this could be obviously could be a semester long course. But so stock to flow on gold is what did you say? How much is produced a year? 1 to 2% increase, right? What is
1.5 to 2%?
1.5 to 2. With Bitcoin, the stock to flow, but it halves, so that changes. But where it is right now, what valuation would you put on Bitcoin?
It's a 0.8% annual supply growth rate. So every year now, for this 4-year period, we're going to be having a 0.8% growth. So that's half of the supply growth rate of gold. And then the 4 years after that, it's going to drop to 0.4%. And then 4 years after that, it's going to also drop by a half. So it's effectively heading to zero, practically, very soon. And the supply is not really increasing anymore. So from now on, anybody who wants to get Bitcoin, they need to work for it. There's no way for anybody to mine it. Or there's no significant quantities of mining it, and that's a good thing. The good thing about money that isn't easy to make is that people have to work and to do productive things in order to make it. So everybody gets busy doing productive things. Whereas with easy money, where government can just print money, then you don't have to work. You don't have to provide society with value. You just got to provide government with an excuse to run the money printer and give you money. And then who needs to work? And so that's why I think we see a lot of economic problems in the world, because governments can just print money and hand it out to people who are not productive.
What regulations, what type of regime would make sense for you, and is that going to happen in this new administration for Bitcoin?
It's difficult to tell. I mean, they seem to be very, very positive about Bitcoin. It's difficult to say how much of their agendas they're going to be getting through. But I think, in general, I would say if I were in a policy position, the best thing that policy could do about Bitcoin is just to take a hands-off approach. Bitcoin is just software. It doesn't require the legal framework that is required for government money, because government money is inextricably linked to government institutions, and it's inextricably linked to the central bank and to government policy, and therefore it requires an entire regulatory framework. Bitcoin is not like that. Bitcoin is software, so it regulates itself because it's voluntary software that anybody can choose to run on their computer, and they can choose to edit it in any way they want, and they can choose to propose changes to the software for anybody who wants to use it. So I don't think it requires the same kind of regulatory approach that fiat money requires, and I think it's pretty much regulating itself through the power of software and algorithms.
Very good. Great to have you on finally and meet you and see you in person. And I recommend, you don't have to even read the whole darn thing, Safe, but I finally did. But the light went off early on for me, and it's been quite a ride for anyone that got involved. Appreciate it very much, Safe. Thank you.
Thank you so much for having me, Joe.
Okay.
Okay, coming up, U.S. President-elect Donald Trump inviting the Chinese president to his inauguration. Will the move help relations between Washington and Beijing? That is the question we're going to try to answer in just a bit. As we head to a break, a look at shares of Apple right now. Morgan Stanley naming the tech giant a top pick for 2025, saying Apple Intelligence will accelerate iPhone replacement cycles. That stock up about 29% this year. Squawk Box, coming right back.
make money.
Welcome back to Squawk Box. President-elect Donald Trump inviting Chinese leader Xi Jinping to his inauguration. That's according to a transition spokesperson, signaling potentially, we'll see, a thawing of relations between Washington and Beijing. That is the question of the morning. Eunice here, right here in studio at the table, no less, to tell us about what is going on and what it all portends. What do you think?
Well, the state media is not reporting it at all, that there's been any invitation. And I think it's very difficult to see President Xi actually coming here for the inauguration because it's not a situation that he can control. He would risk potentially being humiliated, looking like he's number two, looking as though he's not fallible, or that he's not infallible, that he is fallible, which is something that the Communist Party right now does not like to portray. But at the same time, the Chinese, I think, wouldn't want to be seen as not cooperating. So likely there would be a senior official who would come, and that they would want to send that message of cooperation, not only to the Trump administration, but also to the people back home to show that China is acting like the statesperson.
Do you think that President Trump, President-elect Trump, invited him knowing that he wouldn't come, but hoping that he gets credit for the invitation anyway? Have you ever invited somebody to a dinner party hoping that they don't come, but hoping that they're very happy that you invited them anyway?
So that he could mark it, right?
Well, so they can mark it, and more importantly, so that then they can go back to him later and say, we're pals.
Well,
I invited you to my dinner party.
Right.
I know you couldn't make it.
Right.
You live across the world, but,
I think it's possible, but this is the issue right now when it comes to China policy, because in China circles, people are really confused about what Trump's actual China policy is going to be. So on the one hand, he nominates China hawks like Representative Mike Waltz as NSA, right? And then
Or Marco Rubio.
Right, or Marco Rubio. And then you look at Marco Rubio. He's sanctioned by China. He's now the pick for Secretary of State. At the same time, then you have an invitation for President Xi to come.
And you have David Perdue being named as ambassador to China.
Right, and he has
had a lot of
softer
dealings and understands China from all the imports that he's done.
Absolutely, and then you could throw in Elon Musk. He has a sizable business, so it all kind of adds up to a lot of unpredictability. And from what I understand, the Trump administration sees unpredictability in their favor for the negotiations. Going to your point,
China doesn't particularly care for unpredictability, right?
Well, they don't. Yes, exactly. They don't like unpredictability, but so they see it as favor. But at the same time, it could be also leading to a miscalculation, depending on what happens.
But generally speaking, do you think that the Chinese, and I'm curious what the press said, after the election, they were happier that Trump was the president, or they were happier they were pushing for Biden?
There's a lot.
I should say Kamala Harris.
No, there's a lot of uncertainty. I mean, I was asked many times by different government officials what is going to happen over the next several months.
Right.
And there's just people just don't really know. And they see that maybe on the trade side that there are going to be tariffs coming in, but in terms of policy, Trump has messaged before that he is willing to negotiate on Taiwan, for example.
Right.
But is he really? Because then he has Mike Waltz or he has Marco Rubio, who are very hardline. So people just don't know what's going to happen, and then that just leads.
Do you think Taiwan's on the table? Is that a view inside China that Taiwan is now, that if the Chinese want to take Taiwan, they can?
There's definitely a hardline belief that if Trump is amenable to it, that maybe the Chinese should go in, that Xi Jinping should go for that. At the same time, it would be so disruptive to the economy, to China, and right now, because of the economic situation, China doesn't really need that level of disruption.
Another negotiating question, which has to do with this idea that all of these tariffs and everything is a grand negotiation.
Right.
How much leverage do you have, or how much leverage does President Trump have if everybody knows that it's a negotiation? Do you see what I'm saying?
Yeah, I do.
If you thought that he was actually going to go do these things and wanted to do them, that's a actually different posture than it's a negotiation, because the negotiation suggests that in a perfect world, you prefer not to do any of these things.
See, my question has been, what is a negotiation for? What's in the grand bargain?
Right.
So do you want the Chinese to stop violating intellectual property rights, stop stealing corporate secrets, stop with hacking, stop with subsidies? Because when it comes to it, I feel that since the first term, what's become more evident is that the Chinese government wants to make sure that they have tech dominance and they are have national security in place more than growth. So then, what are you actually negotiating?
Final question: TikTok.
Yes.
Is that become a chess piece in this story, which is to say that it actually is supposed to stop working? I shouldn't say stop working.
Yeah.
Stop being updated.
That's right.
Through the app stores, literally the day before, I believe, the inauguration.
Yeah.
Do you believe that that is something that is significant and material to President Xi?
Well, Jeff Yass is seen as somebody who is much more amenable to having TikTok survive. So I think there is a hope that because of the influence that he would have on President Trump, that the Chinese would be able to have TikTok survive here.
Thank you. Appreciate it.
And before you guys go, I'd like to invite you all to a dinner party tonight at my house. I know it's not China, but New Jersey might as well be, right?
Wow.
She knows we can't make it. She gets credit for the invitation, but that's...
I can make it.
Boy, now I'm in trouble.
You know what? I'll take my drone over to your yard.
We can go out and take pictures in the backyard.
Exactly.
For them.
I'll ride it over.
Thank you. It was great to see you. All right, it is just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin.
I want alcoholic wine.
I've got a bottle of the non-alcoholic stuff right here. I literally grabbed the non-alcoholic bottle. That's what I'm taking home.
It's like an oxymoron.
It tasted pretty good. Among today's top stories, shares of Service Titan popped 42% yesterday in the first major VC-backed IPO since April. Service Titan raised about $625 million in its NASDAQ debut, selling shares at $71 a piece. That was well above the expected range. Shares actually closed the day at $101 a share. That gives the company a market cap of just under $9 billion. You saw the two gentlemen here ahead of that IPO yesterday. They got a pretty compelling story, and the street seems to think so too. Alphabet's YouTube TV is raising the price of its streaming plan by $10 a month to $82.99 a month. That is a 14% hike. For new subscribers, the change takes effect immediately. It kicks in for existing subscribers on January 13th, the company citing rising content costs for that change in price. And Amazon founder Jeff Bezos is planning to visit President-elect Trump next week at Mar-a-Lago. Ahead of that visit, the Wall Street Journal reports that Amazon is planning a $1 million donation to Trump's inaugural fund. Amazon also plans to stream the inauguration through its Prime Video service, and we'll have more on that.
United Health Group CEO Andrew Whitty has a guest essay in the New York Times, published early this morning. And he says the company is struggling to make sense of the unconscionable murder of executive Brian Thompson, as well as the vitriol directed at United Health colleagues who have been barraged by threats. He says, in his words, "We know the health system does not work as well as it should. We understand people's frustrations with it." And he reflects on Brian Thompson's legacy, sharing that when colleagues proposed new ideas to him, he would always ask, "Would you want this for your own family?" And if not, Woody says that that was the end of the discussion. Woody ends by saying that Thompson advocated ideas to make healthcare more affordable, more transparent, more intuitive, more compassionate, and more human, and that's the legacy that the company will carry forward for him. And I think it's good that he wrote this, and I think people need to probably hear that and think about, you know who you are. Think about some of the responses that we've seen.
Yeah, Brian Thompson, he laid out a lot more details, personal details about how he was raised in the same Iowa farmhouse as his mom. His dad spent more than 40 years unloading trucks at grain elevators, and Brian Thompson worked farm jobs as a kid and fished at a gravel pit with his brother, bringing that kind of human...
It is unconscionable for anyone to do, other than absolutely condemn it for what it was. It is unconscionable. And maybe you need to take a good look at what it looks like when that happens to someone. And then the effects on his family.
And he was a father of two.
Gunned down at 6, walking in the back. In the back. Didn't even get to turn around and see the guy. Guy should be. He's never getting out, hopefully, and I honestly wish the death penalty was still around.
Meantime, I want to get down to the New York Stock Exchange. Mike Santoli is at the New York Stock Exchange this morning on a Friday the 13th, sir. Let's hope it's maybe a little luckier than unlucky.
Yeah, Andrew, and of course it's the time of year when people look for, superstitions and tendencies and these sort of seasonal forces. What the textbook says actually is that the first couple of weeks of December often is a little bit of a soft patch for a fourth quarter rally, and that's really been the case. We flattened out in the S&P 500. We got above 6,000 November 11th. We were about flat month to date, a little bit down week to date. No big deal though. The S&P is only down 0.8% from the high. It's up 28% or so, 27% year to date. Actually tracking for an extremely rare 2 years in a row of 25% or more returns. So not a lot of forward, kind of pattern in terms of what happens the following year, but it's worth kind of noting that down. It's been a great 2 years. Take a look here, though, at within the market, there has been weakness. The equal-weighted S&P on a month-to-date basis is down about 2.5%. It's almost 3% off of its record high, whereas the NASDAQ 100, the old favorites, mega cap check, the winners of the first half of the year, have managed to support the index over the course of the last couple of weeks. Today, it looks like the market is going to try to firm up under the surface. You're going to get a little bit of a bounce in semis. We'll see how that proceeds from here. Now, take a look at on a 3-year basis. Of course, you guys were talking about the move in Tesla today. I think somebody made Uber their stock pick, their top pick for next year. This is on a 3-year basis how they've kind of come together. And not quite, but of course you see how Tesla was really working off this really climactic high from a few years ago, and just a dramatic move here. It's not all that's going on, but it's a lot of what's going on in terms of people figuring out how the future of mobility is going to work and who's got the edge in all different respects between these two companies, guys.
Hey, Mike, are you losing your voice?
Little bit. It's nothing to be concerned about. It's trying to speak over loud restaurants two nights in a row.
All right, so now you're like humble bragging that you have a social life and we don't.
I'm sort of noting that it's so unusual for me to be out 2 nights in a row that my voice can't handle it anymore. Yeah.
Well, I'm glad that you're not sick, and I'm glad that you have a life.
Thank you.
It's amazing. Did you get a Big Mac both nights, or would you?
Yeah, the loudest McDonald's you were ever in. Yeah, very festive in Times Square, as you know.
Well, I'm having a dinner party tonight in New Jersey. If you'd like to come.
Yeah.
Yes.
You're invited
I'll
too,
leave
Mike.
early. It's going to be
Non-alcoholic wine, like stay home.
Non-alcoholic wine, and you have to cross the bridge.
Yeah,
so I'm getting a lot of takers.
That's right.
Yeah.
All right, coming up, former Dallas Fed President Robert Kaplan joins us to talk the Fed's rate path, his reaction to recent inflation data, and much more. Then later, Bank of America's Savita Subramanian tells us why she sees not a 10%, no, not a 10%, not a 12%, but 11% upside in the S. Maybe it's to an actual target, and then you just do the math and it comes to 11.
By the way, I have to give credit where credit is due. Dave Evans helped me with my little joke to invite everybody to my dinner party.
He does that. He does that.
Smart.
He's. I think he should have maybe done something differently. Maybe writes for the Daily Show or something.
Or be in front of the camera.
Or be in front of the camera. Yeah. Anybody can do that.
Well, the Fed meets next week and is expected to cut rates once again. But could the recent inflation data that we've seen impact that next move? Joining us right now is former Dallas Fed President Rob Kaplan. He's now vice chairman at Goldman Sachs. And Rob, when we look at the inflation data that we got this week, I don't understand why there's a 100% chance being fed into the markets on the idea that the Fed's going to cut rates. Why should they cut rates at this point?
Yeah, I don't think it's an easy decision. I've felt that there would be two phases in the rate cutting, and this is the end of the first phase, meaning that if inflation is sticky, which I think it is, around the mid-twos, the Fed can probably get the Fed funds rate to 4.25, 4.5. That would mean one more move this next week. But inflation, I think, looks a little stuck here. There's some things better, like on services. There's some things worse, like on food and vehicles. And so I don't think this is a no-brainer at all. And I'd actually, in many of these meetings I go into with a strong point of view, if I were in my former seat, I'd be going into this meeting open-minded and looking to have a debate. I think on the margin, they'll probably cut. I'd probably go along with it. But I think we need to see demonstrable improvement in inflation from here to cut below 4.25, 4.5. And so my SEP would probably be in the neighborhood of 2, not higher, because I want to be very cautious and deliberate after this meeting.
I guess if you look at inflation, there's a lot of questions and a very clear argument for not cutting rates. If you look at the broader economy, it still doesn't seem like there's a great reason for cutting rates. The job market looks okay. If you look at the numbers from Restoration Hardware, which were out just last night, up 18% for November for orders, up 13% for the quarter that ended early December, plus 30%, and expecting the full month up 20 to 22%. That shows like a consumer that is building confidence in a job market that looks pretty good.
Yeah, and I think one of the factors which is going to change, I think, in 2025, and I've been saying this for the last couple of years, we've got an extraordinary level of fiscal spending going on right now. We're just finishing spending the American Rescue Act money, which was $2 trillion over the last few years. We've got Inflation Reduction Act projects, CHIP Act projects, infrastructure projects, and I think some of this strength, I think on the margin, is a little bit artificial. I think one of the key things I'm going to be looking for into the new administration is, will some of these big programs, spending programs, be stood down where we actually get fiscal spending under better control, not as stimulative. But I think that's why you're seeing this year-end strength. Having said that, there's a little weakness in prime age employment on the margin. And so, this is not a no-brainer. The market probability is as high as they are. I think probably people at the Fed are scratching their heads on that too, because I think they'll have a real debate.
So, I mean, that's what I mean, a real debate. You've lined up a whole lot of reasons not to cut. What are the reasons to cut?
The main reason for me is, and I look more at levels rather than direction of cuts. At 4.25, 4.5, and if headline inflation is 2.5 or 2.6, we've got a real Fed funds rate of 175, 200 basis points. I think that higher rate is necessary with this amount of government spending. I think, again, if government spending and stimulus is more normalized, which is being discussed, I think we're still, the Fed is still restrictive. It's still fighting inflation even at 4.25, 4.5. But again, a lot of what has to happen in this meeting is not just the rate cut. I think the SEP will matter. That's why I want to reduce the outlook in the SEP. And in the press conference, it's very critical that Jay Powell cautions that we're now going to slow the pace. This is going to be more deliberate, and we need to see more improvement if we're going to act further. That press conference will matter just as much as whether they cut or not.
Is there a risk that the Fed would have to do an about face at some point? I realize 25 basis points doesn't seem like a whole lot, but if you're running the risk of having to change your direction at some point, 25 basis points out of You know, so far we've only seen 75 basis points cuts, so it's a significant portion of what would be the total 1%, 100 basis points. Is there a risk to adding that extra 25 basis points that would make it so you would have to do something else down the road, some sort of an about face?
Yes, that's the best argument for not moving, because having to back up, I think, is unacceptable. If I'm at the Fed, that's a mistake I cannot make. My own view on the margin is we're probably safe at 4.25, 4.5, but again, I don't want to go any further. And then I want to turn my attention to seeing more progress, and I also want to turn my attention to analyzing regulatory review, government spending changes, changes in the energy ecosystem that are coming, and I want to better understand what's going to happen on tariffs, particularly if we have tough tariffs with China. I want to see an open corridor in North America to reshoring to Mexico as well as the United States. I'm going to watch that very carefully. I'd be very concerned if there were high tariffs also on Mexico, because that would limit reshoring. And I want to look at how the job market is going to be affected and workforce growth is going to be affected by these deportations. Deportating criminals, great. Sealing the border, great. But I want to be careful that we don't inadvertently shrink the workforce. We need workforce growth. Workforce growth is disinflationary, and it's one of the reasons why the Fed has been able to do the cuts they've done.
I don't know, you just argued me into a point where I don't understand why they would do it at this point, except for the idea that the market's expecting it and they don't want a big surprise. But, you know, telegraph something ahead of time that gets the market ready for the idea that it may not be a slam dunk.
Well, so so let's get more granular. We saw some improvement in the service sector. I've been very worried about service sector inflation. We saw a little improvement. We saw a little backup in food and vehicles, as I said, but I think they may look through that. You do see on the margin a little bit more weakness in supply demand versus open jobs, prime age employment. But again, I would say, you know, there's two phases this week and next week. Thursday and Friday is when Jay Powell will talk to every FOMC member. If I were having that conversation with him today, I would say to him, hey, listen, Jay, I'm concerned. I'm open-minded. I think I can go along with one more cut, but I'd be happy if we didn't move. And then we'd have a discussion, and then I would go into the meeting next week with an open mind and prepared to listen. There's some meetings, again, I go into with a very strong point of view. This is one where I'm torn. I don't think it's a no-brainer. I think on the margin, I would expect we're probably going to cut, but I'd want to have a real discussion and debate.
Rob, thank you very much. Robert Kaplan.
Good to talk to you, Becky.
You too.
All right, coming up, in the wake of the killing of the United Healthcare CEO, social media has been buzzing with memes and even what looks like support for his killer. John Fort joins us next to weigh in on the phenomenon. Squawk Box will be right back.
Welcome back to Squawk. The man who is a suspect in the murder of United Health CEO Brian Thompson, healthcare CEO Brian Thompson, has now amassed defenders and even fans, if you can imagine that, on social media channels, adding to what has become a very bizarre twist to this tragedy. So there's a question this morning, and it is this a new cultural low, or has this been happening forever? John Ford is here to weigh in.
Yeah, Andrew, this is a new cultural low. The world was shocked last Wednesday when a masked man shot and killed United Healthcare CEO Brian Thompson 10 blocks north of here, outside the New York Hilton Midtown. The gunman fled on an e-bike. Instead of widespread condemnation of an act of wanton violence on the streets of American City, a significant online population celebrated the killer and his looks. The health insurance industry in this country is unpopular. For times companies have denied coverage or otherwise sought to limit costs. But some in the studio audience at Comedy Central's The Daily Show on December 9th audibly booed when host Jon Stewart announced the suspect was in custody. You get the sense some people have lost sight of the difference between watching a video game or a Netflix drama and real life. You can disagree with the way our health insurance system functions. You can even believe some of the decisions health insurance executives make are awful. This reaction to an assassination, even if just from the fringe, puts society's moral compass at risk. Once it's socially acceptable to cheer for murder, no individual life is sacred, including your own.
Okay, but the reaction, I would argue to you, has been shocking. I mean, truly shocking. But is that, in a way, different than what we've seen before?
Well, Andrew, on the other hand, this isn't a new cultural low at all. It's a familiar moral mud hole we visit when people feel exploited and when depravity has a pretty face. October 3rd, 1995, O.J. Simpson was acquitted of the murder of Nicole Brown Simpson and Ron Goldman. More than a few people celebrated, not because they believed he was innocent, but because they were rooting against a system they believed was out to get him and them too. Or we can go further back. July 14th, 1881, a New Mexico sheriff kills a fugitive and convicted murderer, but you only know Sheriff Pat Garrett's name because you know Billy the Kid. Reason why there's a legend of Billy the Kid at all is he was an outlaw during the beginning of the Gilded Age, when the rich and powerful, including coal barons and cattle ranchers, seemed to get whatever they wanted. And so people enjoyed reading about this gun-toting outlaw who managed to evade the authorities. Don't get me wrong, I'm not suggesting the United Healthcare suspect is any kind of folk hero. I am saying the fact that some are trying to make him one isn't new at all. It's a familiar sign we need to get our institutions in check when America starts rooting for criminals.
You did it. You did it.
That was really well done.
Well done.
Truly
you didn't do it the way I was.
well done.
Yeah.
Thank you.
The only thing is,
kudos to you. Honestly, I didn't know how it was gonna. I didn't know how it was gonna go.
When you came out to do it, I'm like, I told you there aren't two sides of this, but you mean, is this a new cultural low, or do we even have lower to go? That's the depressing part about it. It's hard to think. We may have matched how low it is in the past. That's what you pointed out.
Right.
I don't think it's possible to go any lower. Do you?
Well,
it's depraved. That's a good word.
If we keep getting to this low point over and over again, without addressing what it is in our institutions and societies that's getting us here, then it's going to be a very bad thing.
Okay. Thank you, sir.
Well, thank you. And if you want to revisit both of these arguments, check out the On the Other Hand newsletter. You can see them written down. There's a QR code on the screen, or you can type in cnbc.com/OTOH, get the full text.
Little history lesson with Billy the Kid.
Yeah.
Interesting stuff.
All right, we are awaiting November import price data. This has been a week of a lot of data, some important data that we've gotten too. Over the course of the week, we've gotten PPI, CPI. Those inflation numbers were a little hotter than the market had been anticipating, especially yesterday's PPI numbers. You're looking this morning at the futures, with the Dow futures right now up by about 56 points. S&P futures are up by just over 25 points. The Nasdaq's up by almost 200 points. And this is all coming on a week that we have seen lower moves for stocks overall. If you look at the Dow, it's been down 6 out of the last trading sessions in a row. That's the longest losing streak that we've seen all the way back to April, but that's still not saying a lot because we're sitting about 2.5% from the all-time high for the Dow, less than 1% for both the S&P and the Nasdaq. Rick Santelli is standing by at the CME in Chicago, and he has those latest data. Rick?
Yes. These are import prices for the month of November, also export prices. Let's start out with the month-over-month import, expecting down 0.2. It's up a 10. It's up a 10. That is a solid number, and it follows, at least up to this point, an unrevised up 0.3, which was the best number going all the way back to April. If we strip out petroleum, it moves higher, up 0.2, and that's a back-to-back 0.2. Solid number as well. Now those are month to month. Let's look at import prices year over year. Expected up 1%. They're up 1.3%, up 1.3%. That's the biggest pop on a year-over-year basis, going back to up 1.7 in July. Now, if we look at export prices month over month, they're unchanged. We're expecting down 0.3, so unchanged. And export prices year over year expected to be up 0.3, almost triple that, up 0.8. That's the hottest since July. So it's pretty easy to summarize. We see, for the most part, that these are all higher with respect to pricing, both import and export. Now I'm going to throw a curveball out there. Curveball is from the beginning of October through the end of November, and this is a November number, the dollar index went from 101 to 107.5. That is a huge move. We've had years maybe where you haven't covered 6.5-cent moves in the dollar index. Well, that affects both import and export prices. Creates more demand because our dollar buys more, but it makes other countries a bit reluctant to sell because their currency's weak. And on the other hand, on export, strong dollar means our exports are more expensive. So much of this actually makes sense. And finally, we want to point out a couple other things very quick. Becky is absolutely right. We haven't had this type of 6-session drop in the equity indices since April. But remember this, since last Friday, 1 week ago, every maturity on the Treasury curve has closed with a higher yield every session. And if you look at 10s, 20s, and 30s, the longer dated, they've actually had a higher high yield every day since Friday of last week. The shorter maturities are 1 day less. They're not at a record of 5, they're at 4. So it really makes sense that the higher interest rates are capturing investors' attention, but there may be hope, Becky and Joe. GDP also comes out on a month-over-month basis in the UK. They have back-to-back -0.1. That hasn't happened since the beginning of COVID. And, of course, we know that France has a lot of political issues. They picked a new prime minister today, but what I'm getting at is overseas, especially European activity is going to be slower and most likely more rate cuts. That's going to give us a big plus on the capital flow side. Back to you.
Very good, Rick. Thank you. Savita Subramanian, head of U.S. Equity and Quantitative Strategy at BofA Securities, joins us now. So I think what we've seen this week, and you heard Rick, Savita, it's based on whether we've got inflation really back in the bottle. Do we have it under control?
I don't think so.
I mean, should we be cutting?
Well, I'm not the Fed, but I think that where we are right now is an environment where we have a real high probability of seeing a reflationary environment next year, right? We just had 3 pro-cyclical things happen over the course of the last couple of quarters. One, profits troughed and are accelerating again. That's pro-cyclical. We've got demand recovering. We've got the market broadening. 2, the Fed is cutting interest rates into an accelerating growth environment, which is very unusual. Typically, the Fed is accommodative when things are slowing, and this time we've got profits growth actually picking up pretty demonstrably. And then on top of that, we have a red sweep, Trump 2.0. Sure, there's tariff risk and there's other aspects of this that are uncertain, but we have an administration in place that is pro-business, anti-regulation, pro-cyclical. I mean, I think it's hard to argue that we're not going to see a little bit of a reflationary cycle next year.
I would think the only reason that the Fed would be so dead set on lowering rates is that maybe there's something that they see in the underlying economy.
Maybe. I mean,
like what?
I don't know what it is. I mean, maybe a little bit of fraying in
It's a dual mandate.
Yeah, right.
I don't think that the slowing economy side of that, or the unemployment side of that, is as much of a risk right now as the inflation side. So I don't know why they do it. Why am I? Why are they disagreeing with what I think?
I mean, we are seeing a slowdown in some of the
Where?
really hot measures. Well, I mean, if you look at like delinquencies, they're slowly rising from super low levels. The consumer looked ultra healthy, and now they look slightly less healthy, but still great, right? So I think that a lot of these factors, when you look at them, you know, just over the last couple of years, you can point to a number of macro indicators that are slowing, but they're slowing from really, really healthy, kind of aggressively healthy levels. So, you know, again, when I look at the world, I think you got to be prepared for anything, especially a resurgence in inflation. My favorite part of the U.S. equity market, I have one trade for you, and it is the large cap value benchmark.
Okay.
It's very unsexy.
Can I hide
Nobody
there?
talks about it. What's that?
Can I hide there? Is that?
Well, it's not even to hide. I think this is going to be a great performer over the next, you know, cycle. Because if you think about it, these were companies that were deprived of capital for the last 10 to 15 years. It's energy, big financials, regulated financial companies that weren't allowed to grow, energy companies that were forced to, you know, pivot from production to cash return. So they're now really healthy. They're you know, I mean, I'm a quant, so I look at all these numbers. What's surprising to me is if you look at just the earnings volatility of the value benchmark versus the growth benchmark, usually growth stocks are safer and you get safer, kind of more predictable earnings growth. Today, growth stocks are riskier and value stocks are safer. And I think it's because value did the opposite of growth. They shored up capital, they cleaned up their balance sheets. These companies were basically kind of schooled by investors to cut capacity and consolidate. And today we've got this super healthy, high quality, cyclical sector with 3 pro-cyclical things that just happened that, you know, we mentioned earlier. I mean, I kind of feel like this is the perfect setup for large value to just really crush
I had a
it.
flashback because you switched to this thesis. How long ago was it? About 8?
6 months ago.
Was it 6 months? And
Yeah.
I remember how excited you were.
I was really excited, and I mean, so far so good, I have to
So
say.
it's been working,
Except
but
for
there's
the
more,
last
it's been
month.
working, but there's more left.
I think there's a lot more to go. I mean, if you look at value versus growth, we've had mostly outperformance from value stocks. It pays to buy cheap stocks. The only time it didn't work to be a value investor is when rates were 0 and cash was worthless. And it's like, who cares if I'm making free cash flow? I can just buy anything with a 0 hurdle rate, borrow money for free, do a lot of crazy things.
That is an excellent point.
Right?
So,
Yeah.
We're not going back to 0 rates.
Unless we're going to 0 again, I say
The Fed's about to
this ends
stop.
now.
Yeah, the Fed's about to stop cutting rates.
Exactly.
Maybe it pulls it forward in terms of the thinking on it.
If I were the Fed, and if I, you know, it's still being like pilloried for staying at 0 for too long,
Yeah.
right? And for letting inflation out of the bag. And you look at the results of the election and what it did to the Biden administration. Everything that they say was great that happened, but when you throw inflation in it, it like cancels almost everything out because you know average wages are still down. If I knew how insidious it was to the average American, that would be front and center for me all the time. And
controlling
where
inflation.
we are right now would not give me the
Solace.
confidence
Yeah,
to cut.
yeah. I mean, I
That
think
would be
that's a
job
great
one.
point.
That would be job one, not letting that come back.
Come back with a vengeance. I mean, I think that there are enough maybe counterbalances to really kind of keep
You
inflation
think it's
at
equal?
bay.
You think it's equal risk? The dual
I mean,
you think?
one could argue that we're still in that, you know, kind of environment where there's tech, which is disinflationary. So there's
Really?
AI, which is potentially
Okay.
going to push down wages in certain pockets of the
Productivity. So
market.
productivity cures are.
I mean, that's the theory, right? I
I
think
know.
there are parts of the economic spectrum that could really reflate quite quickly, especially because we've got this massive reshoring initiative and manufacturing is now
Tariffs
happening
and
here.
tax cuts and
tariffs. I mean, I don't know if tax cuts.
deportation and-
I think tax cuts are actually disinflationary.
You do?
Yeah, because when you
Not
look at
the
what
deficit.
happened.
If the deficit widens, they're not.
The deficit widens, but then theoretically there's better growth. And then also, the last time we got a
God, you're a
corporate tax
supply
cut-
sider. When did this happen?
Hey, I don't know. I mean, I've been
Who'd you
doing
vote for?
long enough. We can't talk about who we voted for, Joe.
right.
Come on.
You like tax cuts.
But look, I mean, last time we got tax cuts, companies basically pass that on to consumers through lower prices. So it's disinflationary. I mean, I think for everything that we're talking about that's inflationary, there's actually a disinflationary counterbalance. If we start producing LNG, like exporting LNG again, that's disinflationary, right? I mean, so I don't know if we see like a massive upsurge in inflation. I don't think we get stagflation. I actually think things are going to be okay. We're going to have a good economy. We're going to have reasonable inflation. Real rates are going to be positive, but not too high. I mean, this is Goldilocks, but nobody wants to admit it.
Right, very good. Savita, MAGA, Subramanian, with the stock box, they will.
Don't make me laugh.
Thank you.
You're laughing.
It
How's your mouth?
It
How's the
hurts.
mouth? She's laughing again. She didn't
Thank
really,
you, Savita.
you didn't really complain when I called you that.
I didn't. I mean, I actually didn't hear what you said, which is
Exactly.
probably
It's better. It's always
yeah,
better that
I think
way. That's how I usually shut up, right? I just try to.
just try to fake
On that note, we're going to move along. When we come back, drone sightings continue to be seen across New York and New Jersey. We will bring you the latest on what the FBI is saying next. Squawk Box will be right back.
Now.
Over New Jersey and adjacent areas pose a national security or public safety threat. The agencies also said they had no evidence of a foreign nexus to the drones. They said that upon review of available imagery, it appears many of the reported sightings are actually manned aircraft operating lawfully. During a hearing on Wednesday, New Jersey Congressman Jeff Van Drew suggested that Iran was involved in the drone flights. The Pentagon denied that assertion, and then yesterday, the congressman accused the Pentagon of lying. So, no answers still to come on this. What we keep hearing from officials is, we don't know what it is, but it's safe, don't worry about it.
So strange.
I mean, even if a couple of them are regular
I'm sure some of them are.
We know for sure, right, but we know for sure that some of them aren't. So
Yeah.
that's
Very peculiar.
That's very weird. The only, I mean, taking the optimistic viewpoint, we know what they are, we're doing this, we got some really incredible stuff happening, high-tech,
Hopefully
top
it's our
secret
military.
stuff, and hopefully they, you know, that if they told us, they'd have to kill us.
But that would be the only thing that would describe, that would
But if they're clueless,
make it sense
they're
for
truly clueless, like the
Right,
China
if we really
balloon.
don't know what this is, then you can't tell us it's safe. If we know
Right.
what it is, but we just can't tell you what it is a different answer.
Well, why can't we be riding around on drones like that instead of sitting in traffic? That's the next
They're
thing.
not that big.
You could sit on top of one of those things, couldn't you?
Not without grounding it. You
A
could
little
throw a
bit,
couple
I
hundred
think you
pounds on
could,
it.
a little bit bigger. Get in here quicker.
I'd like to see you riding it like gravy.
Yes, exactly. Coming up, the CFPB hit with a new lawsuit from the Consumer Bankers Association, this time over its $5 overdraft fee cap. We're going to talk to CBA head Lindsey Johnson for the latest. That's next. Squawk Box will be right back.
Welcome back to Squawk Box. The Consumer Bankers Association now filing a lawsuit against the Consumer Financial Protection Bureau following a ruling on limiting bank overdraft fees. Follows the announcement of the lawsuit. The CFPB saying Americans are, quote, sick of paying billions in junk fees. This rule is common sense and long overdue, and, quote, it's unclear why big banks are scared to be transparent with their customers. Joining us right now, Consumer Bankers Association President and CEO Lindsey Johnson. Make the argument, Lindsey. Make the argument.
Well, thanks for having me. And I just, I just want to say this is one of those services that is offered by banks to their customers as a courtesy, really helping millions and millions of consumers meet their funding needs. And if they've got an emergency funding need, if they've got a shortfall, if they just have more month at the end of their paycheck, banks are there standing in the gap for them. And before this administration ever took office, well before they ever took office, banks were innovating and they were competing like crazy to make this service more available and more cost-friendly for consumers. Since before the pandemic, starting around 2019, overdraft revenue has fallen by about 50% because banks, especially the biggest banks in the country, are offering things like 24-hour grace periods, de minimis amounts on overdraft, up to $50 in some cases, which really have brought the overall number of instances where overdraft is occurring down significantly, all to the benefit of consumers, all without rules, all without regulation. And so this just seemed like another political messaging talking.
Well, so Lindsay, here's the question. Do you think, and maybe it doesn't require regulation, but it requires some kind of self-regulation, which is, I think, where you're going with this to some degree, but there still is an issue, which is that there's, in some cases, as you said, there's grace periods and the like, but there's also almost, in some cases, also a lack of disclosure, or it could be made super apparent to the customer in ways that it isn't. There are some banks that'll notify you immediately. There's some banks that won't notify you immediately. The question is whether there needs to be rules of the road that are in place that everybody needs to follow.
So, one, I would just say that banks are one of the most highly regulated industries in the world. And disclosures are made up front. When you sign up for your bank account, you are given disclosures right then about what the fees are. Oftentimes, especially for debit card transactions where you're transacting for an ATM or a merchant, consumers are required to opt in to incurring an overdraft fee if they are overcharging on their account. And they're also able to opt out anytime. So having those disclosures, to your point,
I'm just suggesting,
is really
look,
important.
There are some institutions which will text you and send you a note. Say you're in overdraft land now, and you have 24 hours grace period. Those banks, great, right? That's very, very helpful and very clear. There are other banks that don't do that, and the question is whether they should. And yes, there's lots of language that everybody agrees to when they get a bank account these days, but most people do not read the entirety of it. I think we'd also agree on that. So
there's, again, 4,000 banks and 4,900 credit unions and fintechs that compete in this space. And you're right, I think it's going to force banks as more and more of these banks follow what a lot of the leading banks have been doing. More of that competition is going to force other banks to do the similar things. What this rule did not do at the CFPB, it didn't have anything to do with that. It was the CFPB coming in, overreaching and overstepping their authority, and instituting government-set price caps on products that are offered to consumers, really not taking into account the harm that's going to come to consumers if they lose access to that important source of liquidity.
So what do you think? I mean, I know what you think the right answer is, but is there an upper limit? And if there's not an upper limit, should there then be some kind of disclosure requirement or other kinds of thing that would try to help the customer? And does there need to be an actual framework for that?
Look, again, I mean, I think that one of the most important
Lindsay,
things,
just one other point, which is this. The problem is, yes, hopefully competition forces the banks to do these types of things, because you'd think, okay, customers would try to go to institutions where they serve the customer better. But that doesn't really help the customer that gets in this sort of negative feedback loop, and then all of a sudden has these massive fees that they have to pay that they didn't realize or didn't understand or didn't expect, even though, yes, they signed the piece of paper.
So I do think that consumers understand. You know, look, 76% of frequent overdrafters have said that they were denied a credit card. So then, and maybe currently, they don't have access to credit. We know that 26 million Americans don't have access to credit. So for a lot of those individuals, these banks are standing in the gap for them and offering this service, and they're looking at their portfolio of customers and they're trying to understand, how can we offer this across the board to our broad base of customers in a way that we can still manage our risk, in a way that still is very hopefully cost-friendly to the consumer. And again, I think that this is one of these issues where the CFPB has a pretty short soundbite talking point that they can say we've just capped overdraft at $5. But in the end, a lot of consumers may lose access to this really important safety net.
Okay. Lindsay, want to thank you. Wish you happy holidays. Talk to you soon.
Thank you very much. Thank you.
We're coming up a final check on the markets ahead of the opening bell on Wall Street. Plus, breaking news on buy now, pay later company Affirm. And we'll get that from Leslie Picker. That's next. We'll be right back.
Oh man. Breaking news just out right now from buy now, pay later company Affirm. Leslie Picker is here. She joins us now with more.
Hey, Becky, good morning. Two trendy areas in finance, fintech and private credit, coming together in a new multi-billion-dollar joint venture. Affirm just announcing its largest ever capital commitment with a new partnership with private credit firm Sixth Street, which is investing in $4 billion worth of loans over the course of 3 years. Sixth Street will commit capital up front for Affirm to underwrite short-term installment loans. These are between 4 to 6 month timeframes. Once paid back, the capital rolls into a pot to make more loans, which amounts to more than $20 billion that Affirm could extend over the life of the deal. Now, I'm told by people familiar with the matter there is a ramp period. They won't start selling loans until 2025. As private credit has exploded in recent years, alternative asset managers are increasingly looking at non-bank fintech companies that invest that capital, and fintech firms are opting for what they see as more efficient and diversified sources of funding that they can scale up or down based on demand from their end users. PayPal, for example, recently announcing a similar deal this summer with KKR for loans they originate in Europe. Affirm's funding capacity has grown 130% to nearly $17 billion over the last 3 years, and its gross merchandise volume growth for the first 9 months of the year was 34% higher than last year, but still below 2022 levels, guys.
All right. Leslie, we don't have any time. Happy weekend, Leslie, and happy weekend to everyone. It's Friday the 13th. Yeah, make sure you join us next week. Squawk on the Streets next.
When President Reagan was here, he talked about putting the bear into hibernation, letting the bull run free.
Yeah.
Sound like a good motto?
Sounds perfect. I can't do any better than that. That's what we're going to do.
President-elect Trump with Jim yesterday here at the New York Stock Exchange as markets continue to try to price in some changes of a new administration. Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer here at Post 9. Favor as the morning off. Futures fairly steady on some solid corporate results. 10-year yield, though, up every day this week, now at the highs of the month. Our roadmap begins with a Trump transition, the future of SALT, the FDIC, some new trade threats from China and Canada, Broadcom surging on the cusp of $1 trillion market value, and UNH's CEO with an open letter this morning saying the health system is flawed and needs to be fixed. Let's begin, though, with the president-elect's historic visit to the NYSE. Jim certainly made the rounds on the wires, and he did break a fair amount of news both here and upstairs.
But look, I think that we could talk crypto. He obviously feels it very important. It's really important. We had that nice soundbite about the bear. But I thought the most important thing was China. Starts out, I have a good relationship with Xi. Now, that was not what I was looking for at all. I thought this was a chance to say, listen, I don't like the way I've got my hawks basically telling me, look out. He has a lot of hawks. And then he says, look, but if it doesn't work out, I know you guys have done bad things and whatever. It's almost as if he said, you know what, I'm going to personalize diplomacy. I'm going to be like Nixon. I'm going to be like Kissinger. I have my advisors, but I am going to make this to be President Xi, you're going to deal with me. It was almost like I expected either an invitation to the inaugural or an invitation to Mar-a-Lago. And that there was definitely something that he was signaling. That was not idle. And I think that those who think that that wasn't the most important part of our interview may not realize that there's something afoot here. I think that the president is saying we have to end this trade war one way or the other. We end it good by making so that the U.S. wins because you need us, or we end it bad. And if we end it bad, then you're a loser and we may be okay. So I think personal diplomacy is coming up.
That's interesting. Certainly after the reports of the invitation to Xi to the inaugural, which we now don't think is going to get accepted. But as a reminder, here's what the president-elect did say, Jim, about that yesterday.
We have a lot of talks with China. We have a good relationship with China. I have a surprising relationship. Now, when the COVID came in, I sort of cut it off. That was a step too far. That was, as they say, a bridge too far. But we've been talking and discussing with President Xi some things and other world leaders, and I think we're going to do very well all around.
Now the Journal weighs in with China's moves on NVIDIA and drones and minerals, and then Canada, this report, they're weighing in export tax. How do you think other countries are responding?
Well, I think that they are either they're bluffing and being tough, or they're going to roll over. I think that this man's coming in with a mandate, and the mandate is, in his eyes, that Biden screwed everything up, and I'm going to make it right. Biden screwed up China. Now, it's really, he was President Biden, very tough on China, but he screwed it up, but I'm going to fix it personally. I am going to take on every trade partner who we did not have a good relationship the last 4 years, and I'm going to fix it. And this presidential personal diplomacy is new for us. We did have Nixon going to China saying, listen, I'm the most anti-communist person ever in the government, but I'm going to change this. But I think that there's more to what he's saying in terms of of what he intends to do. And he played a different card yesterday. I mean, look, I have friends who told me, who was that man? That man is someone who's forgiving. That man is someone who is humble. And some people say, Jim, you really played. And I told them, well, I did not use the words that I can't really say what I said about that here because I'm not a thug like I used to be, and I like that I'm not. But I do think that there was a sense that maybe you can be forgiven, you can come, you can pay $1 million, you can do anything you want. I will not let you win against our country, but we can make a deal. And I think China, where he is with China is his hawks, the Peter Navarro's of the world, whom I've known for 50 years, are basically saying, listen, they're on the precipice, China. We have to push them over. And I think what he's saying is, you know what, I have a good relationship. Maybe we can make China better. or make them pay.
That's interesting. I mean, there are threads you can build that we have them on the ropes. We have the Middle East on the ropes. But then this big report yesterday at the Council of Foreign Relations looking at the partnership between China and Russia, which they argue is a monumental threat to this country.
Well, I think, look, this is not the Russia of April 1945, for heaven's sake. This is not when Eisenhower's saying, you know what, we'll let them go into Berlin. Come on. The other articles in the paper tell the truth. Russia's in a massive retreat. The deal that I think the president's going to make with Russia isn't going to be favorable for Russia.
Well, I'll quote the NATO chief yesterday. We're not ready for what's coming in the next 4 or 5 years. It is time to shift to a wartime stance. That's the kind of thing I'm talking about.
Well, okay, then let's get Palantir on the phone, because it's not going to be its traditional kind of war. I think that I think the negatives and the doomsayers are going to be surprised. NATO, what are the countries in Europe doing? They're going from 2% GDP to 3% GDP. Is that because of Russia? No, it's because of Trump. They're more scared of Trump than they are of Russia, for heaven's sake. I think Russia is looking at the Syrian situation. This is not another station. I'm looking at it from the point of view that Russia's out of money.
A gas station with nukes. That's what McCain once called it. Really quick on this last point. If geopolitics didn't harm the markets this year materially, do you think that changes in 25?
I think it's hard to imagine what it would be like if China were to say, you know what, we're not going to build we're no longer going to saber out, we're not going to keep building aircraft carriers. We got to get back to bringing U.S. business here. And I think that there'll be a price to pay. We don't have it yet. I do feel that, I'm much more bullish after what I saw yesterday, bullish about the world. It was hard not to be. I think you have to be a nihilist not to feel more bullish. And I'm not a nihilist.
Well, there's a lot. It's going to be very difficult to price some of these changes in because big changes are headed our way.
I remember when Reagan came here. And listen, for Reagan, it doesn't matter for that, but I said was like, holy cow, I got to get long. I got to get everybody long. I got to get long tech. Now, tech at that point was like, I was trying to bring the Microsoft deal into Goldman, and I got that deal, and they never gave me the gross credit for it. And I've never forgotten that.
Which is why...
That's 40 years I never got the gross credit for bringing in Microsoft.
When you said to him, should people buy more stock, he said, I don't want a situation where it becomes a dip. That was interesting.
I mean, before, I think he would have said, what do you want me to do? Should I just take it up? Well, which one should I take? You know, we were a little more boisterous in the old days, both him and both me. But this was he did not claim to be able to say, listen, I'm going to do well, the market's going to go higher. He was, again, there was humility. Now, no one wants, there are so many people here that are so cynical these days that they could just say, you know, Jim, what are you listening to? And I'm saying I listened to a guy right there. I read an article in the New York Times that said it was the best day ever for Trump. And maybe that's true. But that piece was devoid of cynicism, too.
Right.
Maybe be a little less cynical. You can be a little ironic. Be a little less cynical.
Well, we're going to watch it closely. As for the micro today, Broadcom is a big story, surging in the pre-market. Company issues some stronger than expected guidance, posts an earnings beat, some AI demand in there. This is Hot 10 on the call last night.
In Q1, we expect the momentum in AI connectivity to be as strong as more hyperscalers deploy Jericho 3 AI in their fabrics. Our next generation XPUs are in 3 nanometers and will be the first of its kind to market in that process node. We are on track for volume shipment at our hyperscale customers in the second half of fiscal 25. Turning on to server storage. From its bottom 6 months ago, Q4 server storage connectivity revenue has recovered some 20% to $992 million. And in Q4, we expect server storage revenue to continue to grow.
Got a little div hike in there. Key goes to 260.
I mean, talk about $60 to $90 million, not total addressable market, but a service addressable market. This man has this company's $1 trillion company, and he has got some remarkable orders from Google, from Meta, from ByteDance. Now he's talking about owning, and this is my read between the lines because he did not name these people. I think he's got Apple, he has OpenAI. Now Marvell, you'll see that's up 6. They have Amazon Web Services. They also do business with some of these others. But this was a combination of AI is not only real, but $60 to $90 billion real. But he's going to get his fair share. Marvell's going to get their fair share. You can't knock NVIDIA. There are going to be people who say, well, wait a second, is he impinging on NVIDIA? What he's doing is, if you have you can have chips that have inference, and he can come in and make them better. But remember, Marvell is Amazon. That's the big one. Marvell has that, and that's Matt Murphy.
And isn't that a net negative NVIDIA story?
He also is big partners with NVIDIA.
Right. Frenemies everywhere.
Yeah.
You know what we didn't mention yesterday was in all of the Time Person of the Year stuff was Lisa Su being named CEO of the Year.
You know, where was that? I met with her, I had dinner with her when I was in California at her table when that was announced. Okay, so this is a really important story. AMD is not winning right now. NVIDIA is winning right now. AMD does not have a big business that I was hoping they would have with Amazon Web Services. My Chapel Trust owns AMD. It's not been a good position since we got in. Previously had it. But she does have lots of other stuff that's in, that is certainly in the data center. And she does have the number 2 GPU and the graphic processor unit that NVIDIA dominates. And I have been after her to be able to say, please give me something big here. Give me something big. And I think what you get is something big is she crushed Intel. And Intel was, we forget what Intel was like. I mean, when Advanced Micro were at 10% of the market and Intel at 90%, Intel was always worried about the Justice Department, not a Biden Justice Department, which basically said, we hate anyone who makes a lot of money, we hate the rich. Which was like kind of like, you know, give me a break. Trotsky Justice Department, give me a break.
Yeah.
But no, AMD, she beat Intel, but she has not beaten Mark.
No,
she has not beaten NVIDIA.
But the piece is largely about the scope of her tenure. When the stock was 3, and she had minimal data center chip market share.
Look, when stock was at 50 and Intel was 55, 60, she took me to dinner and dismissed everybody and just said, I'm about to take you to school so you understand how wrong you are. And I just sat there, and at the end I just said, short Intel, long AMD. But you know, I came home, and she's from Queens like my wife. And I said, man, there's 2 women from Queens, and they really know me. They really own me now.
There's some good color on how tough she is in the piece. When we come back, the CEO of United Health Group writes this opinion piece in the New York Times calling for some reforms to the healthcare system. Take a look at the pre-market here as we continue to build on the mega cap strength of the week. Triple Q's now up 30% for the year. Don't go anywhere. The healthcare system is flawed. Let's fix it. That's the message United Health Group CEO Andrew Whitty is sending today in a New York Times opinion piece in which he mourns the death of United Healthcare CEO Brian Thompson. In response to social media chatter about health insurers, Whitty says, quote, "We know the health system does not work as well as it should, and we understand people's frustrations with it. No one would design a system like the one we have, and no one did. It's a patchwork built over decades." Jim, there's also a good piece in the Times today about Thompson himself. Growing up in Iowa, didn't get on a plane until his high school years, and really, as he's laid to rest, it was a sad story.
There was a fellow by the name of Michael Neidorff. He used to be a regular guest. He passed away. He was on Centene. And Centene worked to be able to lower the cost of the system, but raise the quality. In each state that he was in, he always talked about how the ACA, Obamacare, if there was more competition allowed, had the Republicans allowed there be more competition, there would have been much lower prices, more competition for the customer, and that was the major flaw of the system, particularly for Medicaid. I come back also and I say, well, okay, CVS, we have a bipartisan effort to make CVS give up its PBM. I mean, and people would say, well, what is that? How did they have that? I mean, there's just every single aspect of this business has people pointing fingers. I mean, I got people who say, listen, the problem is McKesson. And McKesson says, listen, we're the answer. And problems with Cencora. And Cencora will say, listen, we are the way that small business drugstores are in business. I mean, there is no comprehensive system, but I always thought Neidorff was true north by just saying, look, we need competition. And competition is the American way, and we don't have any.
Right.
Not real competition. I know the Justice Department was unhappy with United Health.
Yeah, we don't really even know whether this would-be assailant, this alleged assailant, was insured by UNH.
No.
That's not been confirmed.
No.
So any of these charts, CVS is a good one and UNH too, look enticing in any way from a strict price standpoint?
Look, I think that United Health just is if no one takes them on, if say the antitrust department, antitrust division, Justice Department, they could take on United Health, and then I would sell it.
Even from here.
Yeah, but this would be the case that the Justice Department would win. I mean, that's what this man died. I mean, I was a homicide reporter for a long time. I've never seen a sympathy for a killer.
It's remarkable. We haven't really mentioned the posters that have gone up in some cities.
This man was killed. He was murdered. What the hell?
We'll dive into the story a lot more. Certainly some deep issues in healthcare this morning and in biotech, which we'll get to as well. Some news on Lilly. We'll get Kramer's Mad Dash, countdown to the opening bell. One more look here at the pre-market on an eventful week, as you know. More Squawk on the Street in a minute.
Oh, wow, the thing ain't up. What the hell? I left toll up all day. Well, that ain't gonna look good. Morgan downgrades. Oh, shit. I'm gonna get out of it. I get an upgrade, and then I get a downgrade to 150. It's the expected November PPI. I don't know. I'm gonna have to add.
NBC.
Fuck. Well, it's gonna be a loss. Good morning.
We do not expect a negative impact to margins as a result of the most recent communications regarding the potential for increased tariffs in 2025.
Way to start the day.
We've been proactively moving sourcing away from China over the past several years with the expectation of fully exiting the country by the end of the second quarter. We are also transitioning products manufactured in Mexico and believe we can successfully reposition our sourcing with no disruption to the supply chain.
Gary Friedman of our age, as Jim is watching that in his mad dash.
Look, there are many things that the dudes play. I've had Gary on a bunch of times, and Gary had to deal with the idea of pulling out of China. He was most concerned about the quality of what happens when you pull out of China. What happens to the quality if you go to Vietnam? He was not initially happy. He's been working on that. He's been very much in sync with what Trump expected, so he's not blindsided. I would tell you that in a market where the worst housing markets, he would say in 3 decades, he pulled it off. This is finally there. A lot of his European expansion is good. In America, it's been turning. It's well ahead of where I thought it was going to be, even last quarter. My hat is off to him. There's a gigantic short position. Now, some of it gets to convert, but Gary bought so much stock, and people just felt he was rolling the dice. But Gary knew his business, and I think he's a delight. I think he's a competitor like none other. And congratulations, Gary.
Yeah. Orders up 13 and accelerating into November. I think they were up 18.
I thought that he was going to look. I knew because I had him on last time. I could see the trajectory, but there were people last year who felt it was going to be to minus, just minus. And Gary willed this. Carl, he is an inventive. If you ever tell him, like I told him, I like these chairs. Like send a picture of the chairs. Tell me about the chairs. Where are they? How do they look? Blah, blah. I mean, the guy is so competitive, and he really thinks that everybody else has no clue of how to do his business. They're not furniture. They're pieces of art.
Yeah.
He always quotes Picasso.
A lot of streets catching up. Telsey moves from 330 to 440 this morning on the heels of that quarter. Yeah. Opening bell's coming up in a few minutes. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Well, my toll trade didn't go out too hot. Let me see here. We got 2 minutes left. Well, I'm at my bottom support on toll, so we'll see if this thing holds right here. I might just see how cheap it is and scalp it.
ServiceTitan entering its second day as a public company after giving a boost to the IPO market yesterday. The cloud software vendor coming off a 42% gain in its debut at the NASDAQ, Jim. You've been talking about whether or not these guys, names like this, are going to start stealing some oxygen.
It's really good to see. If you're a bull, you needed to see deals being done, priced to move. Price for the people who buy. By the end of any sort of cycle, it's the opposite. You get hurt if you buy. We are now at the early part of what I think is a new cycle. I think that the brokers have lots of deals lined up, but they're saying to those who want to come public, look, we're not going to get the price you want. We got to get this deal done, but the buyers are going to have to win. And that was an example yesterday where the buyers had to win. There'll be a bunch of these deals before you are saturated by the deals where you will lose if you buy.
Right. We talked to Lynn Martin yesterday, who said the pipeline is encouraging, and it's kind of hard to argue with market conditions right now. Wouldn't you say?
TTAN. I got a pipeline trade I'm going to be looking at.
One of those companies that's not
3 of
make
them.
money for years.
Plus this one.
Does enterprise software? You don't really. It's just one more company that does analysis and some cybersecurity and blah blah blah. No, I mean it's got a legitimate working person cohort that's.
Stocks identified by our unique algorithm.
Okay, we got SPX broke out. SPY didn't break out. SPY dropped. Oh, yeah, it did. And we got the IWM. We got a double bottom new low on IWM right here. Double bottom. So I'm going to watch IWM. Toll. AVGO had good news today. January 17. No, something ain't making sense here. Oh, yeah, it is. So I'm not down that much. No volume. SPY. We got a double bottom on IWM. AMD's pulled back to support. AMD, watch AMD. Watch AMD, see what kind of news it had. AMD, Meta. And we got NVIDIA at the 200. Then we got Tesla to watch. I'm going to see AVGO is Broadcom. They got some news. Guidance. And then do the Fibonacci setup on that, but watch AMD right now. Toll Brothers spread's way too wide for me. You gotta wait for that thing to tighten up before I jump in it. That's kind of odd. I fucked up on that trade. So AMD. Hurry up. AMD, today's the 13th, so next week. The 130 strike. Definitely at my support right now. Mike, you got AMD on watch? Are you in here? NVIDIA, AMD, Taiwan, Semi-Gain, Broadcom, Micro Devices. So I don't see any reason in here for. And then we got TSM. They were pumping that this morning. Okay. Adobe pulled back some more. If I heard the fat cats we're still pumping this up. Oh, there's a dang, I knew I should have got that yesterday. SOUN. Ugh. That sucks. So we got a J hook on AMD. We got a snake breakout on SPY. Friday the 13th. Pot stocks ain't moving. AMD's up 20 cents. The 130 strike. For next week. SPY just broke above the VWAP. What's IWM at? What happened here? Oh, there it is. Get the ready, set, go on the SPY. We got a 1, 2, 3 draw here. December the 16th, the 607s. AMD now is at 233, so it dropped more. Oh yeah, I'm at my support here at 127.72. That's what I had on here. We hit 127.75, so I'm 3 cents off. These are the 130 strikes. I'm going to grab some. $133, $233. $233. Oh, strikes at 130. Put a tight stop. I'm in AMD right now for tight stop. So we're at 252, and I got 5 of these. I'm up 100. We've got to break the 9. Dolby on the sizzling index. Meta. Dolby on top. Well, let me see here. It might not be the correct. AVGO, Tesla, Apple, Mr., Amazon, and Microsoft, with AVGO having triple the volume of the previous predecessor. I like it, AVGO. Gonna wait for it to pull back. I ain't gonna chase it. Okay, I'm at 258 now. We're moving. We got a double top coming, and we got probably that first crow. And the TTM squeeze is working. We're at 162. Okay, now we got SPX here topping out. We got a head and shoulders on SPX. Well, that ain't right. I'm at 261 on AMD. I can get out now. This thing might run to 280. Boom. So we're above the shoulder line on SPX. No, we're not. That's a triple. That's the overhead resistance. That's the shoulder line right there. We're at 260, 270. Okay, I'm about ready to get out of a. Oh shit, man, that thing dropped. I was getting ready to sell it. There's 270. We get to the 21. Anybody else take his trade with me? You missed it? There we go, right here. 277. So we broke the 9, we hit the 21. It's $200. Got my first trade out of the way. And it'll probably go higher. Damn it. There's my 281. Well. Oh, well. It's all right. Fuck. Damn thing's acting up again. They've done something in this ass upgrade. Out at 277. AVGO. We're getting ready to squeeze again. SPY hit the upper, broke out of a rising wedge. So the rising wedge now becomes support. Oh, dang, man. I'm going to have to use different. If this keeps acting up, I'm going to have to get me another different charting platform because I can't play around. My computer doesn't act up until it's this. I'm going to set an alert right there where I had that 606.83. Yeah, it's got a delayed reaction. Takes about 3 seconds, 4 seconds. That's too much. And we just hit my support. So SPY 607s. There it is right there. We're going to see if this thing holds. This is SPY 607 strike. I'll order 10 of them. This is for December the 16th. We're at the 200. So this is do or die right now. If it doesn't hold, we got the VWAP. And it went below support, but you know, that could be just because we hit the 200. Go get my water. Yeah, this really sucks. This platform. Yeah, it's too late. Platforms that got me in uproar right now. Three stocks to look at today. I'll just wait. SPX pulled back to my support level. Sounds pulled back. Josh Brown review. Spotlight on SoundHound, annoying the surge. And then we got affirmative action too. Got some kind of deal. AFRM. Firm Holdings. The $4 billion, invest up to $4 billion in Affirm loans. 6th Street to invest up to $4 billion. It's a loan deal, private credit on from 6th Street. And then where's my toll? Toll's tightening up now, the spread. This one got downgraded today by JP Morgan, so I'm kind of down 200 on it. 400. So I got a 5 weeks. but I don't know. Take off my shoes. TQQ's up today. Marvel MRVL, another good one. It's up. Mondelisa, am I right? Marvell. Man, that's had a nice run. $11, $12. And I haven't looked at Tesla yet. We got Mara up 60. Damn, I missed the dip. That would have been perfect. Well, that'd have been a good one. Spies at $1. The 607 strike. So I think what's SPY real close right here. Running in on the double bottom, high or low. 1, 2, 3. It's almost straight across, 60602. So we've got the 607's at $1. The SPY 607's at $1, about to hit the VWAP. $113. December 16th. Now we're back to 97. So we got a hold right here. We had a chance to get it at 97. But I don't know. We got a double bottom. High or low. 3 black crows. Inverted hammers. And hammers. If this doesn't hold, I'll jump right out. $0.93. Okay. God. Another 3 black crows. This sucks. Texas aligns with Trump's Bitcoin strategy. Taiwan Semiconductor, they were talking about the new plant this morning. I've got an average of 97. Breakout. Got big long leg dragonfly right here. Or a hammer. And a hammer behind it. Look at toll. Got to add the toll. 150. Spread's still kind of 20-cent spread. Glad I only got 2. Tesla have 427.50. There's support right now at 423.20. Yeah, I gotta get out. This ain't gonna work out either. Fuck. The SPX is at the 200 EMA. We're getting close to the bottom support at the 200 SMA. Still in them. The SPX can drop and hit the 200. So we'll just wait for it. Yeah, it's not looking good for nothing here. GME's down 35 cents. AutoZone up again. You had called the bottom of the channel when I did the earnings. Okay, we're getting close to the 200 right now on the SPX. My favorite trade. SPX. Okay, we're here. December 13. The 60.75. We'll see what happens here. Watch the VIX. What's going on in the room? SPY on the 200 on the 5 minute? Yeah, I need to look at that. We got the 1 minute here on the SPX. That ain't working either. I'm going to load these boats here when it's ready. It didn't hold it. It's not going to be a good day, I don't think, for the market. Baba new low. PDD's getting to my support. It's China. I got 140 bucks. 140 cents. Okay, we're back above the 200 now on the SPX. And 320, the 60.75 at 320. Friday the 13th. Just giving it a shot. Yeah, I'm freezing. 73 in here. I got to put on my jacket. I got these at 320. Ah, darn, man. Knocked right there. It's not going to be that kind of day today, so I'm going to give the market a little bit more time before I start trading anymore. I'm in these right here. The SPX, December 13th, strike 60.75 at 320. We're up. There's 370. Randy, are you in it? Man, these things ain't holding up very well. Break it. I gotta turn the heat up a little bit and put on my sweater. Don't want to freeze while I'm trading. It's not cold in here. I'm just cold. There's 420, baby. Now you're talking. You scale out. Randy. 420, baby. Give it to me. I get out now. I want 420. There it is. Bam. Bam. There's $500. Oh, I was looking at the wrong one. There's 21 over here. I was looking at the SPY. Now I had someone on Twitter said they trade the SPY and the QQQ. You can trade when I'm trading the SPX, you can trade the SPY right along with it. They work about the same, almost identical. So that was $500 right there. I can dig it. Oh, shit. Always clean this gym. Am I your grandma? Look at that knife. We can get right back in it here now. We broke out of the snake with a 1, 2, 3, and we're retesting $3. Getting back in at 3. So we'll come back and hit the 200 again. And the tight stop on this, if you don't hold the 200, I mean, we can double bottom, but I'm going to show you a little trick on the candle here. We got the snake, 1, 2, 3, 4, breakout. We got a little bit more. We sold it once it hit the 21. We pulled back. Now we got here at the 200. So the 200 has to hold, and we got higher low. I'm going to show you a trick here. Or at least a trick that I know. Take the body of that candle and run it to the body of that one. As long as we hold that trend line, I didn't even look at the SPY. Yeah. Still early. I can't remember what, I can't, the market sentiment's just not that bullish right now. I'm back in at 3 though. Randy, tight stop here, but this is the test back to the 200 once we broke out of the snake. So we got snake breakout number 3. That don't count, so it's 3. Pull back to support. So far that candle right there needs to break above here, I think. Oh, 265. Well, that didn't hold. I got 5 contracts at 3. Hold above that 200. I'm looking at the body. The body has to stay above the 200 here. What's Tesla doing? Tesla hit my resistance level. Dang, that would have been a good trade. $12. Got to watch that Tesla every day. There's my 2 double bottom, higher low. I'm going to add here, or I'm going to get out. Shit. This market's just pissy right now. IWM. Your inputs. What happened? Oh, you're in tight stop loss for me. I'm going to hold on to him here just a second longer. We got a double bottom off the wick. AVGO still looking good. Bitcoin's ETFs are all up. Starbucks is going to pay their people less this come around, raises. I don't think it has a chance anymore. It was a good company at one time until they got involved in politics. Yeah, it dropped pretty fast on me. I didn't have time to get out. So I'm going to cost average. Good luck or I'm going to have twins. K-Web is at the 200 on the 1 hour. JD's not, I need 104.50. Need another buck to dip. Come on, baby, bounce up. We're going to find out if we're going to be bullish on this thing or not. Taiwan Semiconductor. Texas aligns with Trump Bitcoin strategy. I'm going to go get my water going and get my warmness. I'm still in this one here. Kind of a fallen wedge. I gotta look at toll. Yeah, I'm fucked on toll, I think. Damn it. AMD's double bottom with a triple bottom. Meta give $1 million to Trump for his inauguration, and so did Amazon. Oh, NVIDIA, got a 1, 2, 3 on NVIDIA. Apple has a double bottom at a pivot point on Apple, 247.53. I'm screwed. Got a fallen wedge on SPY here. Okay. I'm going to end up with 30 contracts again. I got 85, 185. $1.85. I got 10 of them. They keep bringing up inflation. They think Trump's going to raise inflation. The fat cats do. Although we've had 4 years of him already. And we've had a 30% increase, 40, in some places, 40, 50% inflation rate. An average of 21 under Biden. Right now, as is. And they finally, for the first time, someone gets on there and says, government spending. If we can just stop government spending, inflation will go down. I think they ought to have a certain. I've got 185 and 320 here. Randy, you still in it? Not too good. Texas lines. Back to 185. Fermi down to 69. AMD dipped below my support level. I sold these earlier, so let's see what happens here. We got a fallen wedge, so maybe 126.50. Another dip on down. Snake breakout, pullback, higher low on the SPX. Average is 255, a little under that, 253. Break it. God, come on, you bit. I was wondering what happened there. We're getting ready to squeeze. We got a fallen wedge. 60, 62, 96. I'm gonna get my water warmed up and I'll be right back. If you're going to be like this kind of day, I'm going to wait later on. But we're going to have a rebound here. Adobe, I got 460.60. But this guidance on this was bad, but the lady talking about it this morning saying, well, it's still a good company. And she loves to buy the dips. But they've lowered the price on this. BNP lowered the price to $4.25. So they could drop another $40. Yeah, I'm about fucked on this thing. Snake breakout with the wedge. What's RITM doing? This, oh boy, Tesla new high. It's holding up pretty well. RITM. MSFT. Got a flag on Microsoft. Oracle. Oracle was another one that got beat up. It's got a new low. I got 172.60 waiting for it. I'm still in the SPX here. I'm going to set an alert just right above that. On Oracle. Got an inverse head and shoulders here on the SPY at 604.76. Seven, 8 in that area. Yeah, this ain't. Meta hit support. We got a triple bottom on NVIDIA. Baba held the 200. Yeah. Yesterday was not an easy day. I don't want to go through it again. I sat in that trade yesterday for, what, 2 hours? And then in and out of another one and made my money back in 5-6 minutes. So we just hit support on Oracle, and this had bad earnings. Triggered. 172.60. We hit 172.60. And cost. And shop. And square. Square hit my support level. Probably hit my alert. I had 93.50, I thought. And Macy's. And Nile. And Boeing. I don't know why our government's not telling us exactly the truth about these things that are flying in the air. I want Trump in here so bad. This is one of the least transparent administrations I've ever seen. There's, damn, 120. Okay, it's time to load up. Fuck. What am I not getting? I just don't understand. Something's happening. I gotta see what's going on, because this ain't good. That sucked. PayPal up over 45%.
Today.
We're having a lot of talks
QQQs are breaking down.
Relationship with China. I have a surprising relationship now. When the COVID came in, I sort of cut it off. That was a step too far. That was, as they say, a bridge.
VIX is really going.
We've been talking and discussing with President Xi some things and other world leaders, and I think we're going to do very well all around.
That was President Trump with our Jim Cramer yesterday, right here on the floor, that historic day at New York Stock Exchange, talking about the U.S. relationship with China as investors continue to monitor the chances of a trade war and just.
Oh, shut up.
CNBC's Beijing Bureau Chief Eunice Yoon is here at Post 9. What a treat. Great to see you.
You can't fight the trend. I mean, these guys think there's going to be a trade war. I don't think so.
Was she already the invitation to the inauguration? Right, but I think a lot of people are asking that question and really don't know.
Nobody knows. So, there ain't going to be no trade war.
First one is going to be $83.50. Second one, $76.25. Get a little bit
60-41 possible bounce.
Day moving average, but eventually it will catch up.
We got 3 black crows right now. So I'm going to scalp these suckers.
MACD is actually, once again, kind of range bound, kind of muted. But the RSI has actually been in a bearish divergence.
I got stopped out. I'm just pissed off right now.
One of those stocks that even if you're a bull, the consolidation wouldn't be bad. Let that RSI kind of catch up and then kind of push higher rather than
I traded the 60-60s yesterday and did. Well, there was a 60. Yeah.
Either the RSI correcting or price action correcting, one of the two. So the trend's bullish. Once again,
I'm gonna go make my drink, and I'll be back to start this all over again.
PayPal kind of steady as it goes, and the momentum not quite as like.
So far, it's.
Kind of shorter.
I made that $400 right in my first 2 trades, and
seems like some of the momentum, whereas this one
just lost 12.
The last one on the list, Norwegian, joining in Royal in its big run. And this is sort of a 4-month phenomenon, Jenny. Norwegian was at lows in August, so this has been a big
Why can't just buy the puts? Get that in my head.
I'm always curious when you look at the cruise lines, like why, for example, Royal Caribbean is up 88% on the 89% on the year actually, whereas Norwegian still having a phenomenal year.
Opportunities coming.
Months is only up like 33 and some change % on the year.
Yeah.
I think it's.
I got the 3 black crows here,
Norwegian has
and I'm gonna load up when I think it's ready.
So effectively looking to double, but Royal Caribbean has 68 ships in its
The
fleet, so it's so much
60-60s
bigger, so maybe that's where-
or the
I mean, like, we're
60-65s,
just
but
going
they're
to be
still
more of a
60-60s are three
I mean,
notches
Royal
out of the
Caribbean
money.
has that existing fleet. But Barclays upgrading shares today, 2 overweight from equal weight, price target raised to 32 from 28. And they said in a re-accelerating macro environment with a potential to lengthen the current cycle, all signs are pointing to another strong year for cruise fundamentals. And it makes sense to look further out on the cruise risk spectrum. They said that pricing data shows the strongest lift in Europe and Alaska summers as far as the cruise seasons are concerned.
We're back
They
at
also
that
see
support
Norway's
level. I
multi-year
used to
cost
trade
savings
that.
program as an additional lever to grow its earnings. So they see now shares having a pretty compelling entry point.
265.
They've obviously accelerated 82% off of our yearly lows. So we're sitting at 6.5% from those 52-week highs. Again, a chart you have to zoom out to see the full picture because we're not back to, I mean, all-time highs, yeah, whereas I think we are in Royal Caribbean. But I just think the size of these various companies, and go figure, Carnival is the somewhat in between, and it has 27 ships in its fleet.
I love those numbers, by the way. I guess I never realized that there's like less than 100 ships out there.
I mean, I would have guessed all these had hundreds. I had no idea that right now Norwegian's entire fleet is 19 ships.
They're definitely big ships, but yeah.
But that's it. You gotta get building. I know those things are very expensive.
The other ones are like nearing 30, but yeah, it's kind of fun to think about because we, talk about these a lot, and it seems like, oh, there's just all these ships everywhere all the time. Not really.
Not really.
Yeah. All right, KG chart-wise, similar to the other ones, right? I mean, all these are basically going up into the right.
Yeah, definitely. Once again, a consolidation period that it saw a breakout in September. The range there was about, let's say $6 or so, but this is actually a very volatile name. Saw a breakout to the upside here, and now there's kind of a channel that's developing where you have this upward trend line, which is in purple, and that 20-period moving average. Now we're testing that 20-period moving average right now. Kind of a little bit of a bull flag, consolidation of price, but I did highlight volume is actually picking up at these levels. So you have some buyers stepping in, you also have some sellers stepping in here, and it's trying to provide a nice foundation, be able to provide a little bit of an area of support. If we do see a breakdown, 24.50 is going to be your first area, and then next is going to be $21.45, kind of getting the top end of that channel line that we've talked about earlier here. Once again, RSI just shows that we're losing momentum, making lower highs, lower lows, and MACD has already crossed here. That's also in a little bit of a divergence. I would say it's at lofty levels. However, really nice trend. The fundamentals are trying to back it up, but be careful because this name, once again, is very volatile and can move fairly quickly depending on the market dynamics.
All right. Yeah, it looks like a little bit of the slowdown showing up here.
Come on, baby.
Short-term stuff on the second and third panel there. All right, thanks. Good context. Thanks, Kevin Green on the charts. Thanks, Jay Horn, for the look there, the details and the numbers. Markets also fading a little bit. We're red in 3 out of 4 of the indexes now, so we'll talk about it when we get our squad in here for a little chat coming up in a moment. NASDAQ now down to just 0.5%, and most of the Mag 7 is now red, including NVIDIA. So just no one really showing up to buy NVIDIA lately. Now at 135, Broadcom out in a world of its own, looking more and more like the only real meaningful winner of the day.
That was nice. There you go. I can dig that. $320. That's $100 a contract almost. 80. Give me 30. Give me 30. Give me 30. Give me 40. Give me the 21. That or I get out now. These are 3 black crows, if anybody's curious, and I like to trade these a lot. That had an inverted hammer with a tweezer bottom. If I can get 340, I'll be even on that last trade. I'm gonna get out of these here soon.
Weekdays at noon.
$3.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm gonna get my coffee going. Pee. I'll be right back. That's probably what I need is a break. Got a double bottom on AMD. Spy's got a double bottom higher low off the crow. What's this? Adobe's about to hit my support. It's one penny off Adobe. No, a dollar penny. A buck penny.
Here, Nasdaq's just got 0.5% now as Broadcom's up big, but everything else sort of fading.
Fading.
King Hall joins us from New York.
Everything's
Goes
crashing.
to Salt Lake. GT, Broadcom can't do it for us right now. What's going on?
Well, at the end of the day, look, you know, if you look at the heat,
George.
there's a lot going for some concentrated.
Okay, we're at
days.
215, 210. Get ready for another scalp.
Has been relatively poor, and you're really just seeing the narrowness of this market. And Broadcom is not an exception today; it's actually an outlier.
The
Outlier.
Outlier nature seemed to maybe inspire chips early, but 2% in the semiconductors is with NVIDIA down 1%. It's like NVIDIA keeps kind of flailing. I'm not going to say failing, but you know, it just won't rally.
No, it seems like it's been just some resistance from and pulling NVIDIA higher. You know, earlier you saw it get a little bit of a lift, but as you mentioned, it has since, you know, reversed. So it remains to be seen if that will hold through the balance of the session. It had initially looked like Broadcom would really help pay some gains today, but that story seems to be an individual stock story, at least so far in terms of the early trading session. Broadcom holding on to its advance, and you know, you'll have analysts resetting targets on Broadcom. One interesting note, though, I saw that Micron is still holding on to a gain, although again the Mag 7 we're seeing some fading there, and especially with NVIDIA.
Gotta say, if we fade right now, when Broadcom and overnight strength was the start, that feels to me like we might have a little risk of some selling into the weekend, George, because there's no other real news flow coming today.
Yeah.
Broadcom was the news flow from last night, and it did exactly what it needed to do. So if that couldn't get us going, I'm not sure what will. And it seems like bonds are pretty persistent on fading too.
Yeah, I mean, the bond market, I was going to ask you, what did you do to the bond market? Because, you know, I was out yesterday, but it's been pretty terrible. At least the long-term bonds have been down significantly, been gapping lower in the last few days. But look, you know, markets on an intraday basis do provide some insights. If you just look at yesterday, for instance, the market was in a trading range the first few hours. The last hour of trading yesterday didn't look good.
Nice little bounce there.
So that can be telling. It's not always, but can be telling in terms of the carry through the next day. So obviously, initially,
Carry trade.
we tried to get above some of those levels from yesterday. It looks like right now things are fading. And I agree with you too. It's kind of you know unsettling when you start to see names like Broadcom do exceptionally well. And it's not a small cap company; it's a large mega cap. But the market is very narrow, and I think a lot of traders are clearly aware of this. Irrespective of that, you know, if you look at, like I said, the heat map going through the entire week, you see just a few select names that are higher by the double digits. You know, Broadcom, you see Google, which is close to 10% higher than Tesla. Outside of that, there's some pockets of strength, like Boeing is an outlier in the aerospace and defense area of the market. But I also noticed Brookshire, the last 2 weeks, the value names have been down significantly as well.
Yeah, the drop-off in the small caps and the value trades, that's going to hit big value investors like Warren Buffett, Berkshire. I mean, that's whole sector and that style of investing got such a bid after the election. It's kind of ironic that the Trump bump is like fully getting erased the week that he shows up at the NYSE. Ow! That's kind of some bad irony.
I know it is. It does seem, odd. You would have thought that kind of could have created some halo effect on the market, but it didn't. I mean, and in fact, we closed basically around the lows yesterday of the session, and today, we're watching some levels. I know that Kevin has given some levels to watch for both resistance and support on the S&P 500. I mean, it looks like it's really just this range-bound situation. And as you mentioned, Oliver, there's really no other catalyst today. I mean, there's no macro catalyst. The big thing we're
225.
towards is next week with the Fed.
We're 4 notches out, and I don't like being 4 notches out.
Is really starting to kind of create some questions around the market. And it's not so much
So I might move it up.
Obviously, the odds are still in the camp of another rate cut of 25 basis
Now
points.
it's 3.
For next week, but what's the path forward from here? January, they're largely in the camp that we'll see a pause in January. And keep in mind, obviously, that comes right after the inauguration. So we're not expecting to move the needle, and we're seeing a ratcheting down of expectations for the path forward for rate cuts, especially
There's some pretty
because
big dips.
inflation has been so hard to reach the Fed's 2% target.
Well said. That December cut is getting kind of interesting.
Adobe Meta
It seems like
down
no one really wants to do
9.
it, but bonds are selling off while stocks
There's
are selling
190.
off.
Okay,
So
get ready.
It's getting pretty dicey here. Appreciate
Get
the
pretty
thoughts,
dicey
guys.
here. He says, we got a 1, 2, 3.
Thank you for joining Morning Trade Live. I'll
So
you
let's
this
see what we got here. I'm going to give it a shot. 195.
Watch for the fade in stocks. Kind of looks like it's coming.
195 on a 1, 2, 3. This fucking... Come on, man. Can't you work for me for once?
Join me, Oliver Rennick, alongside Schwab Network's
I'm having so much trouble with this platform. I gotta... Might have to go to TradingView.
Brand new limited series to take your trading skills to the next
Because I just can't take this.
Subscribe to Schwab Network's YouTube channel.
It's really been screwing up the last couple of weeks.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward
Find the next trend.
from every click to every tip.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
And Spy also has a fallen wedge.
Now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
No, it's a descending triangle. It's not a fallen wedge.
Trading 360. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. Glad you're with us. We have a big show for you today in our 360 Spotlight. We'll take a look at corporate buybacks from this last quarter and the trends that we could see in 2025. Our disruptor today, Broadcom, after rallying to all-time highs after their earnings. And in our 360 round, we'll break down the earnings from retail giant Costco. In the meantime, take a look at stocks which have had some back and forth action today. The Nasdaq is going for several weeks in a row, while the Dow failing again here, a tough week for the Dow.
Okay, Broadcom pulled back to the 200.
41, that is down 0.1%. The Nasdaq up 0.25%.
Damn.
The Dow is down 25 points, and there's the dollar, 106.74. Gold, 26.78 a troy ounce. That's down about 1.1%, and crude oil at $70.83 the barrel. Bitcoin at 100,360 today.
Carrie Lake got her position in the White House. That's what I wanted.
Here on Schwab Network, taking a look at Salesforce after an upgrade over at KeyBank. Good morning, Jenny.
She also had a Jesus moment.
In quite some time. I know that this
AMD new low.
pretty substantial now comeback as a result of some weakness we saw.
I'm gonna add
this
the
year.
crap
What
out of
this
these here in a
analyst at
second.
KeyBank really highlighted in this upgrade to overweight was the fact that Agentforce right now they see as a best-in-breed AI application. They're more a fan of this agent over these various other models of AI, and they think that we can continue to see a runway for growth, which I think is huge. Now, admittedly, today, Salesforce shares are lower on the session, so we're not seeing a huge reaction to this analyst call. But they did
I'm
highlight
going
the
to
fact
shut
that
this down real fast
even
and come
though
back up.
Agentforce is already
See if that
being developed and
helps.
already being
Because this
utilized,
really
they say that
sucks.
it actually has
I shouldn't
not
be
seen
trading with
a
this
meaningful
platform like
impact
this.
As far as the company's sales are concerned. So they see that actually providing some pretty nice upside from here. And they
But I
highlighted
gotta
the
get
fact
out of
that
this
is
trade
really
first.
prevailing a lot of the competition, and that overall there's still major, I'd say, potential for a lot of this activity across Salesforce's clouds to be integrated into the demand orbit. So all things considered, they highlighted the fact that this demand story seems relatively underappreciated as far as top line is concerned, and see a pretty decent runway for growth as a result. Also, as part of this note, they did, well, praising, of course, the Salesforce, they did downgrade ServiceNow, also noting that they have strong AI offerings, but said that the rise of agentic AI chips may really dent the company's overall leadership and differentiation. So they're obviously team right now, Salesforce, they're a bit more cautious on
CRM.
ServiceNow. And Salesforce trading at 33 times its forward earnings. So actually,
I have more faith in this channel than I do right now on the other one.
times their forward earnings. Salesforce is a bit lower cost as far as forward-looking valuation. Again, a name that's risen 9% this month, while pulling back ever so modestly now this week.
Okay, thank you. Jenny Horn, great to see you. Appreciate it, markets correspondent. Let's get some insights on the news shaping the markets.
140.
Katie Kaminsky's with us, Chief Investment Strategist at Alpha Simplex Group. Thank you for
140.
being here. Some of your thoughts on the current market conditions?
Well, I think it's an interesting period we're in right now because, as you know,
Come on.
equities are up, but it's very mixed. So certain equities, so you've seen tech be really resilient. So things have been relatively narrow, but for us on the cross-asset side, the biggest trend we've been following this month has really been the dollar trade, which has been the one that's actually been kind of still resilient despite, you know, moves we saw last month. So equity is very mixed, very much a mixed global story as well. So I think that's still kind of having people trying to shake their heads, figuring out what's going to happen, especially with next week as the Fed meets.
So if it's mixed, are you feeling uncertain? You're waiting for more, you know, data or action to decide how aggressive to get in investing?
Well, I would say that, you know,
I'm
given
gonna shut
the
this
data
down
we
real
saw
fast.
last week,
Trade off my
earlier this
phone.
week on the CPI and also the PPI, you've seen a little bit of, you know, stickiness in inflation, which puts into question how aggressive the Fed will be. The general consensus is that the Fed will still cut next week, but it does put into question the long-term path. And so as a result, you've seen fixed income signals have been very muted and also tricky. So in that sense, equities are looking moderately bullish, but fixed income is still going to be a tricky trade, especially as, you know, inflation is still kind of sticky and a question for them.
Right, and then there are tricky trades, and then there's sort
Tricky.
of go-to trades.
A lot of tricky ones today.
So I think the biggest go-to has actually been the U.S. dollar. I mean, it is the biggest.
I got it 140 and 195, and I got 10 contracts.
Strategies, and you see that in the sense that there's more question in terms of fixed income, and there's also
Fixing my phone here.
excuse me, some issues as well for equities and how they relate to sort of Fed decisions. So I think the dollar really off to the races, and that's really a question of the Fed being a little bit more cautious. It's also a question of people thinking that the future policy is going to be a little bit more U.S. centric. So it looks like the dollar is the big winner this month.
Yeah, really interesting. What about commodities? I mean, oil today's at $70 and change. Gold, for example, you know, shot up and then it was shooting down. It was down like $50 yesterday, or the day before. It's down $30 today. I mean, the moves are not small in some of these commodities. You think there's opportunity?
There's definitely opportunity in commodities, especially in the ags and the softs we've seen. I mean, take a look at coffee, for example. It's at sort of really all-time highs. It's really moved a lot. Now, gold is tricky because the gold trend was very strong earlier this year, and as you start to see consolidation in that trend, we start to see it as early as November. There's just been more volatility around the pricing of gold, and you can see that clearly in the price trajectory. It's been on sort of, we just have to start asking ourselves the question, has that gold trade sort of found its peak and starting to kind of consolidate? Energies also have been really range bound, but you have seen quite a reasonable upward move this week. So I think that's something to watch to see if that narrative breaks out some after there was definitely pressure on energies last month into this month based on the U.S. election decision.
This thing's going to take forever to shut down.
I know you're looking at U.S. versus non-U.S., but just right here at home, would you say large cap tech is something that you like?
So large cap tech is the one that's been the most resilient from a momentum perspective. You've definitely seen it having still legs in an environment more recently where there's been some question. So this may suggest that sort of there's still some room in the big tech AI trade, at least for now. Just the narrowness of the recent equity moves gives you some question, and I think it may be a reversal from what had been over enthusiasm about the Trump trade. So you see that in the Russell. The Russell has, struggled. You mentioned the Dow earlier. So I think some of this may just be a reversion from exuberance last month as well.
Yeah, understood. So you do think the Fed's going to cut on the 17th, 18th meeting, and then do they cut in January? Do you think? Should they?
Well, I think all
Down
signs
700
are generally
now.
leading towards cuts
500
for this month. But I think the reason that fixed income is selling off some, and you're seeing that today, is the idea that maybe they'll cut, but they have to start asking themselves more questions when it comes to next year. And so as data becomes more mixed, the trajectory and the speed at which they will cut rates maybe more
Go, baby.
question as you see CPI numbers and PPI numbers hinting at stickier inflation.
Yeah. What about earnings for 2025? How confident are you in earnings?
I would say it's still unclear to me at this point. I think a lot of people are very bullish right now. So there's a lot of reports out looking for positive earnings and reasonable expectations going into 2025.
FSLY is down
one thing
big.
that's going to keep people questioning that is just the already high valuations in many of the stocks.
This thing still ain't shut down
So
yet.
I think it's really going to be, I have positive expectations, but I think there could be.
I mean, why? Anybody else having trouble with toss? Or is it just mine? Because this is bad. Anybody else having problems with toss? Not me. Still ain't shut down. Okay, I got 185, 195. What's the deal here? I'm gonna get out. I'm getting out. What the hell? No, hold on, Jim. We're at $2. I got these at 125 also, so I'm green now. Well, it don't make sense. Nothing makes sense anymore. I got out, man, that didn't make no sense. That was a nice trade for that. Huh. Well, nothing's making sense to me today. Why did it do that? 60/60s went to 180 and this thing was going down. I bet this has a delay or something. No, that's right. It is right on this. Huh. Should we get back in, Randy? 1, 2, 3 here. I'm going to do it. 125. This thing's still closed. Shut down. It's been what, 10 minutes? This thing still ain't shut down yet. But I got 125. So. $125. No, it's not going again. Up or down? I can't fucking see my charts here on phone. Yeah, looks good. That looks good. Got a higher low on the last two double bottom. It's time for a Bible verse, Jim, before you get mad and beat somebody up. It still ain't shut down yet. What are we at here? 190, 195? Come on, baby. Break it. Give me $3. Could get out here again and make another 600 right now. It's like stealing candy from a baby. I think we're going to break up to the upside here. I'm going to hold on just a little longer. Get to the 63. And this thing shut down, please. I mean, look at this piece of crap. $215. You still in them, Randy? We got the 63 right here now. We got a double top. We got 3 white soldiers. I'm gonna get out. It'd be nice to get 225. That'd be a grand. Come on, baby. Shut down, you son of a gun. I better get my thing on here. Chart. Because I ain't going to be able to see it. There's 220. We got a double top. There's 225. I'm going to, damn it, sell it. I'm going to get out here. While it's in the heat. 235. Okay, I'm done. I made my money back plus. Plus with 2 pluses. I don't want it to be this hard. Finally. Now what's the problem with this computer? How do you check for is it control C, control, I forgot what it was, control tab. Check the vulnerability of this computer. It's being overrun or something. So we'll give it another shot. I mean, this is really sucks. Roaring shitty. How are you with computers? I want to figure out why this thing's moving so slow. If it's my computer or if it's my... He's the PC guru. because this really sucks. It's loading up real fast. Control C. Yeah, I want to know about if I'm getting overloaded on my computer. Control C. That's copy and paste, ain't it? No, I don't know how to collect garbage. I don't know how to do nothing. Let's see if this works better. Well, that switched over pretty fast. That switched over pretty fast. That typed in pretty good. That changed over fast. That come up fast. Control Shift Task Manager. Control Shift Escape. Thinkorswim desktop really using up the gigabytes. So let me take off some of this stuff and see if it helps. Get rid of that. See if that makes a difference. That didn't make a difference getting rid of that. Four, 3. That didn't make a difference getting rid of that. So it's using a lot of memory. What's this all about, the Brave browser? How many Brave browser? What's all that about? Something just happened here where it shot up huge. Very high. Thinkorswim applications really eating them up. Discord eats up pretty good. Not too bad. Brave browser's the one that Yeah, I have to have somebody help me with this because I don't know. Okay, we're coming back to the shoulder line on the SPY. So this could be it here for the breakout or the downfall. Let's get back in this trade. I'll read your stuff here in a second. We got the right shoulder right down here. Then click garbage and toss. Click the help menu item and then select tab. Help. Help. In toss, click the help menu, then select system tab. System tab. Then click the collect garbage button. Where's that at? Click garbage. I collected the garbage, then what? That's it. We're at the shoulder line on the SPY, so I'm going to grab these. 150, damn it. I had 150 earlier. We had the triple bottom. We took that trade and run it up. Then it did a double top. Oh, my soup. I wonder if that's what the guy did. Is I need to smoke a joint, and I don't have any. And I won't have any because I quit smoking. So we got a little megaphone pattern here. Or an ascending triangle. No, not an ascending triangle. But we got a 1, 2, 3 over the 63. That'd been $500 right there at 150 if I'd have got it. Okay. If we break the 63, I'm going to jump in. Boom, baby. There's $90. Randy VWAP, or the double top at 60478 on the SPY. The SPX is the 200 at 50, 60, 56, 38. Or the top of the third crow, first crow, which is 60, 55, 41. There's 130, $100 times 5. Yeah, that's working a lot better now. But I think because there's 1,600, which is 800. $3.60. Somebody in here? Huh? I got out at 360. Huh? Yeah. That's all right. I'm going to buy the dip here. I'm up about $4,000 now. On the 60/60s altogether. Did you do it? Did you make your trade? Are you kidding me? No. Mm-hmm. Yep, that's about it. All right. It'll happen. No, it'll happen a lot. It. I really got screwed up this morning because the toss wasn't working right. And I was pissing me off. I don't. It was the toss. I had to reboot it, and then I cleaned it up. But I got stuck, and I couldn't. No. So I got out, and then I made it back like in 2-3 different trades. Now I'm getting ready to get back in it here. We got a 1, 2, 3 coming down off the 50. ESPX. Yeah, hit right click your volume. Is she on right now? You can hear it? You can hear the lady talking on my screen? I haven't had this on for a while, the volume, but you can hear it. Can anybody else hear her? Because I thought it didn't come up. You can hear it? Well, what the hell? Oh, because I got it on mute.
ServiceNow. Yeah, and it's
Fuck.
really the big picture of ServiceNow versus Salesforce.
I didn't have-
Jenny Horn was on with us.
I had my computer on mute,
The Salesforce
but it shouldn't be coming up.
upgraded Salesforce to an overweight, but then they pulled back on ServiceNow with this downgrade.
I'm confused now.
So likes one more than the other, even though they maybe.
So you could hear her talking while I was talking? I don't want that to happen. Really? Can you hear it now? No?
Play on artificial intelligence, but also
Tell me if you can hear it now when I get this thing on mute.
Conductors, as well as data centers and server networking and network storage. And any
Can you hear that?
companies want to structure, data centers and integrate them with their ERP systems. Or
Now I'm going to put the. Can you hear it now? Okay, well that's the way it's supposed to work. I don't know what you're all talking about.
42 versus $1.39. But they actually missed on sales just fractionally at 14.05 billion versus
Okay.
6 billion estimates, but nonetheless that was still 51%.
Yeah, I was.
year-over-year.
I'm going to go
Break
get
down
my
the
soup,
composition.
take a little break. It's not been a good morning for me mentally. Oh yeah, I'm okay. I just got pissed off because my platform was 15-20 second delay. And I couldn't watch the chart and watch my platform trading because it's so messed up. But congratulations on your trade, Alex. I did. Yeah. Yeah. The live stream video has its own volume control. I haven't had a winning trade in months now. Damn it. I'm going to try to figure that out. It's definitely been not an easy market here for the last week.
To zero. If you do put on this position, you have to consider the risk, which is $6.50.
You can hear these fat cats the way they talk.
Right, understood. All right, George.
So here we go. We're getting ready again. 185.
Coming up next, our 360 round, we're diving into the earnings from Costco. The retail giant reporting a beat on the top and bottom line.
We got a head and shoulders right down here off of 60.41 or at 175. A triple bottom. What do you say? $60.38.50. He got 60.36.36. Yep. I got 60.38.59 for the low. And then you got I'm going to grab some at 160. The 60/60s. That's where I got in at. Yep. If it doesn't hold that, I'm going to get right back out. This is the third time off the 50 SMA. I don't trade off the SMA much, so we'll see here. No, talk. Yeah. And reset them. Yeah, everybody likes that. I'm drinking Jamaica Blue Mountain right now. Jamaica Blue Mountain. That's some of the best coffee you could drink. No, that too. Chart CRWD. He's smoking some good Jamaican. Randy. Jamaican Blue Mountain. I love that. Tastes like chocolate. Make sure you go with her. And you stay close to the resort. It took me like 10 minutes to find me an escort for the whole weekend. Yep. Okay, I gotta watch it right here. Damn it. She dropped on me. Okay, let's get her. I didn't take my 125. I was going to buy another 10 of them, and it didn't take it. Yep. Yep. 180, $200. Pretty close. Let me look at the 5-minute. Yeah, it's working a lot better. Yep. $125 that time. Now let's make some money. It's a tweezer bottom on the 5-minute. I got 125 and 160. What do you think, Mike? Be ready? I'm ready. I'm in. I'm on it. It's a fallen wedge. I'm going to clean this up. Oh, there it is. We got a right shoulder for the second time right here. So this is it. It's got to break out now. If it's still bullish on an inverse head and shoulders. Jimmy didn't. Inverse head and shoulders. Now, if we break to 63, you're going higher, or get out. I'm going to go get my... I don't really want to leave my chair, but I'm going to get that soup before it gets cold on me. Well, here we go. I'll wait just a few more minutes. It's squeezing between the 9 and the 21 right now in the minute. Yeah. Yep. I think there's a lot of bearish sentiment in the market right now because we've had such a great Trump run. Here this week, yeah. Let's go. We're out of the wedge. We got to break the 21. And I'm even right now at 143. Yeah. Total dip down below. $60.50s. Nobody can hear anything, all right, besides us. Well, it looks like it's moving to me. We got a double bottom on crowd right now. Okay, we're getting ready to squeeze any second on the SPX. My tummy just growled. Dropping or what? Flagging. It's got an ascending triangle out of a snake. It's got to break the, I think that's the, what is that yellow line? 65. I'm going to change that to 61, 63. Well, that's the 200, so I'm going to put the 63 up. Yeah, I've traded it. But I'm not going to trade it now. It's not easy to trade right now for some reason. I mean, the last couple weeks. Yep. Is she a gold digger, or is she like to explore? If the big island in Maui, but you don't want to go to Maui now. So it's either the big island, and if she's a gold digger, you want to take her to Honolulu. That's where the capital is. That's where all the shopping is and all the people are. The big island has the volcano and no, that's Oahu. That's the capital. I lived in St. Louis Heights in Honolulu. I'd take her there. That way you can go see a luau and take a drive around the island. and look at the North Shore and you can see the tropical part of the island that way, and the big waves, and then the beach on the southern part of the island, where Honolulu is. Huh? Yeah. That's where I'd take her. No, well, I'd take her there. That way you can take her to some nice restaurants and take her shopping, and you got everything. You got the beach, you got the luau's, and you can go see the barracks. I mean, what is it? The army thing. The Big Island, you want to that's where you want to hike and explore. Here we go. Break it. I waited for this, and it's going to tease me again. Maybe. I got 20 contracts, so I want some money. It's an expansion pattern too. Out of the fallen wedge. I think fallen wedges and inverse head and shoulders are my two favorite, because that's where I jumped in at. Then you have three white soldiers, and then you have the expansion pattern. So the next resistance is right up here at 60.50. You agree, Mike? Honolulu, you'll have to get you a taxi. I mean, a car. The Big Island, you can drive around, and you got the black sand beach, and you got volcano. I mean, it's just, oh, there we go, back down again. Son of a gun. I'm telling you, this is not an easy market. That's good. If it's short time, if it's, it's a 5-hour flight over the ocean. That's good. Yeah. Cost me $1,200 to ship my truck over there back in 2004. Shit. And get one of my girlfriends to host you. Okay, we're coming back down. We got a 1, 2, 3, triple bottom. Yeah. Yep. I got $200 out of it. Could have had 4. So I'm gonna buy it back here. I sat there and looked at it. I should have took it. Yesterday I was completely wore out and I went straight to bed when I got off here because I was stuck in that trade for an hour and a half, 2 hours. We got a 1, 2, 3 right here. 1, 2, 3, that means triple bottom. That's good. I mean, triple bottoms are a reversal pattern. It's the lowest support unless it doesn't hold it. Then you got to look at another. Yep. Triple bottom is a bullish chart pattern used for technical analysis that is characterized as 3 equal lows followed by a breakout above resistance. I tell them, kiss my ass. Because I've traded with fundamental traders and they just don't. I mean, you could have great earnings on a stock and you get in a trend like what we're in right now on a sell-off, it ain't going to matter. But if you're holding long, scalping it's technical. If a fundamental trader will swing. That's what I tell them. Tell them you're a swinger. Rob's got something to say. Look at AVGO reversal, Jimmy. AVGO's on fire right now. We just hit a resistance, Rob. Come on, 90 cents. Bounce. I got 10 contracts at 90. With a 1, 2, 3. One, 2 bits, freebie. Up 150. Hot two. I thought we were going to reverse that last time up, and we didn't. Right now I'm up $200. Yep. We're squeezing. We're going to know something any minute. I'll be right back. This is an exit idea if you're in the trade. We're at the 63 right now, so if you got in at 90, I don't know if it's going to break or not. If it does, it'll be good. We squeezed out of the 9. Oh, see, it dipped right there. Yeah, I can't trust this market too much. I was up 250 for a second. Now I'm even. Blutch. Should have got out at 63. Adobe's got a double bottom on my support at 460.60. And they got a 425 support. Oh, darn it. Yeah, you can't trust this market. A lot of bears out there. Oh yeah, I was going to chart CRWD. It's a funny looking one. We had an opportunity to buy it at the 200 4 or 5 months ago. And then we got a gap, resistance. Man, this ain't. sitting in the front of the computer made me rich, but it took 15 years to get there. I added a little bit more on that CrowdStrike. So SPY's double bottoming right now. A little bit lower, actually. Double bottom on the SPY. A little bit lower, let me see here. Yeah, we're right at support. If it doesn't hold here, we're going to have another big drop on SPY. So let's hope it turns my SPX around. And we just tucked under the should I add? Now I'm too far out of the money now. Fudge. Here I go again. Same thing happened to me yesterday. I'm 5 notches out of it. So if this doesn't hold, I'm going to sell it and buy the dip. Get my soup.
Volume perspective. So it's interesting to see it gaining momentum. We think most of this momentum is just in that DIY consumer versus the professional consumer, where Home Depot has a bit of an edge, but at large, some nice positive traffic patterns emerging for both of these home retailers.
You know, Megan, they had a nice earnings beat on the 12th of November. A little hurricane helped them, obviously. They revised their full year 24 guidance. They closed the acquisition of SRS, which, you know, it sounds like, if I'm reading this correctly, that's going to really help not only sales, but the emphasis on that pro that they're so dominant at. So is this what Home Depot's doing? They were able to tick ever so higher their full year numbers because of that. Is this market, is Lowe's, Home Depot, and the relationship with the pro segment, is that the key to this company? You know, we always talk about Lowe's trying to catch up to Home Depot in the pro segment. It doesn't seem like they ever do. It actually seems like Home Depot becomes more and more dominant. Higher interest rates haven't helped them. Higher mortgage rates haven't helped them. Maybe both of those will soften. Are there better days ahead for this company, even though it's hanging in there pretty tough, Megan?
Yeah, I think that's really important. The professional segment is the real differentiator whenever we're looking at a Home Depot versus a Lowe's.
Okay, we're going to see. We got the double bottom going up on the SPY, and I got 60.
In terms of generating revenue from DIY consumers versus that professional segment.
It's the last chance to get this thing up.
Tilted heavier on that DIY consumer. I think about 75% of its revenue comes from that DIY consumer. And so Home Depot, it's really smart, I think, what the company did with that acquisition of the SRS distribution.
Her Restoration Hardware did
really
good too.
Into this professional segments and expanding that audience with those specialty supplies and really being ready for when consumers
The video's
are
not
ready
up
to
yet.
tackle those larger projects.
It pulled back.
You know, we've also seen some other signs that consumers are perhaps ready to make those
Restoration
bigger
Hardware had a
purchases,
big
increasing
pop.
their spending in the house. Whenever you look at
$70,
Restoration
$80
Hardware's
bucks.
report, you see how that stock's performing today. We saw a nice
Right now it's
report
up
out of
54.
Williams-Sonoma, last week or maybe 2 weeks ago, and so there are some signs for us that the consumer.
Shut up. Home Depot all-time high, November 26th. They can go to 405. We definitely don't want to fight the trend right now. Not good. Mr. I gotta look at Mr. Rob AVGO hit that resistance and pulled back.
maybe less than 10. So that's going to probably come into the discussion here. But selling the 410 put in the December 27th weekly cycle, buy the 400 put short, $10 wide neutral to bullish put vertical, collecting roughly about $1.95 credit. That's what you can make on it. That means you've got $805 in risk per spread, but that's below the $400 level. Kevin mentioned that 200-day moving average sitting right at 411. It's been a base case of support since about mid-August. So keep that in mind also. So using the technicals here on basically the 3.5% pullback that we're seeing just this week in the stock. So that maybe give you an opportunity here.
What do you got? 60, 37, 50?
Now, Kevin, when you look at this real quick, as far as trade management goes on this, if we see a slowdown in trading, maybe things don't move. After the Fed meeting, we don't get a lot of data. We don't get any earnings out. That's the whole idea in here is that, hey, I can profit in 3 out of 4 scenarios. Even if it goes down, remains above that break even, which is right around $408, I'm going to be profitable on this one.
Yeah, exactly right. So if I'm looking at this trade and I'm having it on over the next 2 weeks, once you get to about, if you get to 70%, 75% of profitability on this trade, you probably look to take it off. Why? Because you have $10 in risk until you close the trade, no matter where it's trading, Tom. So if you were able to get, some people say 65%, 70, 75%. If you get that much of this trade, it's time to exit it because the risk doesn't leave in 2 weeks, but you're collecting theta, you're risk defined, you're relatively high probability, about a 2/3 chance. So if it sits here and consolidates over the next 2 weeks, this trade has a chance to do well.
All right, good look at the short neutral to bullish $10 wide put vertical there in Home Depot. All right, let's take a quick break here. When we come back, we're going to take a look at Apple. The iPhone maker stock has rallied nearly 30% so far this year. Hit all-time highs earlier this week, like 5 of the other Mac 7 names did. Fast Market's coming right back.
I got 406. We did pull back to a support right here on Home Depot. $416.26. Tesla up. This is stressful. More stressful than it should be. Tesla broke out of the ascending triangle.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
No one never contacted me about that leak in that back hall. From the roof.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Apple, let's get a quick market update. We're near session lows for the S&P 500 as we speak. The benchmark down about 0.2%. The Dow off nearly 100 points. Or just over 0.2%. NASDAQ still positive at this point. Had some gains in Tesla, then of course Broadcom, Broadcom did hit $1 trillion market cap earlier in the session.
That's too much.
Small caps continue to lag, down 1%, and that might be in the back of rising yields. Let's take a look at some of the other asset classes that should be on your radar as affecting the S&P 500. We've got the dollar firmed up above 106.5. The 10-year yield, as Kevin mentioned.
Bitcoin at 102,000.
3-week highs that we hit today in the 10-year yield.
Gold down.
1.7%. Back above $71 a barrel. That's not good for inflation. As crude oil's moved up over 5% so far this week alone. On that firmer dollar, yields going higher. We're seeing some weakness in gold, down 1.2%, back below 2,700. Bitcoin up 1.7%. That's been chopping around that $101,000, $102,000 level at this point. And then the VIX up about 1.6%, not surprising, as we rolled over in today's session.
Not good.
Now that we've had a look at some of the asset classes and stocks, how they're setting up, let's get into a discussion about Apple. We've been talking about this one as far as valuations goes. Stock's up 28% this year. Let's bring in George Tillis, senior market correspondent here on the network. George, I wanted to talk this stock just because, it's getting elevated as far as valuations goes, getting stretched on technical levels. And then Morgan Stanley comes out with a note and says, hey, it's rallied to all-time highs. We still like it, right?
Yeah, I mean, this has been a slow mover. It's just been steadily moving higher. It's near all-time highs alongside with the market.
George.
There's a major catalyst going on with Apple. Now, I'll explain in a sec, but I think what's happening with Apple is really some of the woes that Adobe is actually seeing. Adobe, you can see, is just getting wrecked. And one of the things that Apple's been doing is focusing more on software services and their platform revenue versus their product revenue. That's essentially the strategy they're taking on. They're not necessarily investing heavily in AI. What they're doing is integrating outside AI infrastructure along their network and, of course, their ecosystem. That's been a great strategy. But at the same time, they continue to execute from a profit margin standpoint, with margins about 200 basis points higher than their 5-year average. Now, I'll just go back to Adobe. What I actually see here is Apple slowly encroaching on Adobe's business. When I researched Adobe, looking into it prior to the earnings announcements, one of the things I found, which is really not talked about, is a company called Pixelmator is actually a very popular now, software program, much like what Adobe offers for visual artists, graphic artists, and designers. And in fact, Apple purchased that company back in November. So I think what's happening here is that Apple is not necessarily just growing its software platform services business, which we're all talking about relative to hardware. We talk about media and advertising as another revenue stream for Apple, with, of course, their podcasts, which are becoming very popular. But they're actually encroaching now on Adobe's business. So I think this is another catalyst that's under the radar. And I think it's a very prominent one, considering Adobe really has frustrated a lot of users because of the fact that it's difficult to have.
Did you take Tesla Mannequin?
Of their software program that is utilized by, of course, creative
I need a breakout here.
Artists alike.
George, we know.
I got 30 contracts now.
Obviously, we talk about Apple a lot, and we know that their services are still a growth part of this company, but the overall sales aren't growing, George. And at the end of the day, this is still an iPhone company. What is, in your opinion, just the justification for the valuation? Is it the super cycle? Is it the hope of everyone is going to have an iPhone 15 or 16 to get the Apple Intelligence? What is it, do you think, that can bring a stock up to this valuation and maintain it up here?
Yeah. Okay, so it's a great question. So, if you consider what's going on historically from a earnings multiple, and I'm looking at the forward 4 quarters, at least in the last 5 years, it's around 28 times. The stock right now, as of yesterday's close, was trading around 33 times. So it is a little bit pricey on a comparative basis to its own historical. And I really can't compare Apple to another company because it's a standalone company. And with that said, if you look at what they're doing, they're obviously focusing more on platform services versus, of course, their product revenue. Their product revenue is still the largest component of their sales, but I think what's happening is slowly Apple has not increased prices of their products. I think they're making it more affordable. This is my view of it.
It is.
For their average consumers, to which, if you look in the United States, they have the majority market share on 56 or 57%, but they're trying to make it more affordable for international buyers, to which the iPhone itself has less than 20% of the total smartphone ecosystem globally. So I think what they want is more people to buy their products. They're not as focusing on pricing power of those products, which we know historically they've had pricing power. That, I think, has been cutting into the trailing sales, which if you look at the last 4 quarters, is actually higher by about 2%. It's rather modest. But going forward,
There we go.
you actually see that their sales estimates now are close to 5 and 6%. And I think
The
that
60
speaks to the
45s,
fact that there
and
was
I
a
got
sort
the
of a
60
sacrificial
60s.
year where sales were down, but nonetheless they've been growing their platform revenues, and that's becoming a higher margin portion of the business. And that's why I'll back up to initially where I said, if you look at the profit margins right now, based on
Oh, yeah.
trailing 12 months,
Now
they're
we're
about
talking.
2% higher, 200 basis points higher than their 5-year average. So even though sales have been stagnant or low relative to historical averages, profit margins.
Now we're talking.
And I think that's where we're seeing.
I could get out right
the
here.
proposition of the price relative to the historical multiples be achieved here for Apple. And again, I will say this: that Adobe's a very large.
That's a
company,
$1.50.
from a
I'm up
pricing
$1.50
standpoint.
now.
Apple, like I said, it seems to be slowly encroaching on their ecosystem of software suites.
Yeah, and throw in that fact that
I got the 60 45s, and I also got the 60 60s. And it was at 3, now it's at 460.
Part of the optimism here in the stock is the PE's over 40 now, nearly double the historical average for that. All right, great stuff. Thanks to George Tella, senior markets correspondent here, helping us break down Apple. Cav, I looked at this stock. You know, it keeps on going higher. It's rolled over a little bit so far this week. Week it's still up 1.5%, but it did hit nearly.
This is the toughest charting I've done in a long time.
So I looked at a strategy that, hey, if you own the shares, maybe you can do this, or if you're just speculating and you think it's going to reverse down. This is a bearish example that we're
The 1, 2, 3
If
breakout.
you think it's going to go down, it may work out for you in that way. But I went out to the January monthly cycle ahead of earnings, Kevin. Gives myself some duration, but I'm buying a vertical, so I've got some flexibility as far as trade management and perhaps closing the trade ahead of that expiration in 35 days. Where I'm going to buy the 250 strike put that's in the money by about $3.50, and then I'm going to sell the 240 strike put in January. $10 wide bearish put vertical, paying about a $4 debit for that. There's your risk, $400 per spread.
All right.
On this, with the break even at 246, Kevin, that break even, we're only about 75 cents above that break even now, so it's not.
Now we're
like
at 5.
you need this isn't a trade that you're expecting just to fall out of bed type of scenario for Apple, right?
Yeah, I mean, the couple things you've done, you've given yourself duration, right? You know where Apple is on the chart. You see how expensive it is. George, talked about that. And this is one that if you may have Apple in your portfolio, this is a way you're doing this. You're hedging the downside without giving up your upside, Tom, because you've got a put spread on. So this is a trade that you buy for $4. It has a chance to go to $10. That's 1.5 times your money, Tom. It's pretty solid return, like I said, and you've given yourself duration on this trade. Not a big Vega risk either direction because you're all in the same. But yeah, if you think this market has run a long way and can back off, this is a trade that can pay off if that happens.
Yeah, Kev, I noticed on this one, current IV percentile in Apple is about 11% right now. So we're in the bottom 1/10 of what we've seen as far as implied volatility levels. So that's one of the reasons why this $10 wide put vertical, where you're in the money and you need less than $1 to get through below the break even, is so cheap, right? At this point, and that gives you some flexibility because Say it goes down to 240 in the next couple days or the next week, and this thing expands from $4 to $6 or $7. Then you start having some optionality as far as managing or closing it, right?
Yeah, exactly right. All you're doing is reading the market. Maybe
Back to 3 now.
A limit offer lower, and whenever it hits there, it hits there. There's several ways you can do it, but this is one that's playing for a downside move in Apple. It gives you, like I said, about 30 deltas short, Tom.
All right, great discussion there. The bearish put vertical there as an example. All right, that's going to do it for Kevin and I today here on Fast Market. Stick around right here on the Schwab Network. Next Gen Investing is coming up.
Okay, I'm going to take a break from trading now for a second. I don't like getting like that.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore.
You can't trust these breakouts, none at all. I've had 2 or 3 chances to get out of this trade, and I did not do it,
Subscribe to Schwab Network's YouTube channel.
and I got stuck. I was up almost 400 when I first got in it. And I'm going to show you what we got here.
Schwab Bank
We got a fallen wedge.
checking account built for investors, named highest in client satisfaction by JD Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
I don't want that
Moving
there.
funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert
So we got a fallen wedge, big long fallen wedge.
insights on every change.
We have a 1, 2, 3, 4 on the bottom, and a 1, 2, 3 there.
Any device for free. Welcome to Morning Trade Live on the Schwab Network.
So I moved up. I'm going to move up my option here to 60.45.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds.
She's acting up again.
Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
2.35. Strike is 60.45. My dingus. SPX is the devil of a wedge.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we are seeing some pressure
Alex
today.
Coffey.
Three of the four major averages. I know the Nasdaq is still leading out front with about 1/4% move today to the upside. But I do feel like this week has been, it has been collectively lower in most of the major averages here. And it's been weird to see NVIDIA's pulled back about 5% this month, another 2 3/4% today.
Yeah, it's been a back and forth market for the most part, somewhat sideways, but I would argue that we kind of broke out of that range today to the downside. Now, we don't know where things will close for the week, But the range, and I always look at the S&P 500 futures, so forgive me for not maybe being as familiar with the SPX numbers in particular, but if you were to look at the difference between the two,
I can hear you now.
It's pretty close. But let's call this
I got
range
out of them
somewhere
trades.
between 60
And I'm back in it again.
60 in the
Go ahead.
S&Ps, which take 5 or so points away from that in the
No. They logged you out. Oh, she got back. I was having difficulty with it myself today. I'm up now. I got the 60-45s at 235 on the quad bottom. Actually a triple, but I'm going to count that one in. There I go. Dropped just 225 just like that. It's not an easy day. Mm-hmm. No. You're almost too much out of the money if you got the 60-60s. Oh, okay. We're good then. If we bounce up here, you'll be good. You're even. Oh, no, you're not. Oh, I see. Yeah. I got you. I'm looking good. I'm up $40. If we break we got two confirmations. 60-39.99. If that breaks, I'd stay in the trade. If it doesn't, I'd jump out. Right now I'm up 60, $70. I'm tempted to sell because I'm up nice here. There's 100 contract. Break it. Now these breakouts have not been holding up. None of them. And when I'm thinking I want to get out, I'm see right there, 340 to 310. Just a little bitty candle drop. We're at the 63 and it ain't broke it yet. Yeah, if it wants to hold it, but that didn't stop it before from dropping. There's a lot of bears. See, we didn't break the trend line there. It's an overhead resistance that we got to break. Uh-huh. He's a falling wedge. It should break out if it's bullish as could be. But, I mean, we're fighting a trend right now. Seven. Yep. No, 6 really, but yeah. It hit the 63 7 times for sure. Or 6. AVGO. Are you at work? Oh, okay. You don't got nothing in the fridge? Can of soup or something? Okay, I can get out of. Oh yeah, I do too. 340. I'm up $100 a contract. Again, here we retest it one more time. We've retested this thing over and over and over and over. Yeah, go in there and take a shit. Kiss your dog on the mouth. Yep. Okay. Lofty. Self-centered and proud. Isaiah 57:7. I'm starting to. Needs, used as a phrase, must needs, meaning to be necessary. Luke 14:18. He says, nice bullish engulfing candle on the 1 minute. Michael. Mike. Sorry about that, Michael. Mike. It's Mike. There's a guy named Bob at the IRS, and I called him Bobby the other day, and he did not like it. Oh, yeah. He didn't say nothing, but I said, I'm sorry about that. I called you Bobby. I do. Okay, I'm going to get out of these. No, I'm not. I'm holding these suckers because I know this thing's going to break out in this falling wedge. You're at 190. I can get out with $100 a contract here. They got a pretty cushy job. 11 or 12 days off every. Yep. Come on, man, break out. Give me another buck. Make it $2,000. Mike says 60.46 will be the 200 SMA on the 1 minute. EMA. 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 SMA is 47.43. There's a fight in the room today. Oh, I got proof too. Yeah. Me and Mike, we're having it out. Fact. I have 2 in the morning and a piece of cheese and two strips of bacon. $370. I'm up 140 now. $1,400. We got a double top here out of the wedge. Scale some out. We got a double top. If we break it, we'll go higher, but just been a choppy market. They're not holding very well when you hit a resistance. I'm going to stay in just a little bit longer here. Come on. 60, 41, 32. You got 60, 42, 50. Oh, you'll get at least 42, 50. We're going to retest the 9. Did you ask her if she's a gold digger? I'd say, honey, well, I'm going to take you to Hawaii. Do you want me to take you to all the nice stores, or do you want to go explore? You have the full package if I take you to Oahu. Yeah, that's Oahu, the island. The capital. Honolulu's the capital. 370. Let's do it. Break. I see why you said that, Mike. 64. He's talking about the wick. Okay, if this doesn't hold, I'm going to get out of them and then buy the dip. We're at the 9, the 63. Yeah, it's 1:16 Eastern time. Jack, I ain't kidding. Scale out some. You got 20 of them suckers. I mean, 10 of them. Me. Jack. I mean, Jack is Joe. Brandon. He's just knocking on my door. If it wasn't for Brandon, I wouldn't be in this position today. I hate to say it, but I made more money under Brandon than I have under Trump. But I didn't have a strategy back then. Here we go. $4. Because he's a badass. No, it's a major hard resistance. If we break it, then we're going to fly. Okay, let's have another debate. Next resistance, Mike. See if you match mine. Tweezer top. Oh, we're about there. 60, 44, 35. No, I'm going to see if I can get 5 out of these suckers. Well, I should dump now because, hell, this is a big engulfing candle. 460, I'm out. I could take that any day of the week. You will. Oh, he used a dirty word? I'm going to have to read a Bible verse. Oh, this one's especially for you, Mike. Gift. Yeah, this is gift. A present, an offering, a favor. In Corinthians 9:15. The gift of God, this is Romans, the gift of God is eternal life. The gift of the Holy Spirit comes with salvation. Acts 2:38. Gifts are always free. Salvation is a gift from God that cannot be worked for. It comes only from the trusting Jesus as Lord and Savior. I'll have to write that down. Write that down so I can copy and paste it in a private message. I don't know really where to start. I've heard. I said, as first of the year, I'm going to start seriously reading it. Right now, I'm just warming up. Oh, that was a nice trade. I was stuck in that thing for the longest time. The cost average 3 different times. No, that was already, I got out of that one. This was a different one. This was easier. This trade was a little bit easier. That last one's killed me. So now we're coming back to the old resistance. Back to the 9. Oh. Should send you your winnings. The volcano. I know. I remember when I took bachelor's living, I knew what an eye of a needle was back then because I had to sew an apron and run the thread through the eye of the needle. Yeah. Yeah. Falling wedge. It's come back. They had to decide something to sew them clothes together. Man, that was a tough trade today. I hope this gets over with so I can start trading back to the way I was. I've been stuck in some major dips. I got out of these at 460, so that was a pretty trade. Yeah, it's unusual for him to use the F word. I hope we don't corrupt you, Alex. I don't want you to wake up in the middle of the night and say, fuck. One, two, three, four, five. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7 on the bottom. I got reprimanded for Twitter today. They passed a law. I mean, the courts had, this is good news for me, the courts decided that DEI was not legit, and this, so they were reprimanding the New York Stock Exchange, or one of them. Oh yeah. And so 2008, I was just started really getting into trading during the Obama crisis, 2007. And when the market was crashing, it crashed from 1250 down to 6500. And it was just fun to watch. I was watching, I was learning, and I started a chat room called the Penny Play back in 2005. I can't remember what it was. No, it wasn't Discord. Oh yeah, way, yeah. It was a cheap chat room where we could talk on it. They just started them. Oh, here's a nice trade. $260 to $4. 420. Double top at 420, Randy. Is Bonzo? Bonzo, how's your trading going? Yep, there's the 200. Get out. I've got another $2,000. I'm going to show you a trick here. Here's the previous. Mike showed this the other day, and I show it all the time. Oh fuck. Yeah, I got out at 5. There's another $2,000 right there. So I'm going to show a trick here on the pullback. We had this previous high right here, and we broke out with that big engulfing candle, and it came back and touched that previous high, and then boom, and I jumped in that trade on that hammer. See that previous high right there? That's right off that top of that resistance on that falling wedge. So now what's going to be the new support? It's going to be the 200s, either one of them. And I was right about the 200 SMA, Mike. It was an EMA. Yep. Oh, fuck. I did it to you again, didn't I? I did it to you again, didn't I? Yep. Oh, yeah. Mike did it. Ha 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 ha. I told you to stay in. Oh. Did I say something? I got to read another Bible verse. Randy said I cussed. Okay. Endure, stay, remain, lodged, be firm, bear up under. Psalms 35 and Tim 2:3. We were patient, we learned today, and made gobs and gobs of money. Oh, don't make me start singing. It's very easy to make money trading. It's very difficult to keep it. I'm going to have Mike write me a song. I'm going to put it to tunes. Let's give Mike a hand for contributing today. Announcement, announcement, announcement. I'm going to go into the kitchen and I'm going to make another cup of coffee. This time I'll make tea, chai tea with creamer. Now, Jimmy said we'd pull back to the 200. We have the previous high right here. So if this 200 SMA doesn't hold up the 9, we'll drop down and hit this here support level off the 21 with that double top breakout. But right now at 66.44.35 is your support. There's your 200 right there. So now we mean business. 3 black crows. Yep. You're not forgiven. Don't ever make that mistake again. Those last ones wasn't very long. The ones before that was about an hour and a half. But the second one, that was less than 20 minutes. I'm out. Yep. I got a swing that's not doing very well. Toll. And they come up with upgrades, and then today they have downgrades, so I don't know. Wow, JP Morgan lowers it to 150. You gotta be kidding. Oh, well, yeah, that makes sense. So they'll probably start to rebound. I'm going to buy the dip on them. Toll. I'm not suggesting this to nobody now. I got to get my way out of it. I just thought I had a good spot the other day. So we bounced off the 200 and held up the 9, which is up $100 right now. The 60.45s. I want you to look at this, YouTubers. So when you have the 9, you're bullish as long as you stay above the 9 and the 21. We hit the 21 there. We hit the 21, the 21. And then we had that big engulfing candle, and I got out of the trade. And then it kept going and going and going. Now so we pulled back with 3 black crows with a hammer off the 9. We're on the 9, but we hit the 200. Always clean. This Jim. May I help you? Yeah, I can hear you. What's going on? I'm fine. Yeah, but go ahead. I'm working right now, but go ahead and say what you got to say real fast.
Okay, all right, sir. Sorry, I'm not going to take a long time, but sorry to bother you. I just called you from the marketplace to inform you. You may qualify for some new benefits in your area from the state of Missouri that are recently approved from your state for 2025. So that is my responsibility to inform you about all those kind of extra benefits for 2024 that you may qualify for, and there will be $0 cost for this procedure. Second thing is that it's the last day of
What kind of procedure?
2025.
What kind of procedure was that? What kind of procedure was that?
I said there is no cost, no obligation.
Yeah.
Said that.
Okay.
That's what I mean.
Yeah.
Yeah. Second thing is that it's the last day of enrollment period. Okay. So do you have updated your plan for 2025 or not yet?
Not yet. I got to call him here in another day or two. I'm gonna call him tonight.
Enrollment period. It's the last day of enrollment period. So after that, there is no chance to update your plan. So
Yeah.
are you satisfied with your plan? Do you want to stay with your current plan for 2025 as well?
Yeah.
Or do you want to switch your plan for the next year?
I'll probably look at a new one, but I got to call him here after I get done here today.
Sure, we can help you with that, okay? If you want to switch your plan, because there's a lot of options for you, you can get something better for you for 2025.
Yeah.
That will be $0 premium cost, okay?
Yeah.
So, just to get you qualified for, we are not going to take a long time. It's a Friday. It's a half shift, you know? After some hours, it will be off.
Yeah, I got it. I'm in a trade right now, and I got to get off here. I'll call tonight when I get up at 3 o'clock. I'll make my call.
After 3 o'clock?
Yeah. I got to let you go right now. I'm up at $2 on this trade. Do you trade stocks? No. Yeah, I could sell you a punchline here if you don't want to learn how to trade stocks. Right now I'm up. So I got to let you go.
I have a couple of questions, okay? Then I will set up call back time, okay? No problem. Right?
Yeah, call me back after 3.
So, yeah, I have a couple of questions, then I will call you back after 3 o'clock, good?
Oh, okay. I'm going to get out of this trade here real soon.
Yeah, but I'm telling you, I have a couple of questions. I just take your just 1 minute, okay?
Okay.
Yeah, you're in the state of Missouri. Do you remember your 5-digit zip code?
Yeah.
Your zip code, 5-digit zip code.
I got to let you go. You have a good day.
Sure, thank you, no problem.
Thank you very much. Huh? The same one? Without communication? $6.90. Oh yeah, 460. So the next resistance, well, we got a head and shoulders up at 60, 50, 37. 60, 50, 31. No, it's lower than that. Just by a few pennies. Let's erase this. Go up to this next one here. Joke. Yeah, it's around 30. Yeah. Oh, mine was 60-35. We had 60-35-77. 60-35-77. 60-38 would have been good too. And he said, I think it was 36, wasn't it? I got 60-50-31 now for my next resistance. Yep. And then I got 604.78, or the VWAP on the SPY at 604.69. And I'm out of the trade. I'm out of the trade now, though. We had three black crows that hit the 200, and it's where I called it off the 9. That was like $200 right there. $200 a contract on that one. That one earlier. Tesla warming up. Thoughts? I gotta look at Tesla. Oh gosh. Toll down another 182, down below my support. Yeah, that's a total loss. I'm about done swinging. I'm just going to be scalping for the rest of my life. Oh, what am I looking at? Tesla. God, 430. What the hell? What a run on Tesla, $16. Contract. I think it's four. Let me see. The fat cat's always asking, is it worth buying here? And they say, no, we got to wait for it to pull back. They don't see, that's the difference between the fundamental trader. The guys on Wall Street are telling you not to take the trade now. And a technical trader has the animal spirit. So we're at, right now we have to hold this support level. Oh, I didn't go up there. Oh, let's see what I got to do. I'm going to bring it up to there. Pivot point. Yep. I'm going to say 450. It's next. But not today. Next week, support is going to be right around 409. The gap. 770, the 60.45 just jumped at $120 there, 130 on the SPX. So I'm going to say 410 is going to be your new solid support for Tesla. 410.69. And I'm going to put the linear channel on this. Let me get another chart. Standard deviation or the linear channel. Yep. Ask her if she's a gold digger. Yeah, funny. I got too much crap on here. What is this? Wilder's RSI. Big MACD. I don't get that out of here. Okay, on the linear channel, if we break the double top, your next resistance is going to be right around up another 15 bucks. So we got a double top right here. So if we break it, I'd use a standard deviation or the linear channel to find new highs, or the Fibonacci extensions. So 431.88 is just a rough number. If we can gain respect above 431.88, we'll go higher. We just got a new high just now. So I'd take it to 440 or 430. I'd take it in $5 increments. If we could be at a hard resistance right now at the double top on Tesla. That's a good call. Man, Rob, you're really something. Okay, we pulled back here on the SPX to the 21. I did hit my resistance level, Mike. Magnificent, give me a good grade on that. Magnificent. Mike should give me a grade on that. That's perfect. To the penny. 50, 60, 50.31. I want an A+ from Mike. House Trades Joe, welcome to the room. So we're at the 21 here. We could drop down and hit the 50, but here we go with that previous, this is called a yin yang support. We got that previous high. That's not an A+. That's not an A+. Oh, gosh. Right there. So you take that previous high, connect that previous low, and we stopped right there. So that's called a yin yang. And we stopped at the 21, which gives you a double confirmation. That's called a pivot point. Oh, stocks making the biggest move midday. Tesla, Broadcom, Upstart. I have to give myself an A+. None of you people care. Now we got a head and shoulders. Very good, Daniel. Very good, Randy. Okay. You missed me calling out the resistance. SPX, remember when I told you 60, 50.31? Give me an A plus. I want an A plus. Plus, I'm reading Bible verses. It's going to change my life. I've been doing this without God's help. Rob, AVGO. This kid is something else. Oh yeah, I've watched him really change in the years. I think he went out and ate a bunch of mushrooms and then came back. Okay, we have a knife here. Yep, at 60.4629. We got three supports: 60.4629 to 60.4544, and then the double bottom off these three crows, which is at probably the 60.4543 is what we're going to see. I don't know if the 200 will hold, but the 63 has a double confirmation. And I'm going to go get water warmed up. I'll be right back. Now I'm telling you, you people on YouTube, if when I'm trading the SPX, you could have them charted up like this. Have the SPX on one side and the SPY on the other, and you can watch them how they kind of run together. This is a VWAP chart, so that VWAP is going to be your resistance on the SPY. The VWAP doesn't show up on the SPX. Now, tax benefits are better, what I'm hearing, if you trade the SPX over the SPY. It's almost like the lottery, almost. It's what you're going to have to pay. Tax benefits of swinging and not trading anything is a lot better if you wait till the end of the year. There's one year where I paid almost 25 grand. I know I'm going to pay a lot this year. More than I want. I'm going to set an alert right off the 200 EMA. No, I'm in there with my coffee. I can hear the ding go off. And I'm going to set one here off the 63, just right above it. '63 EMA. I have a feeling it's my mouse. I'm gonna have to I'm gonna get a new mouse tonight. And then I'm going to go with the other one right down here, off the crow, bottom crow. Let's move this one up. A little bit above it. Okay. So you got the SPY moving up. I mean the SPX, and you go to your SPY, it's moving up a little bit. Your profit's going to be, you got volume spikes. So we're going to break out probably right here. These are called volume spikes. They call them field goal post, which means we could have another catapult up once we break this resistance. These two volume spikes. Somebody loaded up there in a way. On SPY. Resistance, the VWAP. I think the top shallot fat cats are saying let's be the boogeyman and try to bring the stocks down in fear. Meta's down now 12, so it dropped more. To my first support, we're on the 9. Yep, perfect. Gum, look at that. Within 4 cents off. That's a fallen wedge breakout. So you got your snake. And then you got your fallen wedge. Kind of descending pattern. Double bottom, lower low. Not much of a low though. It's pretty much a double. This is D. That's descending. So we'd have to break the 200 before I'd take that trade. Then it broke out of the pattern. Came back and retouched the old resistance. And that would have been a buy signal right there. And run it up to the 200 and get out of the trade. Well, it didn't go down and hit none of my supports. Tesla dip. So that was easy. I didn't take it. We got a long leg doji right here for buy signal. Spinning top. Long leg spinning top to a double top out of the trade, but I didn't take that one. That was like $100, 150, 160. I'm gonna load this boat. If this thing gets down to $1, the downgrades didn't help it today. Here comes out another one. This Toll Brothers and analysts is no longer bullish on Toll. Today's analyst stock ratings, upgrades and downgrades from Benzinga. All right, I got to get a bench press workout. What am I looking at? I'm gonna go get my. I ain't looking at nothing right now. Damn. Nine. Yeah, I hear you now. I see it. I was. 4697 to 46. I was 40 cents off of taking that trade. Yep. Yep. 115. No, I wouldn't have. Not me. I'm up $2,000 on the trade. I'm out of it, but my 60/45s, I had 235. Yep. They went to 940. Had 20 of them. Yep. In the 60/60s, I'd be up. I had 30 of them. So yeah. They run up more than $1. So I'd had yeah, 35 times 30, $900. Yep. Better than the loss. Big part of trading is psychologically. That's right. Your state of mind. I know that for a fact. Oh yeah. Well, keeping your cool, making sure your shoes are off, and you got your coffee made, and your butt's wiped, and Rob's really on fire. I didn't take your AVGO trade. He bought the dip. Sometime. It has new highs right now. So you got the 60.45s back down here again. We got an expansion pattern. So these things can still come down to 60.4701. Here, let's go right there. Did you ask your girlfriend if she was a gold digger? Oh, funny. How you gonna ask her that? Are you crazy? She'd break up with you. That'd be the very last question you'll ask her. Ever. And take her to dinner. No, that won't be good. She'll think you're cheap if she gets your presents after Christmas. Oh. Oh, that'd be great. You got a perfect excuse. Perfect excuse. Yeah. Just tell her, let's have Christmas after New Year's. You got 12 days of Christmas. There's 360 to 820 right now. Yep. The SPX, it just popped. Okay, I opened up to love. Deep, enduring concern for others, welfare, affection, and friendship. Genesis 37:3, Matthew 5:46, an essential characteristic of God that comes only from the gift. And then you got John 16, two different Greek words, or that was John 16. Then you got two different Greek words for love. are used as synonyms. Synonyms. Yeah. John 16:27. That didn't make no sense. Yeah. Then you give me the synonym. Okay. I'm gonna go peel an apple. Yep, I'll be right back. AVGO is the number one today. 82 million. Then ACHR is on a run. Aviation, drone stock. Kathy Wood bought this. I'm far enough out of the money now where I can drop these down to 60.55. SPY hit the VWAP. So if the SPY, if it goes above the VWAP, then we'll go higher. If not, we'll drop down to 200. And that'd be $1 or a 60 cent dip. Yep. Redeem it? Yep. I hardly ever use mine. I should redeem them. Mm-hmm. $4. AVGO. All-time high. Expansion pattern. And that's on the weekly. And we're at resistance right now, Rob. Overhead resistance. BOFA raises price target. Bank of America. Rob, won't you listen to this? Where did that say that? Why ain't it coming on? I'm trying.
Report are two important. Really large. Spend 3 to 4 times what they are spending this year. And number two, to be successful in this market, you really need very leading edge IP across computing, across.
So is Broadcom the new NVIDIA? He's the senior semi-analyst at BofA Securities and was named Extel, formerly Institutional Investor Research's #1 chips analyst this year. Vivek, it's great to see you again. I'm ready to jump
They
on
got
the
250
Broadcom
target.
bandwagon. Would you give me any pause in doing so?
No, I think what we learned from Broadcom's earnings report are two important things. First, that the market is still in early stages, that there are a number of really large customers who can spend 3 to 4 times what they are spending this year. And number two, to be successful in this market, you really need very leading edge IP across computing, across networking, across optics, across silicon. You need scale in the supply chain. And in our view, there are really only 3 companies who can do that. It's NVIDIA, it's Broadcom, and it's Marvell. And
Marvell.
the way these clusters are
MRVL.
built out is you have these large hyperscalers who have a lot of internal workloads, and they are building for that. But then they also have a lot of external workloads. And then beyond these hyperscalers, you have enterprises, you have several nation states. So NVIDIA is going after a lot of the external
We got a 1, 2, 3
workloads,
triple
public
top on
workloads, the
SPX.
enterprise workloads, a sovereign opportunity. But when it comes to a lot of internal workloads and the custom opportunities, Broadcom and Marvell are absolutely.
I can't understand what you're saying.
So I think very, very important report, and the company is executing extremely well.
Vivek, there was a lot of talk in the last couple of weeks about whether kind of pre-training for large language models.
I'm done with you. About ready to hit the overhead resistance on the SPX on the Mega. $9.50 from $6.50. Megaphone pattern on the SPX. Yep. $5, I think it hit. Close to it. Well, I was hit the 645s. Or you got another 5, 6 grand in there to play with now. Mm-hmm. Yep. I'd have had 6,000 on that trade if I'd held it all the way up. It's 520 now, yeah. Mm-hmm. Mm-hmm. Oh man, you're going to leave us? Yeah. No, I haven't added toll yet. Not yet. I'm debating on if I want to or not. Just take the loss. He's got downgrades. It had upgrades yesterday. Now it's got downgrades. So I don't know. I'm not happy. I'll get in it, but I'm not going to add. Not yet. I really thought I had a good trade here, but this thing just sold off hard. I did think it was overbought at one time. It ran up during high interest rates. I don't understand it. I just don't get it. But right now we pulled back to the 50 SMA. So 130 maybe. The 50 SMA. If not, I mean, I'm looking down here at the 200 and I'm going, no. Yeah. How? CAPS. Throw my caps. Capitals. Yeah, that's a big jump, ain't it? $10. Is that that new? Is that new IPO? Yep. It's new. 3 months old. Corporate announces CEO change. Yeah. Okay, here's our knife. Oh, never mind. God, I was... Or double topped on SPX. So if we break here, we got some new highs. If not, we're going to pull back. We do have a double top. $60, $53, $32. Double top.
I know you're also focusing on the national debt housing. I mean, we're still seeing housing and affordability being an issue. What the Fed may or may not do. In fact, you think that the Fed may have cut too early. We were talking about the expectations of a Fed cut next week and 3 next year. Is that too much? Is that the right amount?
They're going to be higher for longer, as they've continually promised here, at least in the early innings of this. With an economy looking as strong as it is, and everything at all-time highs, like you just named, stock market's at all-time high, gold's at all-time high, Bitcoin's at all-time high, real estate's at all-time high, debt's at all-time high. Inflation, that means that it costs more to buy those things. Inflation's still present with us. I think that we're going to see a lot of inflation here going forward into 2025. There's a lot of ways that is not really going to be curbed. And so, yes, I think that the Federal Reserve ultimately, created the Arthur Burns mistake, which was cutting too early ahead of an election. That was the Nixon election. And it took a Paul Volcker to come in and having to raise that Fed funds rate up to 20%. In order to actually stomp out inflation. If you think about inflation like the embers in the campfire, they can calm down for a little while and not look like there's really anything there. It can even feel cool to the touch, over the top of it. But you get a decent wind in there and something that could, light it up like, I don't know, a whole bunch of spending or maybe a whole bunch of markets going out of control and continue to go up and up and up, which works great if you have assets, but not if you don't have assets. And so ultimately, I think that we're going to see inflation kick back up here in 2025. And then you just hope that you've got enough of a stomach in Jerome Powell to keep it higher. And then also that we've got the right policies here to do the thing that's most important, and that is to do the cutbacks. You can't raise rates and then crank out spending like we've been doing in Congress and expect that we're going to see lower inflation.
Exactly.
It does not work like that.
Why are you talking about it? I've heard that twice today now. I'm so fed up with these people. None of them. CNBC wouldn't ever mention it. I mentioned it for 3 years. You've got to stop the spending. Why are these people want to spend so much money? Billions and billions and billions and billions go to places out of our country. I'm hearing more like 20 or 30 billion now being flown in crates to Iran. Just like what Obama did. Billions. If they just stopped spending, we would not have had inflation, and this economy would have just kept running right along. But no. They wanted to throw $1 trillion, $2 trillion in green energy projects. $6 trillion. It's just nuts. And they ain't going to do nothing except make their buddies rich. This last administration has spent. We had $8 trillion over budget, plus $6 trillion printed money, $14 trillion that didn't need to be spent in 4 years, and that's more than what Obama spent in 8 years. Then we had COVID, and that's the second time I've heard that today. Now that we got a president that's going to cut the budget, that's the second time I've heard that today, and I haven't heard it from anybody in years.
Support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network.
Oh, don't get me riled up.
Available anytime, anywhere, on any
back to the watch list.
Nancy Pelosi made $200 million in 4 years. Nancy Pelosi, that's only one. Buffett probably doubled or tripled his income. In 4 years. And he tripled it during the Obama years too. And that took 8 years. They go to printing that money, it's from they'll tell you it's not trickled down, but it is. They write the checks. It's trickled down. No matter how you look at it. Trickle up is when you let the private sector do the business. But when the government prints the money like that, it's trickled down economics. They'll tell you different. We're building it from the bottom up and the middle out. $200 million in 4 years trading stocks. Tell you what, that IWM only moved 80 cents. The SPX only moved a couple of bucks. I mean, SPY. The SPX moved $15, $16. 17, probably, 53? Yeah, 18 bucks. $0.80. $2, $1.50, $2. Here's a nice chart on the QQQ. Snake into a wedge or a symmetrical flag. Boom. AVO. Calm down, Jim. Okay, we're about 4 minutes to power hour. I had my apple. I'm gonna go make me some tea.
Options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With
Next week, Wednesday, full Mac at 2.
Withdrawals worldwide.
Thank you,
No
Parge.
overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more.
That's right, Mannequin.
With Schwab
Hello,
Bank
sir.
Investor
First time here. Watched your videos last
for
week
investors.
about earnings. Thank you. Thank you, Cobra.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with the versatile.
Okay, we pulled back to support. Remember when I drew this here pattern in right here? And we hit that line right there? This is a bull flag. We hit the double top, and it's really a triple top. And it pulled back. I'll be doing another video this weekend on stocks to watch. We got FOMAC next week at 2 p.m. Eastern on Wednesday. They're saying it's going to be a more of a difficult time to say rate cut, but we'll probably get it. They're questioning why we need any right now. I think we're due for a good pullback, and that might... I heard something today. Oh yeah, like I've said before, this last administration has just really spent a lot of money on in Iran, Israel. We're sending money to Gaza. We're sending money to Ukraine. I wouldn't be surprised if we sent money to Russia when they started this war. We built mosques, billions of dollars in mosques in other countries. We spent a ton of money in NATO. And We got a lot of money. We spent a lot of money. So, what was that my point? So that's going to bring inflation down when we get Trump in. He's going to drill, baby, drill. He's going to stop. We spent a ton of, hundreds of billions of dollars on illegal immigrants. We'd flown them here, thousands of them, tens of thousands. We've flown here from other countries, illegals. We've housed them in 4 or 5 star rooms for years. We spent a ton of money that didn't need to be spent. So the market is going to be sad that it's not going to get all that money that's been given away, especially in these war efforts. The goal is to stop the wars, unless Biden does something stupid again, pisses off Putin. But you seen what happened in Syria? The same shit in Syria could happen what happened in Iraq that built ISIS. Trump had to come in and put a stop to it. Within 5 to 6 weeks, ISIS was no longer a threat. Now that Syria is broken apart and they got a civil war, we could see a big old hotbed of radicals. Yeah, I'm trying to give my philosophy about next year. So the spending will stop, the inflation will stop. And I think that's what my point was trying to get across. Go ahead. He's back. But the market ain't going to be happy because all that money, all them billions and trillions of dollars that we've spent is going to have to come from the private sector. Yep. If we break the VWAP on the SPY, we will. And we'll have a triple, we'll have a 1 minute? No. We're above the we're above the 63 and we're under the 60478, but 60462 is the VWAP. 60462. We break that, then the SPX will break too. And we came down and hit the bottom of that that trend line that I was talking about on the SPX. AVGO. I think I called resistance on that one. Yeah, he got his 225. Rob's been on fire. It didn't break it. Chick was talking. One girl was talking this morning about, or yesterday, about the close of the day, how the market's been dropping, but that wasn't today's case. We're going to the moon. I remember old snooty Sarah on CNBC last year bashing Tesla at 150.
And I think that speaks to, skill set. But talk about Alphabet this week and Willow and some of the...
I'm not trading out. Who would buy Tesla, she says. I said, I am. I'm more animal spirit with Tesla now than I've ever been. Ever. All the time that I've traded it. Since 2015. Or what? 2010. If I remember, I can't remember when it came out. I keep thinking it was... I'm more bullish on Tesla than I've ever been. Just because he's Trump. I don't know why Biden just didn't grab him by the shoulder. And it was because of the unions, for one. He had people telling him, you know, Elon was a big liberal. He was. He probably still is, but he just probably not no more. Trump was a liberal. I was a big liberal. The SPX didn't have that big of a move today, but sure did me well. We're back at the 9 now on the 1 hour. We had a double bottom. Said double bottom here. Triple bottom. 1, 2 bits, and a 3. So what have I said about triple bottoms being a bullish reversal pattern? One bit, 2 bits, and a freebie. And this is descending. Oh, that ain't Tesla, that's SPX. I think that's what I said. Yeah, it's time for me to quit. It's 216. I want to look at Tesla. CrowdStrike 268.29. Yay. Yeah, I saw the child rapist he let go. Yeah, the Chinese spy was a pornography, and he was a child. He raped a child, a kid, a baby, a kid. Oh, shit. Damn. What's wrong with this man? Ever. I can't wait until he does Hillary. He ain't done with the big ones yet. Got Hillary and Adam Schiff. Yep. I hate to say it, but all my friends are Democrats. My real friend, my close friends. I don't have hardly anybody that I know. I used to be one, but I can't sit here and watch human trafficking and bringing fentanyl up through the border and killing little kids and raping our women and killing our women. I mean, but it's going to be. No. No. Yep. I know what you mean. Yep. Mine too. He probably only got a little bit time left before he'll be in heaven or hell, one or the other. You have it right. You have it right. Nothing we can do about it. Well, we got, yeah. Get him out of here. Yep. What was I doing? Oh, yeah. No. She's getting up there too. Nancy was hospitalized Friday after being injured while traveling aboard on a bipartisan congressional delegation to Luxembourg. Yep. Yep. She got drunk and fell down. That's more money that probably didn't need to spend. How many of them are there? Oh man, there's a bunch of them that went. 1, 6, 7, 8, 6, 14, 20, 25, 30, 35, 36 of them went. So that had to cost at least, what, $20 million to get them over there and back? I doubt if they took all the same plane. Yep. Yep. 36 of them. Yep. So we got 36 minutes left. Oh, I know what I want. The 90-day 1 hour. Yeah. Not yet. I'm about burned out. It's all about what Magnificent was saying, psychology. Give me a second. Big C is the best. SPY. It hit the 200. Yep. I don't think we're going to have much. We already had the big breakout. I think it's steady as we go. As long as we stay above the 200, we'll just. Tesla just had a knife. I'm going to watch it Monday morning. This is one to buy the dip. Buy the dip. I've said it. I've done it in my videos. Today would have been a great trade on Tesla. I need to really get, that's got to be the first one I go to every day here. And AVGO and NVIDIA. I'm going to do a video on my favorite stocks for buying the dip this weekend. It'll be about 5 or 6, so be sure to watch it. I had a guy message me on YouTube, said he watched my earnings video and he really appreciated it. So he probably took a couple trades off of it. Or at least he's learning. Tesla flagging, we just had a knife. Yay. SPX. See how it bounced off the 200? I love the 200. If you don't have the 200 on your chart on the 1 minute, you're a fool. Whew. I'm trying to reread this thing I got from X. I don't know if I got suspended or not suspended, but I'm going to read it out loud here. Well, I made a comment to CNBC asking when they were going to put a training on there. They've been promoting it bad, you know. Come on. You going to do it? Yeah. Okay. Hi, Washboardjim retail traders. Your post was detected in our systems and has its visibility limited for violating. It has. Okay, let me read this again. Your post was detected by our system and has had its visibility limited for violating the X rule. Specifically, we have determined your post violated our rules against hateful conduct. You may not promote violence against, threaten, or harass other people on the basis of race, ethnicity, national origin, sexual orientation, gender identity, religious affiliations, age, disability, and serious disease. So I wrote squawk called discrimination. It is, I find it hard to listen to you every day. The appeals court scraps the NASDAQ boardroom diversity rules in latest DEI setback. Why don't you have a tranny spokesperson? Is what I wrote. Because they get on there. They got on there for 3 years almost every day telling us how we had to get along with diversity, and they had made rules to the CEOs of these big corporations, and they had to give them the excuse why they didn't have a diversified staff or boardroom. And if you didn't have, you know, a woman in there or someone of color or a transsexual, or then they wanted to know why you have not had that in there. And I've always been a person of character. Now, I was raised. I walked with Martin Luther King when I was a little kid, so I had that in my. I was raised up that way, that you don't look at people by the color of their skin or if they're a woman. It doesn't matter to you or me. So I thought it was kind of prejudiced when you go picking people that aren't qualified for the job. You got to hire them on the color of one's skin or their gender. So as a result, your post may stay on the platform, but we have limited its reach. So I guess they just messed with that one thing. I thought they limited my reach. I don't think they made a mistake. They could take it down. They took it down. So I got to watch what I say. That's the same thing happened when I was on StockTwits. I asked Bob Iger when you're going to make a tranny movie and they suspended my account. I thought that was a legit question, you know. Yeah. I got it back in about a year. Yeah, I see that. You got to put, didn't you? Yeah. Well, it bounced off that 200, then it bounced off the 21. I'm going to do a video this weekend on moving average. I'm going to do a video on people that are having a hard time trading. Yeah. And give them a simple path. Make it real short and sweet. Like this 200, you know. If I was in the mood, I'd have took that trade. I'm up. Real good. The SPX, I got stuck in that knife. Yep. I bought it. I got in it right before the double bottom of yesterday's close, and it just kept going down, 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 and then it started to go up, and then down, 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 down. So I had to add, and I still took a loss. But I was sure that double bottom would hold, but it didn't. And then I come within 30 cents of catching this bottom here. Well, I was closer than that. Jeez. Oh yeah, I had an alert set for 460, 45, 81. And that was above the 200. Yeah, and then I took my eyes off of it. And then we broke a new high there. Oh wow. I'm so tired. I got up at 11:30 last night. Just got up and couldn't go back to sleep. I went to bed at 5. I work nights, so I can do it. I'm wore out by the time I get done here. I don't want to talk stocks. I just want to cook and watch my videos, and I've had all the freedom I've wanted in the last 20 years by doing this job. I'm going to give it up here soon. I don't need it. It's too much headaches anymore. But Trump, he'll make things a little easier for me, but yep. Better fall asleep. I'm gonna get on the treadmill when I'm lift a few weights when I'm done here. Nancy. Who got that in there? Shitty. Nancy. I gotta save that Nancy picture. I'm getting away with a lot of shit on Facebook too now, where they would have probably banded me put me in jail a couple of years on the stuff I'm saying in there now to all my liberals. I don't care. I told them I was going to rant.
He made that airplane so cheap for me, I couldn't help but buy it. He made that airplane so cheap for me, I couldn't help but buy it.
Yep. Yep. I got 2 shots. I regret it. I got 2 of them. I was so kind of. I had my job. People. Yeah. I didn't want to take it. It took me months to finally go in there and do it, and then I regretted it. Yeah, they were more apt to get it. High risk, yeah. And I was too, because I worked around a bunch of germs. And I've had to clean places that had COVID. $140 an hour, I told them. Spray. They sprayed the. Yeah. Yep. I did so. You just go in there and spray the place down and walk away and you're done. And then I had to go in there and wipe it all down later. I charged $140. Yep. Put a little backpack, a little spray backpack and battery operated machine and psst. Yep. I had a job. Go ahead. I had a job that I cleaned, and they closed the building down because of COVID, and I didn't have the job anymore. And they said, "How about if you cut the grass?" And I said, "Yeah." So I bought a lawnmower and give it to my best friend. I said, "You cut the grass, you can have the lawnmower, and I'll give you $50 each time." And I pocketed $1,200 a month off that, doing nothing. Well, more than that, probably about $1,400 a month. Yep, got him a weed eater and a lawnmower, brand new one. Yep, I did it. Did it for about. Yep. I charged $5 back in 1967 and 68 and 69 for a yard. $5 to $10. And I do 3 of them. I have $25 to $30 in my pocket on the weekend. You see that bounce? You see that bounce off the 63? Yep. Inverted hammer. You got an inverted hammer with a tweezer bottom off the 63. There's three reasons to take that trade right there. And then the tweezer bottom, which the two bodies lie together off the 63 EMA. So that was the third support, the 9, the 21, and then the 63 EMAs. Oh yeah. Oh, what's this guy got to say? White House says the drones seen over New Jersey are lawfully operated manned aircraft. Bullcrap. There's no way those things move like that. Yeah. Yep. 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 It's our government, right? Yeah. Draft King down. That's JP Morgan. Mike's back. I bet you looks. Whoa. Hang on to your profits. The video almost had 200 million in volume today. Yep. Tesla had 77 million, and we broke new highs, so this is Elon's getting rich. We had a breakout on PLTR today. New high at the end of the day. Scalped AMD first thing this morning. SMCI. And Uber, they're upgraded Uber next year. We had another pullback on it today. Mara dropped down to 268. Mara has a new, Uber has a new low. Mister. WBA had a nice bounce today. Walgreens, they were looking at a buyout or something. Get ready for a dead cat bounce. Yep. WBA looks pretty tough. Well, that ain't gonna be. Oh, yeah. Oh, this looks very nice. WBA. This could be a dead cat bounce. It was at 55 bucks. Now it's at 10. I'm going to be watching WBA for next year. Oh God, I can't wait for this day to get over.
some of the policies that have been proposed raise the risk of higher inflation and slower growth. So I think it's just been a gradual recognition that there's a need for more term premium in the bond market to compensate for all these uncertainties.
When you look at the driving force behind it, it looks like we bottomed out in the yield last Friday.
436 on Tesla, boom.
So how does that factor into the analysis?
Yeah, the employment numbers are pretty
Said
decent.
435, and we nailed that.
I don't think that was a big market. It was sort of a relief, like, okay, it wasn't anything other than what we pretty much expected, therefore the market had a chance to rally. And then this week, I suppose what we're looking at is more focus on the Fed, more focus on going forward. And although we think we'll get a pretty good PCE number next week, it's really a situation now where the Fed doesn't have as much scope to cut rates after next week's meeting. And there's just a lot of things up in the air right now in terms of where policy goes and what to expect coming from that.
It's interesting because the short-term markets, Fed funds, futures, saying it's a done deal, euro dollar saying it's a done deal. But last time those markets also were favoring 25. Not last time, but the first time. They were favoring 25 and Powell at 50. So we know that he's like not a robot tied to these things. Does the action on the long end of the curve suggest that maybe that number is not a true 97%?
Well, there's always a possibility that the Fed moves into pause mode sooner rather than later. I think the consensus is that they'll do one more cut and then go on pause and reassess. And it may be that there's enough members of the Fed who say, you know what, we could pause right now and just wait until January or later next year and see what happens. The main argument against that, we were in that camp of, why don't they just pause now? Main argument against it is we just didn't get any signaling from the Fed, and they don't like to disappoint too much that way. So we got no signaling from the Fed that, hey, this meeting is a potential pause. It could still happen, but it doesn't seem as likely.
Okay. Then to the conversation on the term premium, Kathy, what is the strongest evidence for that being the main force? Is it the just range of possible outcomes? The auctions went pretty well. It seemed like the demand this week was pretty strong.
Yeah, there is demand at the long end, so it's not that. I think the term premium, though, is still pretty low relative to history, and you have a lot of these uncertainties going forward that have to be digested and have to be discounted in the market. And I just don't think there's enough term premium right now for that to happen. It was one thing when we thought we were on a glide path lower. Now if we're only bumping down maybe a little bit, ending at 4% in the Fed funds rate, well, that's a whole different picture than what we had back in September or October. So given that outlook shifting, I think this is where the term premium comes in and starts to say, hey, what do tariffs mean? What do tax cuts mean? What does immigration reform mean? What does this all mean for inflation and growth? And that's,
All righty. It boomed. I want to thank everybody. Thanks, Alex, for getting on here with me today. Mike, you're a big help today and magnificent. I did not get enough good grades out of you. Thanzall, well, it's supposed to be thanks. Thanks. My YouTube? I'll get it, put it in the room here. Yay! Not a bad day. Not a bad day. Yep. James Howard and Retail Traders. I'm the only one guy out there that uses that term, retail traders. I'm surprised. I also created I Love Stocks. Come up with that word. And I had Watchstock Watch, Watchstock Talk. And we had the Wise Guys. We had the Penny Play. So, yabba dabba doo. Like I said, I appreciate everybody in here. Thank you, Jimmy Joe. A for a weekly grade, good, because I don't think I deserve an A+. Yesterday was probably my worst day, and then getting out of it and then waiting a half hour and making it all back up in 5 minutes. That was kind of a trip. But that's part about not giving up. Paper trade, if you don't have the money, sit there and paper trade for a few months. Build a strategy. I paper trade still today. I mean, I don't trade everything. Because, I just... Usually when I paper trade, it's a risky trade. That I'm learning something new or something. It's like we just had a big fat finger here on Tesla where it dropped 426. That's funny looking. So be sure to subscribe and ring that bell, YouTubers. And I appreciate the new people that got on here today and yesterday. That includes Bonzo, House Trades, Undercover. Were you undercover again? Rob, you're really starting to kick it. I want you to be sure you post them trades in the room. You're very good at updating and very impressed. So I'm going to get out of here. Alex, thanks a lot. I'm going to go lift some weights and get some air in my lungs. Yep. Don't forget to ask your girl if she's a gold digger. Bye-bye.